All right. Hello, everybody. Welcome back to another episode of the Market Close. We are here today, and we have got a busy day in regards to what we're doing for this market close. This close is likely going to be one of the longest closes we ever have. We are going all the way up until probably 9 o'clock because we've got Grab earnings. They're in Singapore. They're going to be starting at around 7:30. So we're going to get through all the earnings we have: Snapchat, Visa, Fico, Starbucks, and a couple other companies. And then we have Technical Tuesday. We haven't had that in a couple weeks because of me traveling and because of the Tesla earnings. So we are going to have that until 7, and then we'll get into Grab earnings. So we got a lot of stuff going on, and it looks like we have got our 6th green day for the S&P 500 right now, which is very nice to see. And it's actually something I think a lot of people didn't expect, given the fact that we had a bunch of headlines this morning, in particular with Howard Lutnick, who actually said some stuff that the market seemed to like. And as a result of the market liking that, we are headed into at least what seems to be a 6th day to end up closing green. For you guys, I don't know if it looks like this for you, but for me, the camera is kind of switched the opposite direction. So, like for me, the does it look like that for you guys? It looks weird, right? Okay, why am I sweating? So first of all, I have the new computer. I got the new MacBook. So I don't know what's going on with the camera. I have to adjust the camera settings, but like this should be on this side and this should be on this side. If it's fine for you guys, okay, it looks weird for me. So at least it's good for you guys. Second of all, it's 80 degrees in New Jersey, and I've been running around doing errands, cleaning stuff. I had to send some stuff at the UPS, so that's why I'm sweating right now. But yeah, I was like literally, that's why I was late by 1 minute. I had to do a bunch of stuff, but we're here. I don't think there should be any more lag on the stream because we got the brand new computer, and that should be good to go. So we should be doing whatever we need to do from that perspective to get everything done. Okay, cool. Here we go. So let's get started. I'm just opening Webull here right now, making sure I have the ability to open it. Let me know if you guys see it. Do you guys see this right now? One sec. Okay, no, it's not going to show right here. So let me just open it up on this computer real quick, and then we'll keep going from there. Let's start off with what Howard Lutnick said. I think we'll get into that first, and then we'll look at some of these stocks. So what did Lutnick say? Well, Lutnick was really saying some stuff that you either believe or don't believe, but nonetheless, he said it, and the market so far likes it. So 5 things that Lutnick said. Number 1, markets are getting tariff impact wrong. So we probably knew that Lutnick was going to say that, but he thinks the markets don't understand the impact of the tariffs. Number 2, he said, and I think this is what the markets are pumping on, 1 trade deal is pending approval. We are waiting on the other country to announce it, meaning they have 1 deal done, but they haven't announced it yet. Number 3, a 10% tariff is virtually not going to change prices. We'll talk more about what happened with Amazon today as well, because that was a whole different debacle today with Trump and Bezos. 4th, he said the president is not worried about the markets. He is trying to have a global reset. The president is definitely worried about the global bond market. So he might not be worried about the stock market, but if the bond market starts acting up, he will be worried about it, which is why I think we pivoted already a couple times on tariffs. And then finally, he says Tim Cook wants to build iPhones in the US, but he needs more robots, which I thought was a little funny. He kind of took some jabs at people that were saying he actually wants kids to be making iPhones in America. He's rather talking about the automation of all that stuff. Nonetheless, most people thought Lutnick would not be the best for the markets in terms of what he would say, but he actually ended up not being that bad. I mean, you're going to see the S&P 500 in a second right here going green right now for the day. We got about 9 minutes left until we go green, which is going to be nice to see. And it looks like markets are essentially saying, you know what, we are going to give these guys the benefit of the doubt. And the reason we're going to give the benefit of the doubt is because we think that there is a chance, maybe not a strong chance, but a chance that they get a lot more deals closed sooner than later. And as a result, that's why the market is being rather excited. So let me pull this up right here. We do have Snapchat earnings. Again, I have a swing trade on Snapchat, so that one I am particularly looking at. Entered in at 870. Snapchat's up another 5% today. It was up 5% yesterday, so we're already up 10% on that trade. Now it's just going to be a question of if we can continue to maintain that momentum. And then we've got Starbucks, Visa, Fico, all those other companies that are going to be really important to take a look at. All right, so let me pull this up right here. Okay, hold on 1 second. No, not that. Why is Webull being stupid, bro? Mute. Okay, let me try it back on this computer. Sorry, guys. Just brought a brand new computer, so that's why it's doing this right here. Open system settings. Google Chrome. Putting this in right here. Oh, I think, is this going to solve it? Is this going to solve it? Yes, I think this is going to solve it right here. Okay, let me see. Let me see. Why is it being so weird? Okay, that's not solving it. All right, you know what? I'm going to do this, and then we're just going to get back to it. Long Google. Yes, long Google. Grab earnings in 4 hours. Correct. Grab earnings in about 4 hours, and then we will take a look at what they have to say, which is going to be at around 7:30 today. The call's at 8 o'clock, so I think at 7:30, that's when we're going to get the actual results on Grab. This is what Lutnick had to say. Let me just figure out this Weeble thing, and then we will keep going from there and see what else we've got going on.
The biggest story on CBC.com right now. In fact, the last time I looked was 2 of the 3 top stories was about Amazon. You probably saw what happened. Amazon, there was some talk, and I don't want to say what Amazon said they were going to do because they've denied things, and we don't know exactly what occurred, that maybe parts of Amazon would reflect the pricing increase to certain customers that would say this is the tariff thing. And Amazon said, no, we're not going to do it, or we never were going to do it. Caroline Levitt at the White House pushed back on it. I'll call it Amazon Gate. Forget about Amazon. If a company were to say we're raising prices because of the tariff, is that a hostile act?
I think if you go out of your way to try to make it seem like your price has changed when it's nonsense, okay? A 10% tariff.
Why is that nonsense?
Because a 10% tariff is not going to change virtually any price. The only price it would change would be a product that we don't make here, like a mango. You know, if we don't have mangoes here and we charge 10%.
Hopefully nobody's making mangoes.
Right,
yes, you're
correct. Or cocoa, right? We don't grow cocoa in America. So, but what you're going to see is you're going to see us relentlessly do trade deals everywhere in the world. And when we do a trade deal with that country, we're going to say cocoa does not have a tariff, right? Because this is the smart way that Donald Trump is doing it. He understands if you make a deal with a country and you give them the parts that they want and they need, they're going to open their market. Let us sell soybeans there. Let us sell, people won't let us sell chicken. They won't let us sell beef. It's all nonsense. So we open their markets. Think about this. We have a $1.2 trillion trade deficit. That means we're buying extra stuff from other people in the world. If we cut that 25%, that's 1% of GDP growth in America. $300 billion grows America 1% for the rest of our lives. This is how you get employment. This is how you get better jobs. Donald Trump understands it. He's on it and he's driving it. And no one's ever done it before. And I tell you, the power of this, you're going to see each country is going to say we're selling an extra 10 billion, 20 billion, 30 billion. It's going to be amazing.
When do we get the deals? Right before we went live, there was a segment on about India, and your colleague, Treasury, Scott Bessent, was saying we're close to a deal. The Japanese came into D.C., kind of left empty-handed. When do we get that big headline, Mr. Secretary, where there is a firm deal? Because you're a markets guy. I don't need to tell you this. If we get a headline that we've signed some deal with China and whatever, the markets are going to rip.
So,
or actually, I should say that. Would you say that?
Well, Treasury Secretary Bessent is focused on China. That's his portfolio. He's got to get something done with China. And my portfolio is the rest of the world's trade deals. So they are
coming. A big portfolio.
Oh, it's the greatest thing because we have every country in the world, just like Donald Trump has said, who wants to do a deal with us. Now, here's the point. I have a deal. Done. But I need to wait for their prime minister and their parliament to give its approval, which I expect shortly. I'm not going to tell you what country. Let the president.
So I think that's what got the market excited today, along with some of the other comments that we got from Bessent. Now, the macro data was crappy today. Consumer confidence was bad. JOLTS was bad. Technically, that's good because bad news is good for inflation. But when he had said, hey, the best thing I can tell you, and we got Weeble working right here, the best thing I can tell you is that we have a deal that we are ready to present. We're just waiting on pending approval from the other country, whatever country it is. If he's not lying about that, then we've got one deal in the pipeline, which is going to be very good. Let's take a look at some equities. We got 4 minutes into the close. SOFI, I don't know what to say about this stock, 1328. 0.64%. The market doesn't understand the narrative, or better yet, maybe SOFI doesn't have a narrative willing for the market to take a chance on. So SOFI right here, amazing quarter. Unfortunately, on one of the really good green days we've had in the past month, and we've had some pretty good days last week, SOFI continues to be green, but basically flat after those earnings. NVIDIA up about 0.35%. Look at the S&P 500, 554. This is going to be the 6th green day in a row, which is incredible. Up about 0.5% on the day, a little bit more than 0.5%. Tesla, 292, up 2%. Robinhood, 49.37. Meta, 555. Meta just came out with Meta AI. It's a brand new AI app. I played with it a little bit. It kind of sucks, I'm not going to lie, compared to compared to ChatGPT, but they have 1 billion people using AI. So as a result, I guess Meta AI is going to start competing with Grok and ChatGPT. We got Google right here, that's flat on the day. Apple right here at 211. Reddit at 122. Palantir 116. Pretty incredible day for Palantir. Once we were trying to break 116 in the morning, we went from 114 to 115, and then about an hour ago broke 116. And then you got Snapchat right here up 3.4%. So the point is, in terms of why we're seeing this type of grain, I think realistically it's just based on the fact that the market once again is saying we think this tariff volatility and these trade deals are going to end eventually. And we don't want to be long gold. We think gold's toppy. Treasury yields are coming down, so we're seeing the market start to stabilize in terms of the credit markets. We got the 10-year down to 4.185 today. We haven't seen that in over a month, which is really nice to see. And now it's just going to be a question of if we can continue that momentum going into May, which will be the second month of Q2. So earnings that we have today, I'm going to make an earnings watch list right here. We got Snap, we got Visa, we got Fico, we got Starbucks. Let me know if any of you guys own any of these names as well. And then what else earnings do we have? I believe we have Mondelez. That's going to be a big one. This is also a consumer company. And then First Solar. That's going to be important. And then we also have Booking Holdings. That stock, you would think they would do a stock split at $4,900, but they have not done a split in a while. Why is Tesla pumping the last 10 minutes? Honestly, I don't know. I think any of the pumps that we're seeing right now are not really driven by headlines. They're driven by this general sentiment around the market that we're going to get a trade deal. And Lutnick, for all the crap we give him, he ended up saying some stuff that the market liked. And as a result, him and Basent together were able to give us some momentum. We got about how much? About a minute left until the close. One other thing that Basent said is, or Lutnick said, is that Basent is responsible for China and Lutnick is responsible for every other country in the world. So this is why these two are so important and we keep listening to them. They single-handedly are the two people that are responsible for getting these trade deals across the finish line. And the question is just, are they the right people to do it? I don't know. We're going to find out over the coming weeks and months. But as of now, they are the ones that have everyone's attention to see if they can get these trade deals. Also, auto tariffs have come down, and Trump is signing an executive order later today to give even further relief on tariffs, not just auto tariffs. The Financial Times reported that about 30 minutes ago. He has a Michigan rally. We're probably going to be able to watch some of that rally as well today at around 6:30. And so we'll be waiting to see everything that goes on in the context of Trump, tariff relief, and then how the market ultimately reacts to that. All right, here we go. 4 p.m. Big day for earnings. Thank you, everybody, for being here. Tuesday, April 29th. The stock market is now closed. S&P 500 ends the day up 0.63%. It is the 6th green day in a row, which is not bad. Not bad at all. And now we are looking for earnings. Again, let me know what stocks you guys own in this list. I think we're going to get most of these pretty soon. Snapchat, we are green after hours. I think Snapchat around 11. I wouldn't mind selling, but I want to give it a little bit of time to see how good the results are if we do get good results. Up about 1% after hours. Now it's flat. Now it's up 1%. Let's see what happens there. Mondelez, nothing. Oh, Snapchat, or that goes back and forth. Visa, we don't have any earnings from yet either. Starbucks, nothing. Booking, nothing. Mondelez, nothing. First Solar, nothing either. First Solar, yeah, that's up a little bit after hours. Snapchat's just up 1%. Nothing too crazy. Starbucks is also flat. It might take a couple minutes to get some of these earnings. Let me pull up another website right here to get these results. But we should be seeing them pretty soon as we get into earnings. Grab is going to be at 7 p.m., guys. Remember, Grab is not right now. Grab is in Singapore. They're going to be at 7 p.m. They're sleeping right now. We're hoping the executives are going to wake up and give us some good news, but they are sleeping right now. So that is going to be much later throughout the day, not right now. Last time we thought it would be at like 4:30 and everyone was waiting and like, yeah, we didn't get the results for a while. So it might take a little bit of time before we see that one. Nothing really moving after hours. I don't see anything moving crazy after hours. Do you guys see anything? No, nothing. That right here. Snap still basically flat after hours, up a little bit right here. Oh, First Solar is down. First Solar is down. There she goes. There she goes on First Solar. There's your red candle. Wow, look at that. That is a bit red. 131 after hours, down 4.5%. Not too much of a surprise given end phase was not the best, but I guess we're going to have to see what happens in the context of solar. HIMS also ended good. I mean, I sold it in the morning, so I got out a little bit early on the pump, but HIMS still a 23% day. So I think if you're long HIMS, like you can't be upset about this day, up 23% on a Nova partnership. Not too bad at all. Tesla right here at 292 on the day. Snapchat up a little bit after hours. Starbucks up a little bit. First Solar nasty 7% down. Booking Holdings down 4% as well. So you got Booking Holdings down, and you got First Solar also currently down as well right now. Amid sold HIMS to buy a MacBook. Now, I do have a funny story though. When I was at the Apple Store, I'll tell you guys in a second. But it was a funny experience. All right, Snapchat's up 1%. I'm waiting on the results. Let's see if we can get any of these numbers. Oh, I think we got one right now. Let's see. I don't know which one this is. Let's see what we got.
Earnings report to bring you. Caesars results are out, and Contessa Brewer has those numbers for us. Hi, Contessa.
Morgan, Caesars first quarter revenues in line with expectations at $2.8 billion for the quarter, though its loss per share was greater than consensus, a loss of 54 cents versus 19 cents. The key earnings metric here is EBITDA, and the company reports that it grew 4% over last year, and that's notable because of that tough comp with Super Bowl in Las Vegas last year. Caesars met EBITDA expectations in Las Vegas and beat them in its regional casinos, which, remember, there was some bad weather in New Orleans. There was a terror attack in January, but of course, they also had the Super Bowl in February. But regionals outperformed the Strip. That's a big deal. The big story here also, the growth of digital. It made significant gains. Analysts will want more details about that on the call. And of course, the outlook for the current quarter.
Okay, Caesars is up about 2%. I forgot about those guys. They are a casino and hotel, if I'm not wrong. They're basically flat after hours. They are basically flat right now currently. Or actually, no, they're up 1.82%. Up 1.82%. So nothing crazy there, but up 1.28%. I guess at 405, we get more results because not a lot of these names are moving. First Solar, nasty 12%, dude. My goodness. This is pretty ugly right here. I mean, yeah, Enphase sucked. First Solar is going to suck. It kind of, you can put two and two together. I know they do more commercial versus residential, but solar demand, especially with gas prices going down as much as they are, you might not have the incentive of people saying that we need to switch to solar if you just if you're just not getting burdened by the cost of oil currently right now. Yes, the market has been green for the past 6 consecutive days. So we are on a 6-day winning streak right now for green in the markets. First Solar right here down about 11%. Bookings as well down about 4.3%. Snapchat's up 1.43, but we don't have their numbers. Let me see if their numbers are out. No, not yet. Usually Snapchat goes up like, I don't know, 15%. I don't know the implied move on this one, but 15% up or down tends to be the move for Snap. So I don't think the street has the numbers yet, but we are seeing a little bit of momentum right here after hours. Right now, 922 on Snap. First Solar down 11%. Caesars up 2.5. Sherwin-Williams, we also have their earnings. And then Fico's up a little bit right here. Starbucks is down 2. All right, here we go. Starbucks, this is a big one. Starbucks down 3. Let me get the numbers on Starbucks. That one is down. They were at 100 for a while. Then they took a little bit of a dip. Down about 1.8%. Nothing too crazy right here. I don't have their numbers yet. Starbucks. Oh, we got it. Wow, these are bad numbers. These are not good numbers for Starbucks. Missed on EPS by 32%. Or sorry, 29%. 34 cents versus 48 cents on EPS. 876 versus 8.8 on revenue. So revenue missed by 1%. That's inconsequential. But that EPS miss, that is ugly. EPS is down 50% year over year, 51% quarter over quarter. Revenue is down 7% quarter over quarter, and just up 2% year over year. So you got a, relatively okay growth year over year with that 7% revenue growth, and you have a horrible EPS year over year decline at 50%. Still, Starbucks getting some green right here, up 1.5. Whatever they say on the guidance, in particular around the consumer, is going to be very important for markets. Kind of struggling to hold up. It's green, and now we are going red again. Visa, all right, let's look at Visa. It's 406. Visa is down. Still looking for the numbers on Visa. Let me see if we have those yet. No, we have Booking Holdings. Let me see if we can get Visa. That one should be out in a second. No, still don't have Visa. Still don't have Visa. looking for Visa. Let me get to booking holdings, and then we'll see if we can get Visa in just a second.
Let's get those numbers.
Cents. And then revenues, this top line beat of 4.76 billion. The street was expecting 4.59 billion. The other thing is we're seeing beatings across a bunch of different metrics here. Gross bookings come in higher than expected at 46.7 billion. EBITDA comes in at 1.1 billion. The street was expecting 850 million. And then room nights also a beat here. The real question on the call I expect is going.
Okay, I got Visa. We'll go back to bookings, but Visa EPS 3% beat. That's nice. 276 versus 268. Revenue came in line 9.5 versus 9.5. Revenue's up 9% year over year. EPS is up 10% year over year. Add it to the bucket of companies that are able to beat in Q1. So we got Visa right here, basically flat after hours. Visa tends not to be a big mover anyway, so at least it's not down currently right now. Grab earnings are today. Robinhood is wrong. The brokerages are wrong. Grab earnings is today at 7 p.m. I'll be live covering it, but it is not going to be on the 15th. Starbucks now down 1.3. Visa will get a little bit more clarity on their numbers, but that's up about 1%. I guess Snapchat's at 410, so we got 2 minutes until Snap to see what they do. I think Snapchat's going to be the biggest one that moves either up or down, but the rest of the names outside of First Solar, which is still tanking down 10%, has been relatively tame. 30 billion share buyback on Visa. Wow. Wells Fargo is doing a 40 billion buyback as well. So that's nice to see in regards to more companies deciding to deliver some shareholder value. Yep, $30 billion stock buyback. The S&P 500 just had its biggest loss in the first 100 days of a new presidential term since Nixon's in 1973. So although we've had 6 green days in a row, this is the biggest loss in the first 100 days since President Nixon. Just got that update right now. Again, Trump's going to be speaking at the Michigan rally for his first 100 days. 11% down on First Solar. Starbucks down now almost 2%. Mondelez don't have their numbers yet. That's down 1%. Caesars up 1%. And Visa now going green, up about 1.3%. Snap is not at 5 p.m. Snap should be right now. SMCI is not today. SMCI, I don't know where people saw that, but SMCI is not today. Snap should be literally in like 30 seconds. 410, I believe, is when we get their numbers. So we're going to see what numbers they put up. Yes, SMCI is not today. I don't know how that started spreading in terms of what people were thinking, but it's May 7th. It's not going to be today. Visa is green, 1.5. Bookings, again, down 5. First Solar down 10. Starbucks down 2. And Starbucks and Snap's red. No, Snap's green. Snap's green, 7%, 7%, 8%, 9%, 10%. 8.3, 7.2, 5. Can it hold it? That's the question. Can it hold it? We got to see. Can we hold? Can we hold up 4%? It doesn't look that strong of a hold. It's really struggling, but it's at least green. You got 989 right here on Snap. Let's see if we got some numbers. Let's see if we have some numbers on Snap. If the numbers are good, maybe the low 8s we're not going to. Oh, wow. These are good numbers. These are not bad numbers. These are not bad numbers. I mean, the stock might tank for whatever reason it tanks, but these are not bad numbers. Not at all. There you go. EPS beat by 38%. Street thought they would lose 13 cents. They lost 8 cents. 1.34 billion in revenue, 1.36. They beat by 2% on revenue, beat by 38% on EPS. You can't tell me those are horrible numbers. I mean, if this thing wants to tank below 8, go ahead. But I don't know. Now it's red, down about 2%. It didn't seem like the green was going to stay in the first place right here. This was very weak. But that's not a reason, I think, to sell it right here. Down about 2%. Let's see if it can struggle and hold on to get these levels. Snap amidst formal Q2 guidance due to uncertain macro conditions. Well, that's not good news. You don't want a company not giving guidance if you're in the tech space. Granted, that's also not good for Meta. Let's put Meta here up after hours. Meta's down a little bit on this news. Snapchat right here now down about 3.3%. Who uses Snap? A lot of people use Snap. 450 million daily active users. I mean, we'll get their new numbers and see what they put out. I don't know, dude. Like, this is, if they're really going to take it red after that type of a beat, that's a bit weird. In my opinion, they're not profitable yet. They're getting a lot closer to profitability. 8.82 right here on Snap, down about 2.74 currently right now. Let's get an update on Starbucks, and then I'll try to get some more numbers right here on Snapchat.
Starbucks results ready. Kate Rooney has those for us. Hi, Kate.
Hi, Morgan. So it was a miss on earnings and revenue in the quarter for Starbucks, as well as same store sales, adjusted EPS coming in at 41 cents. That missed street expectations by 8 cents. That was on revenue of $8.76 billion. Also light on the revenue number. Same store sales, as I mentioned, did miss expectations, down 1%. The consensus there was for a 0.6% drop. Starbucks does say that was partially offset by a 1% increase in the average ticket size, which analysts are also watching. International comp store sales increased 2%. China sales were flat. Starbucks says in the release here that China comprised 61% of the company's global portfolio, at least at the end of the quarter. Operating margins did contract 6.9% there, driven by deleveraging. They also talk about added support and labor support for this Back to Starbucks campaign, plus some of the restructuring costs. The company opened 213 new stores, they say, in Q2. CEO Brian Nichols saying in the earnings release, the quote here is, "My initial optimism has turned to clear confidence. We are where we should be," he says, at this point in the turnaround. Our financial results don't yet reflect our progress, but we have real momentum, he says, with their Back to Starbucks plan. They are.
I hate Snapchat so much, dude. This is ridiculous. There you go. Down 8% on Snap. Let's get the numbers on Snap. We'll go back to Starbucks in a bit, but obviously the market is not really liking something right here. And that's why you're seeing some of this pain. Let's see if we can get some coverage on why this is taking place.
Morgan, Snap revenues roughly in line with expectations, 1.36 billion versus the 1.35 billion estimated. Profits as measured by adjusted EBITDA is a strong beat and more than doubled from a year ago, 108 million versus the 64 million street account estimate. Daily active users are 1 million ahead of expectations, 460 million, and the company announcing 900 million monthly active users.
460 on the daily, 900 on the monthly. That's up 50 million quarter over quarter. I mean, I know the guidance they're holding back and that's what's tanking the stock right now, but those aren't really weird numbers to me that would necessitate Snapchat is not doing well as a business.
That's up from the 850 million it announced last August. Now, Snap is not giving any guidance, citing uncertainty about macroeconomic conditions, saying, quote, "While our top line revenue has continued to grow, we have experienced headwinds to start the current quarter." But the company noting its progress in various areas, having grown total advertisers 60% year over year, while direct response advertising grew to 75% of total revenue. John?
All right, Julia, thanks.
All right, so I guess the street's mad about their lack of guidance. This is something they could potentially clear up on the earnings call, because the number one question is going to be, why aren't you guys giving guidance? And I agree. I mean, you're Snapchat. You're not General Motors or something. You should be able to give guidance. So macro conditions affecting their ability to give Q2 guidance is very weird. Very weird. Don't know why that's the case. I haven't sold my 1,000 shares. I got in at 870. To be honest, I'd rather just buy the dip if it really tanks below $8. At that point, I'd rather just hold, because they're getting very close to profitability. The user growth is fine. There's a thesis there at these valuations that I'm not necessarily scared of. Last time we saw below 8 was September 2023. We might get that again today based on how it's going, but I don't know. That is weird. That's a big question. Why is there no Q2 guidance? What headwinds, right? Snap isn't affected by, maybe advertising budgets are affected by tariffs. That's fair. But I think they should be able to explain that a little bit more. So Snap will discuss its Q2 outlook during its Q1 2025. Yeah, I think this is something that could be resolved on earnings, to be honest. This seems like a really big knee-jerk reaction to not giving guidance, because we saw it was up 7% just on the pure numbers. And then I guess the street got the guidance algo going away, or the algorithms that move based on, hey, is there guidance or not? It was triggered that there is no guidance, and they got upset. It's up to Spiegel on the call to kind of make sense of it. Now it's down 11% right here. So definitely getting hit on the lack of guidance. Starbucks down 1%, Fico down 0.4%, First Solar down 11%, Bookings down 3.6%, and then Visa up a little bit currently right now. Hood is pumping, you guys are saying, after hours. Let me check Hood. Hood is 49.50. Not too bad. So Hood is doing okay. I did buy a little bit more Hood today, about 25 shares. Snap still down 10%, and Visa up about 1% here right now. Let's look at Visa, and then we'll get deeper into Starbucks and try to make sense of some of these other numbers that we've got going on.
So it looks like a beat for Visa on the bottom line with adjusted EPS of $2.76 a share versus the $2.68 estimate. Now revenue at $9.59 billion is just above the $9.55 billion estimate. Total payments volumes in the quarter grew 8%, while cross-border volumes grew 13%, both of which I will point out is slower than the previous quarter. Consumer spending, however, was, quote, resilient despite the economic uncertainty, according to Visa. And I will point out also that the board has authorized a new $30 billion share repurchase program. Back to you guys.
Okay, Husan, thank you. Shares of Visa are up about.
All right, so Visa, again, not doing too bad. Snap still down 10%, Starbucks down 1%, First Solar down 11%, Visa's up 1%, Caesar's up 2.5%, Meta's down 1% because of Starbucks, most likely, which is, Snapchat. But that's stupid. Like, unless Meta decides not to give guidance, which, you know, if Meta doesn't give guidance, that stock could be down because Google never gives guidance. So Google didn't have to worry about it. Meta always gives guidance. So I mean, if I'm a Meta shareholder, I definitely don't want them to keep guidance away. You know, that's actually none of the ad companies have reported until Snapchat because the main ad company, Google, that reports, they don't give guidance. So this is the first time the market's reacting to a lack of guidance from a tech company that theoretically should be giving guidance. If Meta doesn't give guidance tomorrow because of macro tailwinds or headwinds or whatever, that would be a little scary for the broader advertising sector. You guys are saying SoFi is down after hours? Where's SoFi? SoFi, yeah, SoFi is down another. Wow, SoFi giving back all of the gains today based on it losing another 0.3% after hours. I do not know what's going on with SoFi at all in regards to these earnings. Now, I have my own thesis for why the street's not respecting the tech multiple and things of that nature, but besides that, it was a pretty good earnings. It was a pretty good earnings, but it is not getting any love right here. Oh, Reddit's also down. Wow, Snapchat's just messing up the entire advertising sector, dude. Look at Reddit. Down 2%. They didn't do anything. You know that 50 Cent meme? It's like, what is he saying? F me for? That's Reddit right now. Like Meta right here down 0.63. And then Snap, goodness gracious, bro. Barely holding on to $8, down 12%. I mean, it is what it is. It is what it is right here. I do think the earnings call can reverse some of this. If it's only about Q2 guidance, I'll pull up their numbers in a second and we can look at the actual numbers. But dude, they beat EPS by 40%. What more does the street want? Like they wanted a 45% beat or something like that. At some point, you have to call BS on the street as well, because there are times where the street is just asking for way too much for no reason. And try to figure out how to make sense of it. Visa right here up 2% after hours. First Solar down 10, bookings down 4, SoFi's down 0.5%. Don't know why. Robinhood after hours, that's up. The other fintechs are up as well. Affirm is up. So why is SoFi down? Robinhood and Affirm are up. What about PayPal? PayPal is flat. SoFi is the only fintech down after hours. SoFi is the only one that's down. 0.03 was not expected for Snap. Negative 13 cents was expected for Snapchat. They are still not profitable. They're profitable on a gross profit basis, not on a GAAP basis. So they were expecting negative 13. They did negative 0.08. That's a beat from my understanding. Unless I'm reading the expectations wrong, but I don't think anyone expected Snapchat to be profitable. Like they're not. They're gonna get there probably in a couple quarters, but not today. So Amit secretly had some Saratoga. Oh my gosh. Well, that's what you got there. Let's get into the actual numbers right here and see some more data that we can find and see if this is a street thing or this is a Snap thing. Revenue increased 14% year over year, 1.3 billion. DAUs 9% year over year, 460. Net loss improved 54% to 140 million. Adjusted EBITDA 137% year over year in terms of growth. Q1 marked an important milestone for Snap as we reached more than 900 million MAUs. DAUs were up 460 million. Total number of Snap Star Spotlight Pros grew by 125% year over year. My AI DAUs, that's their AI chatbot, is up 55% year over year. Active advertisers up 60% year over year in Q1. We rolled out improvements to our targeted cost TCPA bidding strategy. In addition to sponsored Snap Map takeover buys launched last quarter, we began early testing of sponsored snaps in our auction in Q1. We launched new brand suitability solutions. Other revenue, the majority of which is Snapchat Plus subscription revenue, increased 75% year over year. That's nice, juicy SaaS revenue growing 75%. But the lack of Q2 guidance is getting the street upset. Snap will discuss its Q2 outlook during its Q1 call. So they didn't really not give guidance. They just said we're going to wait till the call, which means maybe they're not going to give the type of guidance the street wants, but it's not like they're not going to talk about Q2 at all. Google didn't even talk about Q2. They only reaffirmed their CapEx. That's the only bit of guidance that we got from them. But there you go. Street doesn't like it. Down 12%. First Solar down 10%. Starbucks down 1.2%. Reddit's down 2% because of Snap. Meta's down 0.5% because of Snap. Where's Google? Is Google getting hit? Google is also down 0.22%, likely because of Snap. People overreacting after hours. I mean, maybe. We'll see. We'll see how Evan handles the call. We'll see how Evan handles the call. If it really gets stupid, like we get down to 750 or below, I just buy the dip. I mean, like, I think at those prices, you're getting a bit more margin of safety right here. But if it reverses, then we see what we have to do. But yeah, Street's obviously not liking it right here because of that lack of Q2 guidance. But again, I don't see a red flag in the numbers. And I would be honest, if I saw a red flag, based on the expectations, what's the red flag? They're not profitable yet. Okay. Like no one expected them to be profitable. Revenue growth, 14% year over year. That's not horrible. And then adjusted EBITDA is up freaking 137% year. Like this is free cash flow was 114 million. Last year was 38 million. That's up almost 3x. Like this is a guidance question more than anything else, not necessarily a numbers question here right now. Any earnings that we didn't take a look at? I think we looked at most of them. Oh, let's look at First Solar right here and see why they got hit. And then in about 7 minutes, we're gonna have Jason for Technical Tuesday. It's been too long. He will be back for TT, and we'll get into all the technicals on this market.
Hey, John, it was a mixed quarter here. EPS at 195. That was a pretty sizable miss with Wall Street looking for 250. Revenue, though, did beat a little bit at 845 million. That was ahead of the 839 that Wall Street was looking for. But the company did lower its guidance essentially across the board here. For the full year, they now see EPS between 12.50 and 17.50. That's against the $18.14 that Wall Street was looking for. The company did note the near-term challenges presented by the new tariff regime. Certainly, we'll hear more about that on the call, and shares now down more than 10%. John?
Pippa, thanks. Meantime, Seagate is higher by about 6.5%. Christina Partsinevelos has those numbers. Christina?
And that's because we're getting a bullish outlook from data storage maker, like you said, Seagate. The company beating on earnings per share of $1.90 with revenues of $2.16 billion, higher than the street anticipated. Gross margins for the quarter also coming in higher. But for the outlook, Q4, they are guiding EPS at a midpoint of 2.4 or $2.40. That's 33 cents higher than what the street wanted, with Q4 revenue at a midpoint of $2.4 billion, also higher. The press release says specifically about guidance, it reflects, quote, minimal expected impact from global tariff policies. Again, minimal expected impact from global tariff policies.
All right, so Seagate beating on the top and the bottom. Data center company, that's up 6.5%, citing minimal. See, here's the thing. Seagate can't say we are going to have minimal implications because of tariffs on our business. And then Snapchat's like, you know what? The tariffs, man, we can't give guidance. Like Seagate, a company that deals with hardware and infrastructure for data centers, cannot say, yeah, the tariffs are not going to affect us. And then Snapchat's like, you know what? These tariffs, it's really hard for kids to send snaps to each other because of the tariffs. Like the street's going to be like, what's going on, right? The street's definitely going to think there's some issue here that they're masking. So I think that's why it's down 12%, but we have to see on the call what they say. All right, last thing before we get into Technical Tuesday, let's look at Starbucks numbers a little bit more in depth. Starbucks right here is up. It's flat after hours. It's up like 0.3, nothing too crazy. But let's take a little bit deeper look right here. Comparable same-store sales declined 1%, driven by a 2% decline in comparable transactions. North America sales declined 1%. International store sales increased 2%. The company opened 213 net new stores in Q2. They now have 40,789 stores. 53% company operated, 47% are licensed. Wow. It's a lot of Starbucks, dude. Net revenues, 2% year over year. GAAP operating margin was down 590 basis points. GAAP earnings per share, 0.34%, declining 50% year over year. CEO says, my optimism has turned into confidence that our back to Starbucks plan is the right strategy to turn the business around and unlock opportunities ahead. Improving transaction comp in a tough consumer environment at our scale is a testament to the power of our brand and the partners of getting back to Starbucks. We are on track. And if anything, I see more opportunity than I imagine. CFO says, while our financial results are far from Starbucks' potential, we are working to build a better business. We are developing new muscles to test, iterate, and scale quickly in service of long-term durable growth and strong returns on invested capital. Let me Command F tariff. Okay, it's in their risks and disclosures in the forward-looking statements, but outside of that, there's not an actual sentence by Starbucks specifically on the tariffs. They're going to give guidance on the Q2 call. And outside of that, I think that's all we have. Dividend of 61 cents. I don't think they are buying back shares from my understanding. So that's pretty much it for Starbucks. I wanted to see how many subscribers they have now on that like Starbucks Plus thing. They tend to show the new subscribers. Oh yeah, here it is right here. This is the graphic that we look at. Trump's going to speak at, I think, 6:30, or maybe 6 p.m. Not sure, but it's going to be later in the day. Oh, wow. They didn't put the subscriber number. Dude, last time we looked at Starbucks, they put the subscriber number, I think it was like 33 million on the little graphic that they do. So that's a little weird. They're not giving us the subscriber number front and center. I think it's called like Starbucks Plus or whatever it is. Yeah, I can't find it. Anywhere. Huh. Interesting. I don't think that grew. Why is SMCI down 14%? Hold on. There was no announcement of SMCI earnings. What's going on? SMCI. Oh my goodness. 15%. Hold on. What's happening here? Did they consult with Snapchat on how to do an earnings or something? Hold on. Let me try to get some updates. SMCI. That is weird. They don't have earnings today, guys. I went on the website. You couldn't even find a date for earnings. So SMCI provides third quarter fiscal 2025 business update and preliminary results today. That's why people were saying SMCI has earnings. They were giving preliminary, but they didn't make an announcement that they were doing preliminary. So I don't know how people saw that. Their auditor got audited. Okay, let me see if I can find it. SMCI. Okay, here we go. I got it. Let's see if this is ugly. Stock's down 13%. Okay, net sales. Oh my God, this is bad. Wait, why is this so bad? Hold on. Why is this so freaking bad? Oh, wait, hold on. Where is NVIDIA? This is a little, what's going on? NVIDIA's down 1%. Yep. NVIDIA's down 1%. Dude, do you guys look at this? Prior guidance was 5 to 6 billion of sales. Now they're doing 4.5 to 4.6. EPS cut in half, 36 to 53, now 16 to 17. Look at that range, 36 to 53. That's a hell of a range. Now it's basically 16 or 17. And then non-GAAP was 46 to 62. Again, a 20-cent range. Now it's 29 to 31. I think this is because of China. That's my first gut reaction. NVIDIA down 2%. Dell is down 4%. Let's go to the semis. I think this is because of China. What do you guys think? I think it's because of China. That's my gut reaction. Dell's down 5, Lamb's down 0.2, ARM's down 1, Marvell's down 1, Taiwan Semi's down 1, SMCI down 18%. What is going? I mean, look, those are really bad numbers, but I think it's because of China, which is actually reasonable because the market already digested NVIDIA's China lack of growth. AMD's down 1%, now NVIDIA's down 2% because of this. This is ugly. This is very ugly. Guys, I cannot call Steve. First of all, he doesn't own SMCI. He doesn't own SMCI, so he got out of it at around 36, which is good. He bought more NVIDIA. But this still affects NVIDIA. SMCI, NVIDIA now down 2.2%. Trump is not live, for those that saying that Trump is live. He already talked to reporters. He's speaking to the Michigan National Guard, so he's not going to say anything about the market, so you don't have to worry about that. Dude, that's weird. That's really weird. They didn't give a reason for this. Hold on. New generation product designs are robust. During Q3, some delayed customer platform decisions moved sale into Q4. The GAAP and non-GAAP gross margin for Q3 was 220 basis points lower than Q2, primarily due to higher inventory reserves resulting from older generation products. That to me is China. That to me is saying, hey, we built a bunch of servers for the H20 chip, and now that NVIDIA is not selling them, we have a bunch of servers that we don't know what to do with because we can't sell them to anybody. And to expedite costs to enable time to product for new markets. I think it's China. I think it's China. I would say it's China. That's my guess. That's my best guess here right now. SMCI, 18%. All right, so who's buying the dip? Who's buying the dip? Snapchat, a little recovery. It was below 8. Now it's at, I think it's above 8 now. No, sorry. It's even worse. 785. Snapchat down 14 and SMCI down 18. Wait, where's the S&P? Because this has implications on NVIDIA and that has implications on the S&P. S&P 500 down 0.09. So that one goes red after hours. Why is SOFI down 1.6%, dude? Oh my gosh. Robinhood's kind of flat. NVIDIA's now down 3. Dell's down 5. And SMCI is the big one right here, down 18. Okay, that's ugly. That's ugly. Let's get Jason onto the show. We'll get his opinion on all this stuff. We'll go through the technicals, and then we'll keep going from there, try to get some more coverage on what's going on with SMCI. It's been about 2 weeks, but we got to get into these technicals. Let's roll the intro.
Are we in? Am I muted?
No, you're good.
Breaker,
you're
breaker,
good.
1, 2, testing. What is up? Astrology time. That is true. What's up, guys?
Dude, so I want to get into...
I don't know what you just did to the market, man, but whatever it is, every time I come on, maybe I shouldn't come on anymore because it's just getting ridiculous now.
Okay, before we even start with our TA.
Taco Tuesday, yes.
Before we start with our TA, let's spend some time on this because I'm sure everyone's trying to get some coverage. I'll try to get some numbers, but what's your raw reaction to why SMCI is down 17%?
My raw reaction, well, I'm not in a trade on it. I closed my SMCI many moons ago, but my raw reaction is, yep, I knew I couldn't trust him. That's my raw reaction. Whether, it's probably a little too raw, to be fair. I mean, but
do you think it's China? Like, why do you think the guidance came down?
I'm looking at it, so I got like multiple screens, but like, it's $500 million, basically, right? This is what I'm talking about. That's a big swing, dude. I don't know what they're doing. It's a big swing. Like, you go from 5 to, so first of all, 5 to 6 billion guidance, like that's a huge range, right? So it's not very precise to begin with. So this is actually raw reaction right now as I'm digesting it. And at least, okay, 4.5 to 4.6, that's a more realistic range. Do they really be like, okay, so we have this audit, we have whatever. Now we're readjusting. We have better visibility maybe to our metrics, and now we're going to true up. So maybe that's all they're fixing, hopefully. And it just happened to be a lot more than it was. I don't know that $1 billion. No actual earnings yet, but
these are preliminary numbers, but the preliminaries suck. And that's why it's tanking.
I mean, this was always the issue with like forecasting, right? Like that, and that's why the audit, more or less, like how accurate are your numbers?
Yeah, I think there has to be a reason for this.
This is like auditing your Salesforce funnel right now.
But I don't think this is an accounting thing or their 10K. This is a big customer.
No, it's a sales funnel. Like, it's a sales audit, right? Like, where are your salespeople?
Yeah, and my gut
maybe like you could easily have, because they only have a couple customers at the end of the day, right? And you could easily have a couple projects that get pushed out or pushed off out of that forecast that might still be in the pipeline, but maybe not for that quarter. Yeah, delayed customer. So that's exactly what it's saying. So during Q3, if you read it, that's exactly what they're saying. So during Q3, some delayed customer decisions, platform decisions, moved sales into Q4. So they're pushing out. In reality, they're pushing out the guidance. So from a sales perspective, so coming from enterprise sales, like this is how it would work, right? Like if you had what we call a QBR, quarterly business review, you do with your management team. You present your pipeline, if you will. Like these are the sales that I'm working on. These are the projects that I'm working on. And management wants to know, what do I need to do to support you to get your sales in line and get whatever done. And then all they can do is the best they can to support their salespeople. But if something happens and maybe one of their customers, it's a salesperson, somebody's pushed out a project from Q3 to Q4, that's actually exactly what they're stating here. So it's not an audit thing, but it's basically a project. So it's not a pull forward, it's a push out or delay.
Yeah, that's what it seems like here. NVIDIA down about 2%.
I mean, you could pull up if you pull up the thing again, like the release, it's the second bullet down.
Yeah.
It's during Q3. It's that second bullet. During Q3, some delayed customer platforms for decisions moved sales into Q4. So all that means is that it's pushed out. It's still there in the pipeline, but it's not here now. It's not going to close this quarter is basically what they're saying.
But it says some delayed customer platform. So
yeah. So basically when you delay it as a salesperson, you just like, we do these sales forecast.
No, that makes sense. But if it's only some delayed, there's going to be a chunk of it that's not delayed. It's just not
necessarily, right? Because it's a booking number, right? So it's like, am I going to get a PO now for your commitment purchase order? And then it's like later when it's delivered, that's recognized. So it's like, it's a forecast. Can they commit it? Basically, someone moved it from commit in their forecast to like maybe.
So if it's China, then I think that PO is never coming.
That's up to the user, right? Like that's up to the investor to decide. So what they're saying is, and that's the question, what they're saying is that some Q3 orders basically have been pushed out to Q4. Now you as an investor have to decide, do I believe them or the salespeople, whoever, and are those orders still going to come in or are they just never going to come in? And maybe they go somewhere else. And I guess then the question is, who's the culprit, right? Because like of their customers, who represented basically to 1.5 to 2.5 billion dollars worth of orders.
Right.
Somebody represents 1.5 to 2.5 billion dollars worth of projects. Whoever that person was, it's not Google. Maybe it was Ali Cloud, Baba Cloud.
Maybe it's, I mean, I'm trying to think the company, a $1 billion reduction in guidance or a delayed reduction in
guidance. Yeah, maybe it's, who have we not heard from? We've not heard from Microsoft. We've not heard from Amazon.
No, but what I'm saying if they're going to reduce their guidance by $1 billion, it's not because of the hyperscalers. The only thing I can think of is it's because of China. The hyperscalers are going to keep spending.
No, it's a hyperscaler that pushed out an order. So it's a project of size of 1.5 to 2.5 billion dollar size order or orders.
Right. No, that's
who's going to represent that? It would be a hyperscaler. And so who pushed out one of their projects from Q3 to potentially Q4? And then does SMCI get it? Or does somebody else get it? Or does the project just not go down entirely? And so who has the forecast for that kind of spend in the cloud right now? I guess it's Microsoft.
It could have been Microsoft. That actually makes a lot more sense.
Yeah,
or XAI. It could have been XAI. They're raising money right now. Maybe they can't afford to
but
pay.
That's how I read this right now. Right, wrong, or indifferent. That's exactly how I read this. I think that's pretty accurate from what I know. Just this release, from what I'm reading. But that's what it reads as.
Did I actually say guy dance?
Uh-huh.
Did I say that?
Not bite dance. Is it bite dance? I don't know.
It's guy dance. It's guy dance.
Guy dance.
All right. So for those that are just joining, SMCI down 14% because of preliminary guidance. There's going to be a lot of people asking questions. There's going to be a lot of people asking questions as we move through Technical Tuesday. but we're going to move on from SMCI because we got to move on. But that is the reasoning behind it. And it's taking all the semis down with it. If I get any updates, I'll share updates and pause TT just to share some of those updates. But as of now, that is the issue with SMCI. Jason, it's been a week. Let's get into TT. I'm curious about your thoughts on the macro. We'll start with the S&P 500. What do you think is going on?
He muted me too, by the way, so I had to manually unmute.
Yes,
for a second.
But you need to let me intro you. You like stop me while I'm trying to intro you, and then I can't intro you, and I'm like, all right, you just gotta mute.
I still love you, man. I'm excited. I'm just excited. It's been. I went to San Diego with the family. I had a buddy retire from the military. I'm like, am I that old now that my friends are legitimately retiring? I'm like, holy crap. But I don't know. I don't remember where I left it. But if you come to my streams at all, which is on YouTube, it's only on Mondays, like right after your market open, then mine starts. But remind me, Emmett, did I talk about where we are on the tariffs at all? So like we missed this week, but it was this week. Yeah. So I think probably I said this. I'll say it again because I think it's important. This low here, 480s or whatever. This was on a Monday. If I'm going to drop, this is a weekly chart right now. I'm going to go to a daily chart and just highlight. So this is Monday, April 7th right here. And like, as I look at this and the way that I read this chart, in simplest terms, the story that this is telling me is that Liberation Day comes out. And I think that was what was that, a Tuesday or something? Wednesday, maybe a Thursday. Liberation Day hits, and nobody was expecting this becomes this, medium-term black swan. Nobody is expecting to see what we saw, and maybe some people untrusting of Trump or the market or what the reaction might be make the call on Sunday or over the weekend, say, I don't trust this. Go ahead and sell. Or sell something or whatever. Market looks weak in general. Then we get that Monday open, and that morning low is the actual low Monday morning. Which when you think about it that way, you put the call in over the weekend, the orders go through, they're there to sell Monday morning. That's the low. But from a fundamental perspective, or like here's the story. The story is that Monday we had 10% blanket reciprocal tariffs across the board, right? We had 35% reciprocal tariffs on China, right? And then what are we today, Amit, on the tariff front?
You mean across the world?
Yeah, well, in general, like give me that. What's the blanket and what's China? And do we have any deals in place today?
So no deals.
No deals.
China's 145.
China is now 145% from 35. And blanket's still 10. Is it still 10?
Blanket's still 10. Yep.
So the story is Monday lows, we are 10% blanket tariffs, 35% reciprocal on China. Today, as we sit here now, we have no tariff deals completed. We are at 150% retaliatory reciprocal tariffs on China, yet the market is higher. Think about that for a second. Yet the market is higher. So all the trade war nonsense to me was priced in worst case Monday. And so I don't think that, we weren't going up yet. We'll talk about that in a second. But from that perspective, I don't think that there's any trade war headline that can take this market lower. Does that make sense? Even this SMCI, I don't think that can take this lower because Monday it was worst case scenario. Right. So unless there's a new kind of catalyst that's not necessarily trade war related, let's say, for example, we talked about this before, maybe China, Japan, the UK are really pissed off at us for all these games that we're playing with the tariffs, and they decide to not show up to our bond auctions anymore, and that moves the 10-year yield to 5%. Then that's a different story. That would probably create a new low. But aside from something like that, I don't think that we have more tariffs. Not a single deal is done, and we're higher. So I mean, take it for what it is. I'll take that at face value. If that makes sense.
Real quick, couple things, guys. Trump is not live. He's talking in Michigan to like he's talking to some military base. He's not doing his actual rally, so we're not going to Trump right now. 2, yes, we're covering grab earnings. That'll be at 7:30, so it'll be a while away.
And Chris is in the house.
And Chris is in the house. So then, Jason, the inevitable question right here is: you think the market can potentially go lower, but it wouldn't be because of tariffs anymore,
right? And I think that the tariff headline lows are in. Does that make sense? So unless it's something else that the market's not ready for, I don't. So it would have to be Fed related, I think, maybe, or bond related, or rate related, or the labor market. So the Fed's going to be watching the labor market very closely. We have 4 cuts priced in for the rest of the year. Not this coming FOMC, but the 4 following that. There's 25 basis points priced in today. The question is like, why do we need to cut 25 basis points each time? It would really be because, and Jay Powell said this last time. He was like, we may be at a point where our two charters are kind of at odds. 2 charters being like 1, control inflation, and 2, promote full employment. Those are the 2 things. So if the labor market is weak, yet inflation's going higher, he still may need to continue to cut rates. But if the employment is really strong, if the labor force is really strong, and rates are actually kind of coming, and inflation might be coming down, I don't know that he needs to cut rates. So that's, I think, part of what he was kind of alluding to.
Right.
And those 4 cuts that are currently priced in, if his mentality is like, this might be transitory, right? And so now I have to really just focus on the labor market. Well, it might put him in a funky spot.
Okay, so in terms of overall TA on SPY, what are you thinking?
So the pinned tweet, my pinned tweet, has been the pinned tweet, still remains the pinned tweet. It's this, right? The I don't know what the hell it is. Get out of there. But it was Friday's lows, Friday's highs. That Friday was, I believe, this Friday right here. And I'm going to turn this on for just a second. I'm just going to use this from an NFP perspective. So this is that Friday that I'm referencing. So Friday high, Friday low. We were going lower. This is the one day that we started to go down, but instantly bought up with a tweet. That was the only day that we were looking potentially to go lower. That was Wednesday. Since then, we continued to stay in this box, but Wednesday, the 23rd, we are clearly above that Friday. So this is Friday, April 4th, Friday, April 4th high. And so from that point on, I'm like, okay, we're going to go higher. And this is buy the dip mode. Even this is probably buy the dip mode because you're not making new lows. Like, we're going to assume at that point that low holds. So I'm just going to do, from a structure count really quick, I'm going to take some of these things off. We do have, so this is a prevailing downtrend right here, this kind of like dashed line. I don't know if you can see it. Yeah, it looks okay. You can kind of see it. That little dashed line, that's the prevailing downtrend from the all-time highs. We're actually over it now, and we're also now over the 20-day simple moving average. From a structure count, we're counting lower highs and lower lows. So this is lower high. We do have a lower low. We have another lower high. This day, that's the Wednesday, ends up being a higher low. And then we have another higher low, but no higher high, right? We do get equal lows right here on Monday, the 21st. And that serves as really like the base, the low end, right? And now what we have made definitively is a higher high from this structure. So does this make sense when you're counting higher highs, higher lows, lower highs, lower lows? So we have a higher low and we have a higher high. We're changing structure. So what that means is that we can start to look for the next higher low as a buyable area. So even if today comes, like, even if we come down, I think anything in this area that's over, let's call it the last low, anything in here is going to be buyable, quite frankly.
Which is what is the range of those
from a structure perspective? It's down to 526 is really like, that's the deep discount. I don't know that we're going to get that. I honestly, what's happening is that we're moving so fast. Sorry, I got to change some of this stuff so you don't have so many lines. So 526 was that breakout area right here. So that was Friday high, the first Friday of the month, NFP Friday, April 4th. So that would be like the best discount area, but we don't have to come in that low at all. Even at this point, this is that what I'm looking at today is we're looking at this last pivot. So here where I have these green arrows. So this was support, and then turned into resistance, confirmed resistance again. And now we're actually over it just slightly, albeit tomorrow might be a different story. But anything that's 550, so 550. Anything under that, I think, becomes viable from an index level. So that said, your stock specific stuff might look a little bit different. And this is, I'm zooming in just a little bit more. So this is like a 3-hour or equivalent to about a 4-hour chart. You can see even the last few days. So this is Friday, Monday, and Tuesday today. That same level that was support and then acted as resistance here, this kind of area, actually starting to act a little bit like support. And yeah, so core PC, yes, that does come out tomorrow. I think it actually comes out midday. It's wild, right? Like during the market, like it's usually pre-market. I think it's like 30 minutes after the market's opened.
Why do you think it's coming out later?
I have no idea. Maybe somebody took a vacation early. I don't know.
No, it's at 10 a.m. Yeah, you're right. 30 minutes after. Yeah.
That's weird, right? It's not normal.
So Jason, and last question on markets, and then we'll go to stocks. Are we in a bear market or no, based on the technicals?
Oh yeah. No, we're still in a bear market. Technically. So the question, like technically, we're in a bear market. Can you have a big rally in a bear market? Yeah, you can. And I say that with all the love available. From a technical perspective, we are not back, right? We are in the middle of a bounce that might be a counter trend bounce. From a fundamental perspective, though, I think that's a different question. I think that's where these two arguments are coming to a head, literally as we speak, right? So from a technical perspective, we were in a bear market. We still are in a bear market technically. Look, you're not going to get out of a bear market until you're back over 580.
And even 580 is that 200 day or what? Why 580?
Yeah, it's over the 200.
Gotcha.
So you can get a bounce all the way up to 280, which is that real breakdown level up here. And shoot, you could get it all the way up to 600, and it would have still been a bear market. I guess the question that you're asking is it going to be at that point in time? It's more neutral. Even if we get back to 600, it's still more neutral. But that's a long ways from here, right? So I think the arguments are, is it a technical bear market? Yeah, it has been. But is it a fundamental bear market? Meaning like, how do you define a fundamental bear market? Maybe that's my question to you, Amit. Like, is it where, earnings get absolutely destroyed and how would you define that?
I would say we lose hundreds of thousands of jobs a month. That's like
a deal. So that's what is in play, right? Are we losing hundreds of thousands of jobs a month? No, not yet, right? Is there something out there, and why the labor market still is very important at this moment in time is because the technical story is, yeah, it was bear market. We're in the middle of a bounce during the bear market. 565 is where you're going to hit your resistance, which is like right over here. So you maybe have a little bit more to go before you really need to start taking measures again. But from a technical perspective, but from a fundamental perspective, is this a recession? It's all TBD, right? Like it's all still TBD, which has been the whole from the beginning, a growth scare. Now it's like, how do companies deal with the tariffs? Do they absorb the cost by becoming more efficient and then starting to lay people off? we have to wait and see for the fundamental data to show up. But it's not, it's not there yet. So it's all still kind of growth scare. Does that make sense?
Makes a lot of sense. It is a wonky market, not easy to understand it. And in the midst of that market, we do have some stocks that are doing well, some stocks that are doing bad. I think let's start off with Palantir having a massive run up going into earnings.
Okay. Before I go there, so SPY SPY, you do so at 565. That's this move back basically up to where that last breakdown area was right here. This was liquidation day, right? Wednesday.
Yeah.
So I think if the market gets back to where it was on Liberation Day, then all the tariff nonsense is no longer priced in. That's what's true. And we're just back to growth scare mode, which is also
easier to handle than the tariff stuff.
Yeah, which is easier to handle than the tariff stuff. So that means that even on this huge press to the upside, I'm just going to move this down and we're just going to call this here. This was that kind of, we'll call this area like the tariff zone. So so from here down to here, basically, this is where tariffs are impacting the market. And so as you can see just in this box, as of yesterday and starting Friday, we started to go into that complacency mode in regards to tariffs. We're not like in euphoria. We're like, oh, it's going to be good. But what the price is saying is that we're at least in a complacency mode. We're like, dude, I don't know what's going to happen with the tariffs, but whatever it is, it's not really going to affect my decision making right now.
Right.
So we just as of last week started to come out of that.
All right. So I guess we'll get into individual names. What do you think about Palantir here?
Is this the one you asked me? So Palantir, holy moly, this thing is high. I mean, these are tough, right? So this is a tough setup here for me. You're basically, again, we were there yesterday or last time. I think we were somewhere in here, and you asked me, does the market support that 90? I think it was literally right here. Yeah, that's Tuesday.
Yeah.
Tuesday, April 15th. And you asked me, does the technical support this? No, it didn't support it then. And so it comes back. So you hit that resistance, and actually we do pull back. And remember, if you're new to technical analysis, all I can say is the charts will change before we show up again next week. That's for sure. So things will change very quickly. But coming down was not supported. Actually holds. I think it's like your 20 and 50 day right in here. Never actually loses the 20-day. So right here at this point at 88, I think this is an important moment, right? To look at a chart like this. When you see Palantir doing a little something like this, after hitting pretty heavy overhead resistance, coming down, losing the 50-day, looking like it's going to lose the 20, this could start to squeeze really heavily to the downside if this gets lost. This is a moment in time where the bears have every opportunity. The bears are winning on this chart at this screenshot, right? And we're seeing this a lot where the bears should be able to take this out. If they wanted to, if they had the numbers, they would be able to push this pretty significantly lower immediately at this point. They got an easy double top. You're losing this kind of upward momentum. You're losing it. But the fact is that they've consistently over the last 2 weeks, failed at their job. Basically, they run out of power. And so the bears fail, which means that the bulls take over. And that's exactly what happens. So if the bears cannot push it lower, and we've said this many times in the past, well, it's got to go higher at the very least if they're going to have any kind of fight left in them. So that next level becomes 110 right over here from this kind of pullback area, little blip where we broke down before. And I believe we're over that even now, or at least contending with it. Yeah, and so this is.
Would you be buying puts here? Are you scared of it? Like, what are you thinking of, Palantir?
I think you could if you wanted to.
Like going into earnings, how would you play it if you were going to make a play and it stays at these levels?
I would definitely. So there's been a lot of flow on Palantir lately. I will say that too. We've seen a lot of in the money put selling like in here, even up to this point. I think this is clearly going to 120 to me before earnings, which might be a little scary if you own a lot, I guess. I don't know. Are you guys what was the chat want, right? What is the chat like? If this is something, are you really worried about it?
I think longs aren't too worried because we know, it's getting up there and it's extensive, but you just never know. I mean, it's doing this without a catalyst. The catalyst is just macro, which it's up to the market then to control it because it's not based on earnings.
Yeah.
So, I mean,
so I'm going to look right now. So volatility is.
I also think if Palantir has an NVIDIA type of quarter, this thing could get really crazy because every growth estimate has to be changed. But it's doing what it doesn't do before earnings. Usually it tanks before earnings. This time it's pumping. And so this is a different dynamic.
No, well, I mean, to be fair, it did tank before earnings. And now
that was with the market. That wasn't with.
It was with the market. But I mean, same thing with hoodie. God, can you believe things $50 are? Anyways, I think in reality, what I would be doing here is I might be swapping out some equity for maybe in the money options.
Right.
Does that make sense? So like people might say, or you might want me to look at maybe cover calls. You might want me to look at like protective puts. But the reality is, like, if it's me and I have a large position, I'd actually be looking to swap out maybe some equity for some $100 calls, like leap calls. And then if I like, that means sell some equity, buy some in the money calls with a lot of time, which de-risks my net dollar exposure, but also keeps me fully exposed to the entirety of the upside at the same time. But if it doesn't work out and maybe Palantir comes down, I've pulled some cash off the table. I have some money to buy. And that's realistically what I would do, quite frankly.
That's fair.
I am seeing some very wild flow though. Every day on Palantir, I'll just tell you today, I don't know today I'm looking at $150 calls from May 16th. I mean,
hold on, 150 for 3 weeks out?
Dude, a single trader order. When I say single trader order, do you know what I mean by that?
Just one person?
I can kind of
guess.
So in a big boy brokerage.
Holy crap. Those 150s were traded 19,000 times today.
Okay, so this is what you do. So in a brokerage like Thinkorswim, so this is Toss, Thinkorswim. This is what your option chain looks like. You have your strikes like normal, right? But what you can do is you go down to, I mean, you can do one, you go down to statistics. Is this too small? Hang on.
Yeah.
Let me change that for you real quick. I always forget. I have my settings like super small.
Dude, 30,150 calls for 516 are open right now. And they're trading at
okay, this is really big. You guys should be able to see this.
Yeah.
Okay, so when I go into option statistics, like first look is, okay, what's the current IV percent? 69%. That's a little high. Historical vol 80%. It's still high. 337 calls to 237 puts. That's fine, right? So that's all. This is your baseline. This is what's going on, right? And then across all expirations and all series. But then I can go into time and sales, and this is going to show me, and I can filter this by hitting this little gear over here. Then I go filter to 10. This is going to show me the top 10 single orders. So single orders means like these were placed as in one single order. The number one option here, and green means it's bought, right? Meaning it was, they slapped they bought on the ask, right?
Right.
So it doesn't, like, it means that it was executed on the ask at 12:54 my time. I think that's my time.
That's 3:54 Eastern.
Yeah. May 16th, 2025 contract, $150 strike call. A single trader, a single order went through from one brokerage account for 10,000 of those contracts at $166 per contract. So like I've just been seeing like this wild stuff just like this a lot. So I mean, how much money is that? That's 10,000 times.
Guys, we are now listening to the Snapchat call. If you want to listen to it, you can listen to it on their website, but we're not listening to it. I'll try to get the updates in a bit.
Yeah, it's 1.6 million. So it's not a huge bet net from an options perspective. 1.6 million, but it's notable. Like that's wild. The net deltas, I mean, that's a lot, but yeah. So this is the kind of stuff that I'm seeing. Then you go into the chain and I can see, where are they? Right. 150. 18,000, almost 19,000 were traded today. Now, all that means is that they were traded. I don't know. Again, we don't know that they're still open. This looks like a directional, just not almost like lotto bet. My gut is that like tomorrow, this is going to have like a 50,000 open interest. But yeah, it's oddities like this that I'm seeing quite a bit. 14 delta, it's crazy.
Do you think they're buying it for a quick flip before?
Yeah.
Yeah. Right.
Yeah. I think that's what they're doing. Right. I think this is a trader. It's not an investor. It's not something. It's just a trader. 1.6 million isn't huge in the options world for a single order. It's big. I think it's pretty big. It's a good size for Palantir option chain. But you know, we'll see a lot larger, but it's
so
oddities like that I'm seeing pretty often. So anyways, what I'd say is like, this looks like you're going to the highs, right? It looks like you're going to the highs. It looks like you're going to like 120s. I do see a lot more. I've been seeing spreads and stuff that are targeting this, like 115, 120 called debit spread stuff. And I think you got, it's basically, when is this report? This is next Monday. So it's going to make its attempt between now and then. I don't know that it gets through. Do you want me to do the wild stuff?
No. We got to move on to something else. But your overall conclusion is it could go higher, but you would buy some cheap puts as protection.
No. I would my overall would be like, if it was me, I might swap out some equity for in the money leaps. Okay. To de-risk, but keep all my upside. In the money puts, because it's a little cheap, it's still a little bit expensive, and you have to offset with earnings. I mean, you'd have to go like July would be my guess. So the puts, yeah, I'm not seeing a lot of time being purchased on the downside. I'm not seeing that at all. Not yet, at least.
By the way, the Pakistan minister just said their military intelligence shows that India is planning to attack in the next 2 days, 24 to 30, or basically a day and a half, 24 to 36 hours. So that could also be a headwind for global stability.
Or is it a tailwind for Palantir? I don't know.
Well, I mean, the sad part about it is it could be a tailwind for Palantir there. All right, so that's another macro geopolitical thing we got to deal with. All right, so
this is going back to the highs, right? If you, what I was asking is, if you want me to do this, I know some people will probably, but if you do extend, it is into those 150s. So like if this is just one giant consolidation box right here, and I double it, oh God, no, that's crazy. What's your like forever target?
Well, I mean, I think it could be a $1 trillion company, so that would be 500. But
okay.
It's going to take some time before that happens.
Yeah.
So,
I mean, you got to be kind of cautious. Like, it would be one. I don't really want to say that yet. if that is what this is, consolidation like that, it's going to be a big breakout. You just don't want to see like a big breakout and then if what we call this a look above and fail. That would be no fun. And that's kind of like, here's your breakout is 123. You don't want to see something like this with and then a fail below at any point, really. It would just be, you got to be more patient if you do see something like that. All right, next.
All right. SOFI.
Jason confirm, Mike. Stop it.
Yeah. Let me look, Jason. I'm gonna put a timer on because we're spending a lot of time on tickers and we don't have enough time to spend that much. So I'm gonna, as soon as I say we got to cut it off, then we just because we end up spending way too much time.
Let's go.
SOFI.
Thought it was gonna fade today. We haven't seen it yet. It's kind of not breaking through. $14 was that massive resistance level. We talked about this. It could get back to $14. It did exactly that. Double beat, almost a skeet. I think it's TBD. You want to see this hold the 50-day and 1270, which is about 40 cents lower. You can give it a little bit of buffer, but if it goes beyond that, then it is going to retest that 200-day, and we have another beat and skeet, which would suck. But until it's over comfortably, multiple days closing over $14, we can't really say that this is out of the weeds yet. It's at resistance right now.
Do you think that
it's not my fault?
Yeah, guys, never mind. Do you think that SOFI do you think the market is not understanding this narrative here, or like what did your technical say this was going like to 15 16 yesterday if you looked at it, or
not yesterday? So again, why SPY was so important, it was last week, Tuesday last week. When I say I didn't care about what the headlines were, price action reigns for sure, right? If we were below Friday's lower, we're over Friday's high, we are going up and there are no more shorts, period, end of story. That happened on like Tuesday of last week, right? So Tuesday of last week, I was already, there are no more shorts, we're going higher. I just need a little bit of confirmation, which confirmed definitively for me on Wednesday. Was it Wednesday or Thursday? And so that we can at least go back to resistance. And resistance in this case was 14. Yes, I actually took a trade on SOFI. I think it was this day. I think I took a trade on SOFI this day here. And then I ended up closing like a trade. And then I ended up closing it quickly because it popped up and then it got a little weak on me. And I was like, I'll move on. But it worked out, but I didn't make money on it because I had paper hands. But anyways, I had 1380 is what I had on my bingo card as we were breaking 1160. I had 1380 on my bingo card, 1350s.
Did you have a trade into this one going into earnings or
no? No, not through. No. So if I'm going to take a trade, it's not going to be through earnings per se. It's going to be for an earnings run up at this point. And I want to avoid that volatility. So I had $13 calls on this break coming into earnings, but I wasn't planning on holding them through.
So you sold today? And
I sold just about break even because the very following day it was looking kind of weak, and I was like, I'll move on. Okay. So like I said, it looked good. I had it, but I got cold feet, didn't keep it. It worked out, but not for me.
All right. Tessie, what the hell is going on with this?
Tesla is looking wild right about here, my friend. So everything still stays in play. Like, is 330 to 350 still a legit bounce zone? Yeah, it really is, right? So we have Tesla actually bottomed before the rest of the market, oddly enough. So we got a double bottom early here, and then we got a higher low at 223. Then we have earnings, which good. And then after earnings, I think it's like 2 days after earnings, we get this massive press, which I'm still not really sure what headline that was off or what that was coming from. But we have a huge move. I say huge. It looks huge, feels huge from 260 all the way up to $25 intraday, like boom. And that takes us right into that 200-day simple moving average, which is this red line here on my charts, which we're toying with today. So now that you're familiar with how 200-day simple moving averages work, daily simple moving averages, that's what this is. One day does not make a trend. You can easily get up through, press, and look great, and then all of a sudden fail through. That's still available. But from a trading perspective, you trade day to day, right? So it's from here to here. That's like 330. This looks like at some point we're gonna retest into this 330 area. At which point you do still need to kind of take measures or de-risk, if you will. 355 it would be upside here, but that's where the sellers. What I mean by that is where the sellers are going to come back in. Again, if you want to be a good bull, you just got to know where the bears are sitting. The bears are waiting at 325, 330s ish up to 360s. And if they can't get the job done at that point in time, well, it can go higher. But that's just one point to the point A to point B. If this is over, it's not exactly 300. It's more like 290, like just slightly underneath 300. I don't think 300 is going to be a big psychological level. It wasn't really before, but you can see there's a pretty big order block. And then downside, again, I think that everything is now dip buyable. So I am in buy the dip mode for further bouncing. And then we'll see. We'll see what.
Do you think the earnings mattered at all? And Tesla's kind of trading on just hype.
I never thought earnings mattered at all for Tesla, man. Let's be real. I was never really into caring about what the delivery numbers looked like. I don't think that if you own Tesla, you do either. I mean,
yeah, but so the TA to you is signaling that people don't care about the fundamentals anymore, or what is the TA?
Oh yeah. Well, I mean, so the TA is that it's no longer going down. It's at the top of the box right now. So the bears are sitting here, right now. But because where the market is, I think that any dip down to so there's these white lines on all my charts. Down to the 20-day or even below the 20-day, if we get those kind of pullbacks, I think those are going to be buyable near term, medium term. Like, remember, I was like, initially I was talking, okay, if I were to sell, it's probably not going to be till like July. I think something like that. So any of this kind of pullback to me becomes buyable for the further press higher. Does that mean that we have to get this? No, we don't. Can Tesla just continue to go higher? Yeah, it can. So I have to know, like, at what point do I want to sit around here and wait for a pullback that may or may not ever come? I don't know. So it, like, unless I have price action live in front of me, because this is not a market where you can kind of like take a trade and take a day off. Like, it's not that kind of market, right? We're still at risk of like any point in time we can get some wild headline that we weren't expecting and we could be right back to where we were. It is that situation here now. But Tesla's banging its head up against this more recent wall at 301, 2, 3. This is like the fourth attempt to get through. So, I mean, at this point, it looks like it's going to attempt to make it through again. Even if it doesn't on this attempt, I think that a pullback could be a little bit deeper, but eventually would likely be buyable in this instance. And we have a pretty heavy imbalance here from 360, 350 to 287. So any of this is an area on the chart where velocity, in terms of how fast the stock moves, it can move through there very quickly, just on its own, with or without a headline. Headline would be great, but it doesn't have to be there.
The Dark Gojo says, Amit, I don't have a ticker. Just tell Jason I love his TA.
Appreciate you.
There you go. Would you realistically buy the equity here or no?
Tesla's a decent size holding for me. I realistically would buy the equity again if we get this kind of dip. Like, yeah. And if we do break through here,
270, 250.
I mean, I would love 250, but do I think I'll necessarily get it? No. So in this instance, again, it's the whole market is kind of like we've made a new high. So I think that whatever this next higher low becomes is likely buyable. It could be 270, it could be 280, right? Like, so I'm here happy with what I have, but if I have an opportunity to buy some more, I will. Below 270, I'm more interested. Or above 300, I also know that we're probably going to get a 10% plus move to the upside. So maybe I'll even size up there and then trim when we get to 330. Like, I could do it that way.
Okay. Can we do TLT real quick for Chris, and then we'll go to NVIDIA?
Yeah, so I'm going to do TNX first. TNX is the 10-year yield inverse to the bonds. Long bond is TLT. This is 10-year. So this is actually coming in pretty well. So what we didn't want to see is we don't want to see bonds. And I think this chart is probably one of the most important in like the market. So this is stabilizing. We also, I don't know if Chris is familiar with this chart, probably is. This is MOVE. This is called the MOVE index. So this is volatility of your bonds. So US bond market option volatility. So this is like the VIX, but it's for the bonds. This is stabilizing finally back to where it's coming from. And seeing that's pretty good. TLT is not one that I'm like personally super bullish on. Like, I think it would be, so volatility is going to be coming down on TLT as this kind of trudges its way to the upside. $90 is a pretty key pivot. I think if you're long towards the lows, this is the first spot where you take measures, meaning you sell a little bit and you continue to hold the bag as a safety precaution, because you want to take, if it's trading, you would take some. Chris is not a trader as much.
Oh, Chris does a little bit of trading.
I mean, okay, Chris's trading is more like 6 months, where mine is like weeks.
That's fair.
Yeah. So Chris is probably not. So Chris is not validated either. And the reason why I would, if as a trader, I would actually be taking some short profits. We call this a safety trim. So I would take a little bit just in case to be safe. Because if I get a little dip that locks in another higher low, I want to be able to buy that. But I don't want to just constantly increase my position size either. But this looks good. You're at a key pivot. 93, 95, 92, 80 to me is as far as this goes. And so that would be my upside target. And I would be basically out of the majority of my position at that point, 92, 80. I understand what it is. I don't think this gets to like 100 anytime soon. That would be like you hold equity for that, because at 98, that would be your absolute maximum nearest term. So at 98, we were at 98 in October. Even if the 2-year gets a full 1% of cuts over the next 12 months, you have to be in a long bond with. If you're in TLT, I would hope that you're in equity, so you collect the dividend, or selling premium puts maybe to get that payment as well. Because if you're just in options, you're losing out on some dividends, because this is going to be a long haul.
All right.
Yeah, what it's not doing is not going down. That 88 break was a big deal. Next level is 93. I forgot what that is on the yields. But you can forecast this pretty quickly. I just don't think the only way this changes is if all of a sudden we get a cut that's not priced into the market on the next FOMC meeting, which, like I said, it's not priced in right now. So if that kind of changes, maybe this changes as well, slightly. But again, 98 maximum, 93 is your real key pivot.
Okay. NVIDIA. Obviously, it's down right now because of SMCI news, but
I don't think it's that down.
Any core technical indicators we're looking at when it comes to
I mean, it's a higher lows too, right? So I actually think NVIDIA's, yes, it's worth looking at. We do have some kind of choppy structure. This is the level that I'm really interested in. It's 104.41. This is that last low here. Look, even though it's down right here right now, I think NVIDIA is kind of like it's show me story right now. SMCI is not going to be a good look, but I want to see this start to flip, and I think we are, right? So as close to 100 as you can or below. The question is, can this go to 50? Dude, it can. The technicals would support it if we have new lows happening. But as long as we're holding higher low, we do not have a lower low. And as long as we can say, all right, we're starting to consolidate into this kind of area, we're not going down anymore. If that changes, again, could it continue on down this full channel downside? Yeah, it can. This one, unlike the broader market, isn't exactly out of its downtrend. So this is the channel down, these two white lines that NVIDIA has been in. This takes it all the way back up to like 118s, possibly even up to 123s on a potential breakout. But this is a moment in time tomorrow, this week, where the bears, honestly, if they were alive and well, they should be able to take it down again. And if they fail to do so, well, that's bullish. It means in the medium term that we would have to go higher before they can take it down lower. So between now and then, that 104.41 is that near term kind of pivot. You can line that up to the like general lows here. Longer term, this is not a good chart, right? It's not a good chart long term. You're finally over the 20-day, but you really need to get, this has to be the low. Like this really, you want this to be another higher low. But as long as we are setting higher low, where is your next higher low going to be? You really want it to be right here. Anywhere in here along this trend, this trajectory is fine. But that's what you want to see to start to get a little bit more comfortable. This one's been a laggard for whatever reason. But again, we have Microsoft, Meta, Amazon, Apple all reporting. Those are all going to be impactful to NVIDIA's business. All we had was Google, which was a good report, by the way. And I don't hate, dude. I bought Google, man.
when before earnings.
No, I just bought it.
Okay.
Like I had 157 on my, and I say it begrudgingly because like, dude, I'm not a Google fan, but like this one this morning, like I had like 157s ish area. 157. I'm like, all right, I'm going to nibble. It gave back the entire, did you notice it gave back the entire earnings move already?
Everything.
Like in 2 days. Yep. This is your earnings move. It gave it back. So I was like, fine, I'll get a little bit. Because I honestly do believe this is all dip buyable based on the initial SPY like analysis of like, look, we're higher on tariffs. I don't think tariff headlines can make this go significantly lower or even to the lows. I think it has to be something else. Yeah. So far, I could be proven wrong. But the only way I'll be proven wrong is if it's, making a new low. And I just like low, higher low, higher low, higher low, higher high, by the way, lower high, equal high, higher low. This is what we call a change of structure, which happens to line up literally right there. There.
I think from a fundamental perspective, the market doesn't think this is an AI name, which is stupid because Sundar spent a lot of time explaining why they are an AI.
The cheap get cheaper. That's what's true. It's not getting any credit but I don't. I struggle to fight with my like technical internals and like, okay, this is cheap. It's cheap, dude.
No, I agree.
It's cheap. Is it deservedly this cheap? I don't know. I don't think so, but it was better than I was thinking, at least from like, yeah, it could have been a lot. Like, dude, it wasn't even that bad. Like, it wasn't that bad. I don't understand. I think the market's still just a little bit on edge, but eventually I think this gets resolved.
Okay, can we do hoodie?
I'm not buying hoodie.
You're not buying hoodie.
I had a handful of these 38 puts that I'd sold, and I was really hoping to put the stock. I sold these 38 puts at like $5. The thing freaking traded to 33. I'm sitting there in a drawdown on my 38 puts for April. Even like I was like, even here, I'm like, okay, I'm happy to get assigned $40. I'm like, go ahead, take me. And it never came, dude. So I was honestly thinking this day, this is again 39.60. I'm like, dude, this is, or no, it was probably this day. Thinking this day, it didn't take me. It didn't do it. I have not opened new 38 puts yet. I don't know that I will, but
how are you hedging your position and protecting it tomorrow?
I've trimmed it, right? I trimmed it already, like because of this early volatility. I remember I sold a bunch at 38. And so for me, selling the 38 puts was like, I want to get back in a little bit. They never gave it to me. So I don't have as much as I had before. I'm kind of sad about it, but I'm not going to chase it up here either. So I'm not hedging it. I'm just like, if I get it, I'll buy it again. But I'm not going to chase it either. I'm really like, could I chase it at like 40? I really wanted it. I'm a little heartbroken. I really wanted it lower.
I think they're gonna have a good quarter. The problem is we did the analyst expectations last night. Tanner, Roy, and I aren't getting to 920 million, and that's what the analysts want. And I don't know. I just don't know how they put up those numbers. So I feel like it's gonna be a miss unless we're just being too conservative. And if that's
well, I'll buy more then if that happens, right? Because like, what I know now is like the beta on Hood has been elevated. It was not this level of beta before, and at these prices, it has been elevated. But at the same time, I'm like, I can easily see this whole area. This is current support, but it's a big, wide area. And so for Hood to chop around like this, I'm fine, man. This is going to look like Palantir. It's going to be like $60 and then it might sell off. Who knows? And then it might sell off to 45 and maybe I'll pick it off on a daily DCA at that point. But I mean, you guys sound really bearish, but I just love the company, dude. What about like, did you hear from Vanguard that, who was it? Vanguard, right? Saying like retail has been like, stoic's not the right word, has been like steady, not really sold a little bit. But then Vanguard says retail starts buying while institutions have been selling and more panicky.
Yeah, it's not just Vanguard. It's JP Morgan. I mean, all the flows are basically saying retail bought the dip. Even Basent said that this morning that retail's buying the dip.
Yeah, so I'm getting that over and over and over. I don't see it in the flows, but I'm seeing some flows that were outflows, but I think the storyline has been retail bought the dip, institutions sold it. And so that's your offset. So we'll see what Robinhood has to say. I'm legitimately more like into listening to what Robinhood's commentary on the trading and like them being number one in their category for a bit, right? And then like how is it going from their perspective, from the trading front? I think that commentary is going to be interesting for the whole market, believe it or not. So they might be someone that people start looking to in terms of like, where's the rest of the flows coming? Look, we're coming in on on $50, man.
Yeah, I mean, tomorrow it's the most confused I've ever been. Last quarter we knew it would be an epic quarter. It turned out to be. The stock reacted in an epic way. This time it can be an epic quarter, but is it epic enough for expectations? And even if it is,
It doesn't hold.
Yeah, so it's
So even if it is, I just wish you would have the same kind of like feeling about Hood that you do about Palantir. You're like, I don't care. I'm just going. I just love it. But anyways, I think technically it's in the same kind of tough spot that Palantir was at 90 just recently. Whereas like, even if it pulls back, if there's a light pullback, like to like 40s, like low 40s, and the market stabilizes and goes higher, that's just going to be another higher low that's viable, technically speaking. So I'll let the bears continue to do what they want to do or what they try to do. But if the bears are just in general continue to run out of steam, you know, could this be a moment where like, yeah, does the market go from bear market to fake out bear market and turns into a bull market again? There are some stocks like Robinhood, we're taking too much time, that are already pointing in that direction, right? So like I'll just do CrowdStrike.
Yeah.
So just to move on, I think Hood's commentary is actually going to be more important than it has ever been. And I think that will elevate their status in general as they get more and more recognized in the market. Like CrowdStrike, this double bottom, we looked at this a couple weeks ago. This thing is, I mean, it's right back to where it was, right? Before that last earnings blip, which by the way was 395. It's higher than it was on that last earnings report. So there are stocks out there that are in the tech sector still making highs or very, very near their highs. For things to get choppy up here, I think is fine. But it looks like for all intents and purposes, these look like they want to make new highs. I mean, Netflix, what a loser, right? Like to have sold thinking that I was going to get deeper. I was like, I'm going to get 700s. I didn't get back in this. Now I'm stuck in a rock and a hard place on this thing. This is why I don't sell. But yeah, just like blasting off through this area. This thing looks like it is going to try to go for that 1250, which was what I was looking for way back when. But it certainly looks like that. And again, Netflix After Dark still hasn't been released yet. So 1 trillion, here they go. So anyways, give me another ticker.
So the conclusion on Hood is you're scared for earnings because you just don't.
No, I'm not scared. My conclusion on Hood is that I don't have as much as I used to, but I'm still waiting for some kind of pullback so that I can get more.
Got it. Okay, this is the last main ticker, and then after that we will get into tickers in the chat, so you guys can start putting tickers in the chat and we'll get through them. But last main ticker is Rocket Lab.
Rocket Lab 2130, I believe it was, that we had that key level. Actually got over it. Let's see what it is. Ooh. So you're right there. This is constructive. This 2130 comes from the all-time high, 2021. As it was coming in, and I was watching this too, I was like, "Oh, this is looking constructive again." Constructive. So it's technically getting into a squeeze ahead of earnings. Is this it? I don't know. You don't want it to lose that 2130. If you lose that 2130, which is this lower level right here, where it hit its head, kind of like over here, that one, and where it was like kind of launched off of. Ideally, 2255 is where you hold, which was that prior zone over here. But I don't think that's that important right now. What's more cautionary is what we call like a look above and fail. So in this kind of consolidation here, you are now definitively out of that consolidation box. You're over it. But if you get what we call look above, you look above resistance and then you fail below resistance, that could be a deeper pullback that could put you back to the bottom of the zone, but that's it, right? Until then, you have 1 day closing above at 2250. You really want to see that 2130 level act as continued support, which I think it, because of earnings coming next month, I think it will, assuming that we don't have any kind of like new headlines that change the story here. Because this is setting up for a bit more of a squeeze. What's the short interest on this? Just curious.
Let me check right now, but I think it's around 15. Let's see. Rocket Lab, 15.9.
15.9.
That's pretty high. That's not like.
Yeah, it's not horrible. And so like, here's your prevailing, your downtrend, right? From if I connect these tops, it's out of that downtrend. So to let it come back down, that's fine. As long as it holds in this general area, that's perfectly acceptable to go back into the 28 range. But this broadening setup here is still here. That's the 40s. But again, you have to go one step at a time. I don't know where the valuation would support this, but one step at a time would be up to 27s. Cool. You're muted.
Sorry, I was muted. Let's do grab. Because everyone's asking for one.
So I forgot to sell grab. I bought it 2 weeks ago or so. Remember I said I bought this.
Yep.
And I'm like, I haven't sold it because I only had it up to like that for this area, but it's at resistance now. This is where I should be selling it if I'm trading it. So I'm like, do I trim a little or not? But you're at resistance. This is a no touch unless you're over 490s at this point. Like I need multiple days closing over because this is kind of sketchy area.
Why don't you just sell it right now? Or...
Should I?
You got in at 370 or something, right?
No, it was it was under, just barely under 4. I was like, I could. Let me see, what the hell? Which account?
I mean, you got your pump. You got a 10% move.
I know I did. So it's like it's up like 18%. So like,
it's either you believe in the earnings or
no, it's not. It's so what it is. I'll tell you what it is from a technical perspective. If it can get through this, then I have another 20% upside.
Yeah, but
if it can get through this 486, which it's tried two times so far, it's getting tired. So like I might put a stop at 465 on partial.
But you're not going to be able to do that today.
I can put the order.
No, because they don't trade after 8 p.m.
No, what I mean is a stop order so that it's working during the market because I'm not going to be watching it.
But what if it tanks way below 460 today?
You mean
stop order?
You mean like in the
after hours? Unless you put your stop order for exactly 8 p.m. right before the market closes.
So it'll be okay. So then, how many percentages is this? I mean, it's like just get out of my it's like get out of my party if you're not a believer. This is 5% down. So what I'll do is on a quarter of it, I will do a 5%. I'll do a 6% trailing stop.
And again, you're trading it, so it's good to take your profits here, right? It's not something
6% trailing stop. Good to cancel. Send on a quarter of it. Done. But I like it if it can get through.
But the if it can get through is contingent on earnings. That's why I was asking about earnings.
It's right? Contingent right now. It's contingent on a pre-earnings pop because you still have mid-May. So like if the market decides to turn around, and then at that point I'll just trail out. Like if I can get I mean, it's a decent pop.
Yeah, you got a 20% move, dude.
I wasn't exactly expecting that much. That's why I'm like, well, it's still hanging out. It's still hanging out. I'm happy with the trim.
Okay.
For now.
The upside for people, you're still thinking is around that 550 range, right? I think that's what you said last time.
Right now. Yeah. Well, yeah. So like this purple line is the 200-week simple moving average. Let me just go to weekly. Yeah, it's like 550, but on like some crazy breakout would be like 6s. And you want 9s, right? 10, 20.
Yes.
In a couple years.
$10 would be beautiful.
Like, so what if you get it? What if you get it like immediately?
Well, the spreads are, I'll definitely sell some of the spreads, but they're not going to be full value until 2027. So, but this thing has 4 billion shares outstanding. I'm not going to get it immediately. This is going to take some time.
Yeah, I'll put it to you this way. On equity, on the balance, I'm not going to go red on it. Meaning like I'll put a stop on the balance so that I don't go red. But
right.
I'll let it ride. At this point, it's not, I mean, it's constructive. It's constructive, man. He's mad at me.
No, I agree with you. If it's a trade, you should take your profits. Like you're not a long-term investor on this, so there's no point.
No, I'm not a big into this guy.
Yeah,
just because I'm not. It's not this guy. It's that it's like international.
Yeah, whatever reason you have. The point is, it was a trade. You made 20%. Like, yeah, he does know earnings are today, guys. Jason knows earnings are today.
I do not know earnings are today.
Oh, well, that's why I kept asking about earnings, brother. Like, it's today at 8 p.m. or 7:30.
I did not know it was today. Shit.
That's why I said your stop loss is not going to work because today Grab doesn't trade after 8 p.m. So, like, at 7:30, it's either going to get triggered or not.
God damn it. Well, I still don't think I'm going to go red. Now you're making me think. I thought this is why I hate TradingView. Did you not see what TradingView is doing right now?
It's not TradingView. It's Robinhood, Fidel, all those websites. They messed up the earnings date on this. All of them.
They did.
And everyone's like, "What do you mean it's today?" I'm like, "If you go to their IR page,
well, thank you.
It's today. It's today." So,
oh God.
Yeah, I thought you knew. That's why I was asking about it.
No,
yeah,
but I appreciate you giving me the heads up.
Yeah.
Announce. Oh no. Anyways, I believe 29th. There it is.
Yeah.
Are we doing this? Maybe I can.
I mean, I think the wifey's gonna get mad if you stay that long, but I'm doing it, so you could stay if you want. But
all right, let's move on. This technically it's holding now. It makes a lot more sense. It's at a pivotal level. I did not realize, and I don't know that the market really. I did not realize it was right now.
Yeah, that's why you kept saying 486. I was like, yeah, but earnings has to get it above it. And look, they could have a crappy EBITDA margin and sandbag again, and this thing could tank back to 420. Like we could easily see that. So,
I mean, yeah, 420 exactly, but that's still over my cost basis, I guess. Would I just be in for the ride? Maybe. So I'm looking. It's a 70%. It's a 70-cent implied move.
I think that's about 10%, if I'm not wrong.
Yeah,
a little bit more than that. Grab guys 730.
11% last quarter. So this looks like 5 to 10% mover on average. Actually. Now you got me thinking.
Yeah, I'm happy the chat reminded me too. Otherwise, I wouldn't have told you. But yeah.
Really?
Yeah. Well, I knew there was earnings, but the chat was saying Jason doesn't know it's earnings, and I was like, no, he should do it. But that's when I said.
I did not know. So thank you. All right, let's move on because you have Grab earnings to cover.
Hymns.
So I did a stream yesterday, and this was like the last chart that I looked at. I'm like, this thing looks really good. What I'll do is, this is a setup, and I think that if you see this type of like view setting up. This is what squeezy is going to look like. So here, like you're holding, your broader downtrend is starting to break. You just got that little peak above, and you have a catalyst ahead of you, earnings, and you're now 1, 2, 3, 4 days over the 200-day simple. Now a couple days over the 20-day simple. This is the setup that like the market in general, I think, is going to turn a corner for the near term. And so as you're looking across the stock market, you might be able to find a lot of laggards that have a similar setup to a HIMSS. And looking at this, I forgot to take this stupid trade. It was 31 calls. They were hitting the tape fast and furious, like heavily yesterday. My bad, but it just squeezed like boom. You get this huge move to the upside out of the gate. I don't even know if there was anything to do with headlines. To me, it wouldn't have mattered. The technicals were like, it was one of the better looking charts in the market that day, yesterday. But now the whole move has happened, and I think it needs to take a breather. But what's the short interest? Do you have an updated short interest? Because I think coming into today, I believe it was like 35%. And my gut is telling me that they actually got shorter.
I don't have the update, but yeah, I have 33 from last week.
33 from last week, yeah. That's how these type of stocks would typically trade. It needs to hold 37. If you like it long term, 25 was the downside target. You hit that, and it stopped going lower. And then this day you got this is a squeeze. So it's not typical for this to continuing on. But it will if it gets over, call it like 37 50s. You basically have this area. That's 38, sorry. So 38 is kind of like that trouble zone right in there. But if you get like closes over or kind of like looking sideways into it and not breaking down, where the bears have every opportunity, but they can't continue to press it down, that's when you'll get another one. But they're short-lived and you have to take profit quickly. Because like if you didn't sell this morning at 42, I mean, it's not bad. What do you want? 25% move overnight, but
yeah,
those things don't 50%, move in the after hours. You can't expect that to hold. You have to expect this to take a breather for just a minute. All right. 6.8 million shares available this morning. Now 2.9 at close. Yeah, so they got shorter.
They doubled down on the short. Okay, Meta is tomorrow. Can we do Meta?
I think Meta, Amazon, Microsoft, maybe even Apple. If you want to get long into these, so first of all, Microsoft and Apple are not typically big earnings movers. Those are not things that I would trade on earnings. But Meta and App and Amazon, they do make pretty large moves during earnings. So, this is, here we are. This is our broad information to the downside. We actually held, this is the old chart. We held this 530, but we're not over 580. I think that this technically sets up to a point where like you could into this area, into that 580s, but that's where the bears are waiting, right over here. I think this one is, if you don't own it and you wanted to, you could probably do a starter ahead of the print, like a 10% start, 20% starter, something where it's like, okay, you nibbled at least, and if it goes without you, then at least you had something. And if it doesn't and it just completely tanks, you're not really hurt, and you have a lot more ammo to continue and wait for the lows to come in. That's my gut. But until then, it's close to 500 or below. Now at this point, after you have, it's again, we had this double bottom 485, I think it was.
Yeah. Well, so now that Snap didn't give guidance, I am kind of scared that Meta and Reddit might not either. But I also think that's just Snap being stupid.
Yeah, that's Siegel or whatever. Like,
dude, how are the tariffs?
You've never been his biggest fan.
No, I hate the guy. I mean, I don't hate the guy. I just
Wow.
I hate the way he acts, especially with stock-based comp. But I also think the stock's cheap, and I think that.
But are they profitable?
They're 8 cents away from profitability.
Okay, so technically they're not profitable. It's Meta's profitable.
Well, Meta's a whole different ball game than Snap. I mean, it's night and day.
Right.
I just felt like Snap. They beat on every metric. They didn't give guidance. That is the issue.
Yeah, but I don't think it's fair to compare Meta to, like, they're not in the same class. They're in a different weight class. But the market might not care, and the market may damage them. I feel like the stories are two different storylines, though, for Meta versus Snap. Snap's still trying to get to profitability. Snap's still trying to grow their user base and not pay so much in SBC or pay so much to the creators. It's a different. They're in a different.
But they beat on EPS by 40%. So that's it was a great quarter. It's just that guy.
Listen, everybody knows that you're just frustrated because you bought a bunch of Snap shares ahead of the quarter because they always do this, and you were ready to sell, and it sold.
Well, yeah, obviously I wanted to sell, but I'm more so frustrated at them not giving guidance. Like, forget.
Oh, did you actually buy equity?
Yeah,
I wouldn't have blamed you if you did. Like that it actually looks great. At the lows, coming off the lows, market like doing well. But this is exactly why, dude. Snap looked like you should do that from a technical perspective. But this is why why earnings will just mess up your.
It's always a gamble. I mean, when you get it, like I bought Hims yesterday. That was a gamble too. Like I didn't know it would go up 40%.
Did you?
Yeah, I sold it in the morning. But
wait, did you? Were you on my stream? Is that why?
No, I bought it because my friend Nate kept texting me last night to buy it, and so that's why I bought it.
I bought it.
Huh?
Was it a headline or no?
No, it was the Novo. Yeah, they partnered with Novo Nordisk. That's why it went up.
Oh,
why do you think it was up 40%? You think it was just random?
I mean, yeah. With there were 31 calls. I don't know. Like, again, I can't keep up with every stock. I keep up with a lot of them, but if the technicals are there, they usually support something's happening. Somebody knows something, and they start to make a move before sometimes a headline actually shows up.
Okay, so do we do Snap TA? You want to do this right here?
Well, it's still at the lows, right? Like it's right here. It needs to get over 830 to like not be in the gulag, dude. Like, but you know, this is still at 8 and change. Are you selling? I don't think so.
No, I'm buying at under 8. I'm buying that. Like I'll just.
That's what I'm saying. Like I don't think you're selling under 8.
Yeah,
it just doesn't seem right. It doesn't seem right. Can it go lower? Sure, but it would be 740s. It's not. The thing is, like, I don't know that they're going bankrupt. Maybe I'm wrong.
But look over the past 5 years. The last time they hit below 8 was 2023.
Yeah,
we had April 8th.
I get it, right? Like I said, like the chart would have supported to go long ahead of the quarter one more time.
Yeah,
and sell it on the report. The chart supported that for SOFI. Honestly. So I don't think you sell it. Hopefully you're not in options. And if you are in options, there were a lot of $11 calls notable $11 calls that were going out yesterday or today, but they were cheap, right? So like, that's how that goes. If you're going to play earnings with options, then you got to keep them cheap. You got to keep your size down and within manageable reason. And it is what it is. But equity, I don't think you're selling here.
Yeah, and guys, for those that are using Hood for their EPS beats, don't trust Robinhood. They always get the EPS estimates and beats wrong. Use Bloomberg or use like anything else besides Robinhood. Like I love Robinhood, but they always get it wrong. The market thought they would lose 13 cents. They lost 8 cents. It's a 38% beat. So the market did not expect them to be profitable by 3 cents. And the reason they're down is because of guidance. Because it was up 7% before the market figured out there's no Q2 guidance.
Yeah. How much time before the next before the call?
Before which call? Grab?
Yeah.
About an hour. Well, an hour 30. So if
right.
you
we could do more, but if you guys are asking, and so this is a perfect example of why I avoid technical analysis ahead of earnings like the plague, because your technicals, dude, the technicals looked really good on Snap coming into the print today. And this is something where like an earnings report will over like that's going to be greater than your technicals. Basically, technicals will reset when you have some kind of fundamental move like that. But you know, could you have seen, all right, you know, you're losing 880. This is happening probably too fast for most people. That's when you would have wanted to have a stop on it. But you know, Amit's still learning how to use those.
So okay, so what are you saying? Do you want to do a couple tickers and that's
we can do tickers? What I'm saying is avoid Microsoft, Meta, Amazon, Apple. Those are not going to matter right now. If you want to look at Google, you want to look at NVIDIA, you want to look at Tesla, we can do that. The only which we looked at all of those.
Let's do AMD because everyone's begging for freaking.
Yeah.
Dude, why do you guys love AMD so much?
Because AMD is like stopped going down. You're like, holy crap, but it's not going up yet either, right? So that's the big problem. I can't believe like AMD, man, AMD 70, almost 75. Like, dude, yo, that's cheap. From compare that's low compared to where it was. I don't know if it's cheap or not. But it's $100 is a big, like this is a big pivot. So I think it tries to do it again. So they have, okay.
I think in 2 weeks they have earnings.
Yeah. So May 6th, I think that again, remember I mentioned the 20-day simple moving average. I think you throw on your 20-day simple moving average and as close to that as you can in general for the next couple weeks, hopefully, would be kind of where you expect things to sort of bottom and potentially catch a bid, if that makes sense, which is above 90. It's more like low 90s, but this is taking 1, 2, 3, 4 long shots at this level. It's again, so this is a perfect example of like the bears have the opportunity right now. The bears have the opportunity to destroy this chart right now. It's like sellers, or like before buyers, they're selling. But yet it's not breaking down. So if you have a bearish setup from a technical perspective, but yet it fails to deliver, the bears fail to deliver, they're not ready to push it down. I don't know. Worst case scenario, I think this goes sideways for the foreseeable future, which, you know, is very possible. But if you like it, I think as close to 90 as you can. Nibbles are ideal, but you can't keep this below 85s because that's not going to be fun.
We did HIMS already, guys. We did HIMS already. I know Trump is live, but we're also doing TA. So, I mean,
we do Trump.
Do we listen to Trump? I mean, he's going to talk about tariffs.
So like it's like this, a blanket statement in general. I think things become viable. We have PCE tomorrow, middle of the day. We have non-farm payrolls on Friday. Just like, you know, this was a non-farm payroll day. I think how the market digests this coming Friday is going to be crucial. And whatever happens, in the meantime, we could go back up to 565. But just understand, if we do go back up to 565, we are all the way back to liquidation day highs. And, you know, is that a point where people will likely put protection back on because they could be like, well, last time we were here, it would have been smart to have had some near-term protection. It might be. And that could create at least a bit of a sideways chop which in all reality would be somewhat like constructive, and chop somewhere in this box. If we go too far too fast, get up to 580s, look, you get out of there. You got to sell that. If you see near 578s, that's not going to hold. You got to take that profit because you're going to get an opportunity to buy it lower from a technical perspective.
Yeah, and one of the reasons Jason is saying all this as well is because it is kind of pointless to do a ton of TA on these stocks when they have earnings in the next week. So, I mean, whatever he said,
it's not pointless. Like, and like, there are a lot of stuff we're talking about is 2 weeks out. So between now and then, it's perfectly fine, especially if they're option traders. Which, by the way, is a little sketchy right now too, because you look at the VIX. The VIX is under 25. Did you have you talked to them about the breath thrust?
Well, yeah, we heard Tom Lee talk about that.
Tom Lee talked about it.
Yep. I
mean, I think that's kind of a crazy deal.
It's worked 100% of the time.
19 times since World War II, 100% accurate. You know,
bullish.
It's bullish. But yeah, I think.
So how about we do like 5 more names and then we'll go to Trump and then that could be it. Okay, so 5 more quick names. TTD. A lot of people are asking on that one. Trade Desk.
Oh, it bounced. So all of this is very similar, right? So like when I say keep this setup in mind, that kind of HIMS type setup, in general, the market's at a pivotal moment where it's like the next dips, like on TGD, if a dip gets held in the 50s, that's going to be bullish. You do have on this one, like you have May 8th. So you have time, like if you're another week, can this go and squeeze ahead of earnings? They'll be like, the market's gonna be like, okay, this is too cheap into earnings. I don't really know the TTD story, like why it's having such a hard time. The chart has stopped going down, but so that means there could be upside, but it's limited to 56.75 is what it's limited to. Downside limited to around 50s. Next.
Intel.
This thing was so low the other day. I saw it at 18 and I was thinking about it because I remember charting this with you and 18 was the low. Like, where was it? It was from over here. God, this is so ridiculous. I feel like charting Intel is like, I feel it almost feels like charting Ford, dude. Like the thing's been Ford's been $10 for like 30 years.
Yeah.
I need to buy another, I need to put another computer together. And my guy was like, you should buy this Intel graphics card. I'm like, what? I should what? So I was shocked at his comment. But it looks underwhelming. It's not yet. It's the same. It's similar. It's not going down quite yet, but the upside is still every time this thing pops, it gets sold off eventually. Your pop could be to like 2350s. This would be one I think like if you like to sell covered calls, probably not a bad one on really green days.
Okay. Uber.
Is it in the box? Top of the box. This was looking good until it wasn't, and then it was again. This thing is wild to me, dude. 81.86 still upside on this. This is a little sketchy from a near-term perspective. High, lower high, but not a high or low. All of this sets up really. It's like, is this the moment that you want to press your bet? Not necessarily. Can a dip be buyable? Yeah, so that would be down to 75s on a quick push. It's interesting how tight these SMAs are getting, simple moving averages. But to be fair, they've been this tight for a month and have yet to fire off in either direction. The longer this stays up here towards 80, the more constructive the chart becomes. But again, 87 would be that first kind of like stop. And then if it does get up there, then you hold 81, then you're out of the box, but you're still definitively in the box, technically at the top of the box. So technically this should be resistance right in here, which means it's a weight. And I don't know that. Yeah, earnings is going to have to be the one thing that pushes this out if it does. Technically, this has just been too stuck to really think it's going to go or that it's ready. All right.
Okay. Celsius.
So this was the breakout level, 31 and a half, 31 and change, where I sold it. Now, if this pulls back and holds a little something like this, I could be interested. 31.55. If that ends up holding on a dip, that would be the best case scenario for a longer term like consolidation. But again, this is the same story it's been. It's 2 years, give or take, probably going sideways, albeit sideways could be a massive range. Like, what are we from the lows? I mean, you're 80% up from the lows. Could you believe that SOFI, by the way, was up 50% from the lows? Did you notice that?
Oh, from the April 8th? Yeah.
Yeah, that's crazy. There are some things I look across the board. I'm like, these things are up so much.
Palantir is up 76% from the lows.
What? Yeah, like you look at that. I mean, Robinhood probably too. It's like it doesn't feel that way, but at the same time, you got to realize like it's that way. So we're a bit extended in general. So it becomes more of like what we want to see across the board is we want to continue to see higher lows get locked in, which doesn't mean you buy breakouts. It means that you wait and you watch to see if things can like come back down and hold and stabilize.
Yeah.
I don't know what this Venture Global ticker is. What is it?
There's no point of doing TA on this. It's a Chris pick, but Chris has said multiple times it's a decade-long hold. So
okay,
you know, people.
I saw someone was talking about Viking Therapeutic. I don't usually do these, but I would say like, okay, this chart is starting to look constructive. This is way down in the dumper. That's another one of your hymns looking charts.
Yeah.
Not something that I would go near term on, but you're out of the channel.
Right.
Looking to kind of start breaking out longer term.
I think last one is just kind of Bitcoin micro. You could do Roblox too, but Bitcoin MicroStrategy as well.
Roblox not quite ready. Again, higher low. Look for a higher low. You definitively have a higher high. So high here, higher high. Now you want to wait for where's your higher low going to show up. It's all going to be around that 20-day simple, which happens to be around 60. But again, earnings coming. Bitcoin. We got the inverse I caramba. Do you remember this? We looked at this. It was like, this is your Bart Simpson I caramba, right? Do you remember looking at this? He doesn't remember, guys.
No, I remember. I remember Bart Simpson. I remember that one.
Okay. So this is your Bart Simpson I caramba. And then play it forward. We get an inverse. You're back up to actually we hit up to this 94. It's going to be your resistance level for now. And you end up getting an inverse I caramba, which is this little box right in here, which we talked about. But where this took us is basically, so remember this breakdown, watch this breakdown as you get closer to it. Let's see if I can get a line before it gets there. There's 95s. So squeezy. I'm just in replay mode. Bears have control. They can't push it down. It's failing to go lower. Come on, computer. Go faster. Here we go. Now you get that push. But where is it pushing to? That was the breakdown right here. And now we're live. So that's the concern right here, 95 and change. I think that's probably close to the implied move. Again, one more setup where like you can get this little, Bart Simpson. And so where does that put your higher low? It puts it in that, 90s category. Technically, this is just very neutral with a little bit of overhead supply. It could even get to 103 and still be neutral, but it won't be until it gets over that 103 level that this becomes like pretty bullish. You do have a bit. I think some people will probably be looking at like, oh, we finally broke out of this downtrend. Yes, that's accurate. And I'll do the Palantir thing. Like if this goes, okay, cool. It's not until you're over this like 104, 105 level that you can really say this is in the cards to trade for, which would be like 145s at this point, if that's in the cards. Otherwise, you do have to be pretty cautious. This is going to be a lower high, which could probably get rejected. But if it does, you want to see that rejection hold that past breakout level to confirm a higher low, which actually would be bullish.
So the MSTRs, the coins of the world, you think they are not in the position to necessarily bet against Bitcoin keeps doing?
No. This is different than the altcoins. Altcoins don't look as good, not nearly as good. MSTR is its own deal. MSTR is not a short anymore, man. Is not a short. My last area short would have been like this, was like that 340. It's over. That short's invalidated at this point. It's not a short. It is kind of like target acquired, so it's not really pressing that bet either. If you like it, did you like it? And you probably like it up to 1,000 would be my first guess, my best guess. Did I say that? It's not one I own, obviously, but chart is no longer bearish.
Okay, so just as a Bitcoin OG, kind of the question here as well for MicroStrategy is, are you starting to feel Bitcoin is becoming a real hedge?
No, I think that the market is. What I would say is for sure Bitcoin doesn't have any tariff risk, right? So from that perspective, yeah, there's not anything to be worried about there. It's the concern is and has always been, if the market is not a risk on scenario, then are they going to be taking that kind of risk? I don't look at Bitcoin as a safety play. Just I never really have. That was not, as an OG coming from the OGs, it's not what Bitcoin was made for per se, right? So like to think about it that way is a paradigm shift that, I just don't really subscribe to. It's not what it was about necessarily, but can it be? I guess so. It's just not why I owned it, or bought it rather. But again, look, it had every opportunity to break down. It didn't break down. Now it's back over. It looks like it wants to squeeze. I don't think earnings matters on this. This is all. MSTR could front run Bitcoin like it has in the past. It's possible that it front runs it. So MSTR can go even if Bitcoin doesn't go, because they're going to assume that it's going to happen anyways, which is odd. In terms of like Bitcoin dominance, no, this is all Bitcoin all day. It's not the altcoins unless you're Fartcoin, which 70 billion market cap or whatever. I don't know, man. I don't even know how to buy that if I wanted to.
I think you got to go on Phantom and Solana, and it's ridiculous.
You got to just swap.
Yeah.
I mean, so Bitcoin dominance is gaining Momo. That's what this chart is. So Bitcoin dominance is getting pretty hot, which means that's where most of it is. I think that's usually how this rolls in near term. So like that could mean short your alts, short your XRP, short your Solana, while Bitcoin goes and does its thing. And then when Bitcoin stalls out or starts to pull back, then you can get back in. But that's usually how this plays out.
All right. We will go to Trump now. Jason, are you leaving or you want to stay and watch?
Rich, if I buy MSTR, it will go down. I agree. If I buy MSTR, it will go down. Am I a fan of Bitcoin ETFs? No, I think I want to be a listener.
Okay, let's pull it up. Let's pull it up. Let's see what he has to say. Here we go. We're going to Trump.
The impossible. He said it was impossible. He didn't know what the hell anybody was talking about. He said it was impossible, that the president had no power to stop what was needed in the form of legislation. He needed legislation. He had no power to get it. But it turned out that all we needed was a new president. Within days of taking office, I signed the Laken Riley Act. Laken Riley, beautiful Laken Riley, who was killed by an illegal immigrant, viciously, violently killed. But I signed the Laken Riley Act to facilitate the expulsion of dangerous criminal aliens. And when necessary, we had to put them in jail. We couldn't take a chance that they'd come back in again. In recent weeks, ICE, who are great, these people are great, has arrested dozens of child rapists, along with murderers, kidnappers, drug traffickers, and thieves, and frankly, people from mental institutions. We've designated 6 murderous Mexican drug cartels as foreign terrorist organization. We have also designated 2 bloodthirsty transnational gangs, MS-13 and Trendiaragua, TDA. They've been designated the highest level of terrorists, and that lets us do a lot of things that you wouldn't be able to do. We got to get them out of here before they kill more people. They've killed plenty. My administration has increased arrests of known and suspected terrorists by 655%. Is that okay? We tried to get it higher. We tried to get it higher, but the courts are giving us a hard time. Can you believe? You know, I won on the basis of, I think the number one thing was on illegal immigration, the border, the people pouring across our border that are from all over the world. They're unbelievably bad. In many cases, unbelievably bad people. I think that was the number one thing. And now the courts are trying to say that, you know, that doesn't matter. I don't think it's going to be allowed to stand. Democrats have vowed mass invasion and mass migration. We are delivering mass deportation, and it's happening very fast. And the worst of the worst are being sent to a no-nonsense prison in El Salvador. Why don't you watch this? Watch this. Take a look.
They are probably watching a video of the Salvador prison. So that's what Trump is showing them right now. None of this, I'm looking at some other streams, guys, and none of them have the video. So I would have switched the stream to a different feed, but yeah, none of them have the video. But that's why, if you're just joining, that's why there's music in the background.
Trying to come in. But while we're fighting to protect Americans, the radical left Democrats, who are so bad for this country, are fighting to protect TDA, you just saw that, and MS-13 criminals, and you don't even know which is worse, but they are the top of the line. For years, Democrat politicians did not raise one word of protest as American women and girls were raped and slaughtered by these monsters. They were raped and slaughtered by numbers that you don't even want to hear about. But the second we try to deport them, the radical Democrat Party is racing to the defense of some of the most violent savages on the face of the earth. Who the hell would vote for these people? They're racing to the courts to help them, but this is not what the people want. This is not what they voted for in record numbers. I won the election. We won every swing state. We won the popular vote, and we got 312 electoral college votes. And just this month, 2 Venezuelan members of TDA, Trinidad, were arrested in Washington state for kidnapping a 58-year-old woman driving a power drill through her hand to extort her bank account information, shooting her, leaving her for dead. And miraculously, she just survived, but she's not feeling so well. In January, Trinidad member in Chicago kidnapped 3 women, took them in an alley, lined them up, and shot them each in the head. They all died. And the FBI recently assessed that these vicious gangs have been sent by the foreign regime in Venezuela to foment violence and instability in the United States of America. Can't let that happen. And it's not just, in all fairness, not Venezuela. It's all over the world. It's all over. They come in from the Congo. They come in from Africa. The Congo, they emptied out their prisons into our country. But they come from Africa, Asia, South America. They come from all over bad parts of Europe. That's why we've invoked the Alien Enemies Act to expel every foreign terrorist from our soil as quickly as possible. Never forget the same people that we now claim we're just not taking this crap anymore. We can't. They're claiming that we're not allowed to deport illegals, and they're the ones who orchestrated an 8-year campaign to jail their political opponents. You know what I mean? They want to jail. They want to jail. That's all they can do, jail their political opponents. What they did to people is a disgrace. And now they come after us. Why are you not nice to them? Why are you not nice to them? They tried to jail your president. They tried to jail. Except for the really courageousness of a few very good judges, you know, we could have been calling you from the other side of the bar saying, hey, fellas, how about a little protest? How about a little protest? But they cheered the assassination of CEOs, looted our cities, and destroyed our property. No, they tried to jail our politicians, and they tried to jail a lot of people, many of whom didn't even know what the hell they were being looked at for. These people are criminals. If they had their way, we would be living in a third world hellhole. That's what they want. Removing the invaders is not just a campaign pledge. It's my solemn duty as commander-in-chief. I have an obligation to do it. Save our country. And that's why we got, despite the fake polls, you know, they do these polls where they interview far more Democrats than Republicans. I saw them over the last few days, and I had them checked out. They interview far more Democrats for the polls. They interview Democrats by big numbers and then Republicans by small. They say, Trump only has a 44% approval rating. Well, it's actually not bad. But when you figure that if it were a legit poll, it would be in the 60s or 70s. These people are a bunch of crooked people. No, they interview more Democrats than Republicans. In other words, they take the poll and they interview Democrats. They poll Democrats, and then they say, they try and depress it as much, just like they write bad stories. 97% of the stories written about me, think of it, were negative. And yet we won in a landslide because they have no credibility. And also, we cannot allow a handful of communist radical left judges to obstruct the enforcement of our laws and assume the duties that belong solely to the President of the United States. Judges are trying to take away the power given to the president to keep our country safe, and it's not a good thing. But I hope, for the sake of our country, that the Supreme Court is going to save this, because we have to do something. These people are just looking to destroy our country. Nothing will stop me in the mission to keep America safe again. It's very simple. Keep America safe again. And our first 100 days have also produced historic results in the battle to defeat Biden's inflation disaster and bring jobs and wealth back to America and bring them back to Michigan, okay? We want to bring it back. As an example, since I took office, the cost of eggs is down 87%. Now, right? You remember a few weeks ago, before Thanksgiving, before we heard about it, I heard about it a long time ago. Before Thanksgiving, I heard about it. And then I was hearing that I wasn't president. This guy was barely president. Nobody knew, was he president? Who the hell was president? To this day, I say it was the one that operated the auto pen, but what do I know? But I was hearing about eggs, and then all of a sudden we have a great election victory. And my first week in office, they start screaming at me, "What about the price of eggs? Eggs, eggs." I said, "I've only been here for 6 days. I was there 6 days." I said, "What's wrong with eggs?" They said, "The price of eggs has gone through the roof and you won't be able to have them for Easter." So I put our very capable Brooke Rollins, who's our wonderful Commissioner of Agriculture that you know in Michigan. I said, "Brooke, I've only been here 6 days before I heard, maybe even less, maybe 5, maybe 4. But it was my first week. And I said, Brooke, you got to save me here. I'm getting killed about eggs. What the hell's going on with eggs?" She said, "Well, you can't get them. The price is through the roof. And it looks like we're going to have a real problem for Easter. You're not going to have eggs." I said, "Brooke, that doesn't sound politically viable to me. That doesn't sound good. Because nobody's going to believe me when you get out there that it's Sleepy Joe Biden's fault. So, Brooke, you got to get going, Brooke, please." And she did a great job. And you had so many eggs for Easter, and your price was down 87% from that point. Prices are coming way down. You know, the fake news doesn't say. They said, he pledged. Now, I pledged safe borders. I pledged all sorts of things. But they said, he pledged to bring prices down. Well, that's what I've done. They're trying to say the prices have gone up. Your energy, your car, your gasoline, they have 3 states this week, a couple of days ago, that were $1.98 a gallon. So gasoline prices are down by a lot. Energy prices are down. Mortgage rates actually just went down. Prescription drug prices just saw their largest monthly decline ever recorded. How about that? Remember what you heard. Prescription drug prices just took the biggest plunge ever since they've recorded the prices, which have basically gone up, except for my 4 years. They did pretty well, but we got to know that system. The system is a bad system, but they just took the biggest dive ever in the history of prescription drug prices. Think of that. That's a big thing. I got to say it again and again, because they will never tell you that. The fake news will never tell you that. Grocery prices have gone down. Everything's gone down. And yet I saw this person on MSDNC, which I think is probably even worse than CNN. It's probably worse. Probably worse than CNN. But I saw this horrible, horrible anchor. How these people get jobs. I wouldn't hire them to do the most menial of chores. But I saw this person, he campaigned on bringing prices down. Every price has gone down. What am I going to do? I mean, think of it. Gasoline was almost $4 not so long ago. And now, Mike, we just hit $1.98 in a lot of states. Think of it. And they're saying, and you know what? And inflation is basically down. And interest rates came down despite the fact that I have a Fed person who's not really doing a good job, but I won't say that. I want to be very nice. I want to be very nice and respectful to the Fed. You're not supposed to criticize the Fed. You're supposed to let him do his own thing. But I know much more than he does about interest rates, believe me. Core inflation has reached the lowest rate in 4 years. And last month, we had the largest drop in consumer prices since the pandemic. This is all done in 100 days. Think of that. This is all done in 100 days. But when you watch the fake news, you see fake polls. Again, they poll more Democrats than Republicans. Democrats aren't going to say, I'm going to vote for Trump. And we still got 45, 44%. But on the legitimate polls, I think we're in the 60s. I think we're in the 60s or 70s or something. In 3 months, we have created 350,000 jobs. Think of that. For the first time in recent memory, job gains for native-born Americans now exceed job gains for foreign workers. This is for the first time, and nobody even knows when, Americans now are doing better than foreign workers. How about that? I mean, that's okay. I want everyone to do well, but that's okay. And to curb inflation, we're cutting a record number of job-killing regulations. We beat in the 4-year first administration, which was a tremendous success. We cut more regulations than any president in history, including 2-term presidents, including Roosevelt, who was more than a 2-term president. We cut more regulations than any president in history in 1 term, and now our 2nd term. And, you know, I don't know why. It was so important to win because they used to say, the fake news, to be a great president, you have to serve 2 terms. So now we're going to serve 2 terms. Now they've taken that one. Cross. Right? Right, Dr. Oz? Cross that one off. Cross that one off. No, they say it all the time. When I was out, they say, well, they go, thank you. Thank you. Sure. But we've ended the radical left. Well, we actually already served 3, but if you count. But remember, I like the victories. I like the 3 victories, which we absolutely had. I just don't like the results of the middle term, the results. I don't want those results, John. I don't want those results. What results? What a disgrace. If we would have had this group for another year, we wouldn't have a country left. I really mean it. I don't think we would have had a country left. And now we're respected all over the world. They're coming from all over the world to see you, President. They're coming from India. They're coming from France. They're coming from Spain. Yeah, they're coming from China, too. Yeah, they're coming from China. They're coming from all over the world to see you, President. They want to make a deal. They want to make a deal. And, you know, we'll make deals, but we don't have to. We are the ones that have the product. We are the ones at the United States. They want a piece of our product. We can just set the price, but I want to be respectful and I want to be nice. But if it takes too long, I'll just set a price. Say, you could buy or you don't have to buy. We lost, think of this, we lost billions and billions of dollars a day. Billions, not millions, billions of dollars a day. And under Sleepy Joe Biden. What's better, Crooked Joe or Sleepy Joe? Ready? A poll, a free poll. Because these pollsters are so corrupt. This is a real poll. We're going to poll Crooked Joe or Sleepy Joe. Ready? What's a better name for us to call him? Sleepy Joe or Crooked Joe? I'm not surprised. It happens. I sort of loved Sleepy Joe. You know, it just had a nice ring to it. Because he had one ability I didn't have. He goes to the beach, right? And he could fall asleep on a cottage drooling out of the side of his mouth. And he'd be sleeping within minutes, carrying the aluminum chair, you know, the kind that's meant for old people and children to carry. It weighs like about 4 ounces. And he couldn't get his feet out of the sand. And he'd sleep, he'd fall in this thing, and with it, and he'd have, you know, he's president, so you'd have cameras. He'd be in a bathing suit. Somebody convinced him that he looks great in a bathing suit. He's 82 years old. Cary Grant didn't look great in a bathing suit when he was 82. You don't look great. You know, at some point you have other assets, okay? But that's not right. But he'd go and he'd walk in the sand and he'd fall into that thing, and within seconds he was sleeping. I'd be tossing and turning and scheming and thinking and saying, how am I going to beat China? How am I going to stop the war with Russia and Ukraine? This guy could fall asleep with cameras blazing, right? Not too many cameras were blazing, but enough were blazing that you saw it. I thought it was a great ability that he had, actually. We've ended the radical left war on American energy. We've stopped their crusade on coal. Did you see what I did the other day? Clean, beautiful coal. I said, you're not allowed to use the word coal unless you say clean, beautiful coal. So you have guys getting up, Department of Energy. We have great people at Department of Energy. They talk about clean, beautiful coal. You know, China uses coal. They're opening up a coal plant every week. A massive coal plant, but we're not allowed to use it. But now we are, because last week I gave it absolute total approval. And you know what I don't give approval to? Those stupid windmills that go round and round and round. And we've ended the Green New scam. We've reopened ANWR, the greatest drilling site anywhere in the world, in Alaska, and implemented the new energy policy of the United States. You know what it is? We have a policy. It's called Drill, Baby, Drill. That's our policy. That's our policy, Michael, right? Great Michael Watley, head of the Republican Party. He's done a good job. Him and Laura, they took the party by storm, right? He had a good candidate, but had a couple of good candidates, didn't he? Michael's been incredible, actually. Michael Watley, North Carolina. He watched in 2020. He did so good for me. And, you know, he was in North Carolina. He did so great. What's the problem over there? What's the problem? Is that a radical left lunatic? He's just a child. All right, get him out. Yeah. Oh, I'm sorry. I'm sorry, ma'am. I thought it was a guy. Thank you. And she now has to go home to a mother who's a big Trump fan. Her mother's watching. I'm sorry. I'm sorry. I said he, and it's a she. I'm sorry. To keep my promise to the great state of Michigan, I terminated Joe Biden's insane electric vehicle mandate, where you were mandated to buy an electric vehicle. You were mandated within just a few years to buy an electric vehicle. How about that? And you know what? They're great, but people don't. Not everybody wants them. You got to be able to buy a hybrid, a gasoline-powered car. You can buy lots of different cars, but you can't be mandated to do anything. And I've already proudly imposed a 25% tariff on all foreign automobiles. Any foreign car, like they do tariffs. This is going to create more jobs in this state and this country. And to help these automakers bring their factories home as rapidly as possible, I've just signed an executive order to give partial tariff rebates to any company that assembles its cars right here in the U.S. In other words, if they can't make it in time because they have to do it here, otherwise they haven't, I'm giving them a little bit of a break, right? They took in parts from all over the world. I don't want that. I want them to make their parts here. But I gave them a little bit of time It's 15% and then 10% of the parts. So it's not so bad. Somebody would say, oh, well, that's a change in, but it's not. It's called a little flexibility. The guys were crying. They love it. Everything's good. But just in case we can't get everything in time, we gave them a little bit. So it's 15% of the parts and then it's 10% of the parts. We give them a little time before we slaughter them if they don't do this. Right. They're going to make so much money. They're going to have so many jobs. No, but jobs are way up. Jobs are way up. We're pleased to be joined tonight by Brian Panebecker. Do you know who that is? Of the Auto Workers for Trump. And Brian is a union guy, loves the unions, loves everything, but he knew that Trump was right. Brian, come up here, Brian. I got to see Brian. Look at the arms in this guy. Look at the arms. Thank you, Mr. President.
Thank you, Mr. President. It's a great honor to be here on your 100th day in office of your second term. And I just want to remind you of something I told you at one of your last rallies before the election. I've got it on video. I've watched it dozens of times at home. After I was able to speak, I turned to you and I said, Mr. President, Macomb County is going to win Michigan for you. And that's exactly what happened. We had a margin of victory of 70,000 votes in this county alone. Thank you, Macomb County. You know, I met President Trump 8 years ago in Novi, and we had never met before. And as I was stepping towards him backstage to get my picture taken, I knew I only had 10, 15 seconds to say something to him before we got our pictures. Fortunately, my son was standing behind me, so I've got a witness to this. And I said, Mr. Trump, we've got the keys to the White House waiting for you in Macomb County. And he kind of chuckled. He said, oh, yeah, how's that? And I said, well, Macomb County is the home of the Reagan Democrats. If you come to Macomb County and you ask for their support and you get it, you might win Macomb County big enough to carry the whole state of Michigan. And that's exactly what he did. So I want to say thank you to the auto workers, everybody who works in the automotive field, the suppliers, every one of you, the truck drivers. Thank you so much for supporting the greatest president in our lifetimes. Now, I've got a little business announcement I want to make. I hope the president doesn't mind. But when I was backstage with him earlier and got my picture taken, I said, Mr. President, I've got a deal that you can't refuse. And he said, what's that? And I said, well, I'm writing a book, and it's going to be about my political journey. I've been involved in some things here in Michigan, conservative causes like right to work and the Michigan Civil Rights Initiative. And I said, you have a publishing company, Winning Team Publishing. It's run by Don Jr. and his partner. I said, I'll agree to use your publishing company if you agree to write the foreword to my book. He stuck out his hand and said, I'll do it. That's how you negotiate with the best negotiator in the world. So listen, I got one last thing to say. All of us have a job to do. Number one, we have to win the 2026 elections. It has to happen. Sri Thanadar, that lunatic Democrat from Detroit, is already threatening to impeach President Trump if they get the majority back. But luckily, right now, we've got good people in Congress like Congressman John James over here who are stopping that from happening. But listen up. So we got to get out, and we don't have any time to waste. We got to start talking to our friends, our neighbors, our family, our coworkers. The campaign for 2026 starts tomorrow. We've got to win that election. So The work is not over. The work has just begun. November 5th was not the end. It was the beginning of the golden age. And let's all tell President Trump how much we support what he's done the first 100 days in office. Oh yeah, I forgot. There's one other thing I wanted to say in front of all these thousands of people to President Trump. President Trump, I love you.
That's great. Thank you. Good man. He's a great guy. You know, he was with me from day one, 2015, before 2016. He was there from day one. He got it. He said, we're losing our car industry. That's what he really cared about. He just said, I've had so many friends who were laid off. It's horrible. They lay us off like it's nothing. And the business went to China, it went to Japan, went to all countries all over the world. They're laying us off, sir. And then he said, we can solve that. I told him, we can solve that so fast. He's one of the early people that got it. And we've solved it. We're going to be doing numbers that nobody's ever believed. We'll be the #1 in the world again. Nobody can believe it because we have been beaten up so badly by these countries that have rigged the whole thing. They fight like hell. They're smart. Their product is good, but our product's going to be a lot better. We're going to do something that nobody believes. And he saw it right at the beginning. So I appreciate it, Brian. And he was there at that. I love the guys from the beginning. I love those early guys. Those guys are right there. They were there from the beginning. No, you're going to see numbers, and you're already seeing them. Look, you know, we have many Hondas coming in, and they're coming in. We let them build their cars here. We don't want them to build them in Japan. We love Japan. We don't want them building them in Japan. We want them to build them here. We want China to build them in here. We want them all to build them right in here. That's what they've done to us for 40 years, and they've drained us. Now we're doing it to them at a better level than they ever dreamed possible. To further rebuild the industrial bedrock of our country, I've imposed 25% tariffs on foreign aluminum and steel. It's keeping our steel mills going. I did that. If I didn't do that with steel in the my first term, we wouldn't have a steel mill in the United States right now, and everybody knows that. I did it for washing machines too, by the way. That's why I asked the people at Whirlpool. They were going to close. They were in deep trouble. I did it because they were dumping machines. I did a 50% tariff, was going to raise it to 100%. They didn't even have to bother. They became a tremendously successful company overnight. They were ready to close. They came to me with tears in their eyes in my office early on, first term. And we're doing it now at levels never seen before. And the results are going to be even better, because we've been abused by friend and foe. And in many cases, friend has abused us more so than foe on trade. So I want to just let you know, you're going to be very proud of this country very soon. And with my China tariffs, we're ending the greatest job theft in the history of the world. China's taken more jobs from us than any country has ever taken from another country. And that doesn't mean we're not going to get along. We get along with China. I mean, their tariff now is at 145%. So essentially, that's a big difference between that and zero. But I think it's going to work out. They want to make a deal, and we're going to make a deal, but it's going to be a fair deal. It's not going to be a deal that we lose $1 trillion a year like they did with Biden. That guy was so bad. He was so bad. Under Biden, and remember this, we were losing $5 billion a day on trade, and now we're making money. We're actually making money instead of, do you know what 5 billion? Think of that, Mike. How many pillars do you have to make to lose $5 billion? You can make them for 1,000 years. No, we were losing $5 billion a year. Now we've got it where we're making money, and the tariffs haven't even really kicked in. The 25% on cars have. But you know what that means? That means that you're going to make the cars. We don't need the cars from outside. When they say, oh, sir, we want to send you a lot of cars. I said, we really don't want your cars. We really don't want. We want to make our own cars. That includes Canada. That includes Mexico, who have taken a tremendous amount of our business. Canada's taken off a tremendous, like 10, 12%. Mexico is 32%. They took 32% of our car production. We don't want them to have that. We want that. Why are we giving it to them? Why are we subsidizing Canada $200 billion a year? Why are we subsidizing Mexico for $300 billion a year? There's no reason for it. I'm proud to be the president for the workers and not the outsourcers, the president who stands up for Main Street, not Wall Street. You know, I like Wall Street. I like Wall Street. I have a gorgeous, beautiful building on Wall Street, 40 Wall Street. Anybody? You want a little space? I'll get you some space real quickly. Now I've got one of the most beautiful buildings in the world on Wall Street, but I still like Main Street because you're Main Street. I want Main Street over Wall Street. And we want to protect the middle class, not the political class. That's all. I haven't done this very long. We want to protect our people. You know, this is the greatest, when you think about this, look, here we are. It's not even like election. It's after the election. And you have crowds like this, and to have them. We're going to do the commencement at University of Alabama. And they just called and they said, it's going to be the biggest crowd we've ever had we've never had a crowd like this. And I'm doing it at West Point, and they called and said the same thing. We love West Point. We love University of Alabama. We love Alabama. You know what I won Alabama by? Like almost 50 points. So when they called and they said, would you like to do the commencement? I said, okay, I'll do it. But they're going to have the biggest crowd they ever had by maybe 4 or 5 times. They told me, thanks for all of the things that we've done and to our policies. Trillions of dollars are now pouring into the United States because of common sense, just common sense. Apple, great company, was building everything in China. Now they just announced that they're spending $500 billion to invest in America, not in China. My friend Jensen from NVDA, they're spending, you know what NVIDIA is? They're spending $500 billion. TSMC, the biggest chip maker in the world by far from Taiwan, they're spending $200 billion in the United States. Amazon, $21 billion. Johnson & Johnson, $55 billion. The Mac, $20 billion. Merck, Stellantis, General Motors are putting in billions and billions of dollars, and many other companies. And as a result of our policies, for the first time in modern history, more Americans believe that our country is headed in the right direction than the wrong direction. They have a poll, a crazy poll, probably a fake poll too, so I don't know, I don't care. But first time ever, I think ever, that they're saying the country is headed in the right direction. Has never happened before. I don't know why, but we've accomplished more in 3 months than most administrations accomplished in 4 years or even 8 years, and we're just getting started. Believe me, we're just getting started. We're pleased to be joined by some great people. A person that number one, I have so much confidence in him. The fake news is after him, really after him, but he's a tough cookie. They don't know how tough he is, Secretary of Defense, Pete Hegseth. Pete. Wow, that's pretty good. How are the Houthis doing? Not too good, right? Our new administrator of the Center for Medicare and Medicaid Services, somebody that everybody knows, but this guy, you know, the show was a big success, but sometimes it hurts your image to have a television show. He's the top, he went to Harvard. I shouldn't even mention that anymore because that used to be a good thing. Today it doesn't mean much. But he went to University of Pennsylvania Medical School, top student, top doctor, top everything. One of the smartest guys in medicine, also a big star, Dr. Mehmet Oz. Dr. Oz, thank you, doctor. Thank you. A man who waited today just came here. He was all sweaty and grimy. I said, what the hell happened? He ran into the building because he wanted to vote in Congress. And I hear we passed the vote. John James by a lot, right? And thank you for making it here. He had to vote. I said, John, do me a favor, stay and vote. We're voting essentially on the big, beautiful, that gorgeous, big, beautiful bill. I said, you know, I want you there badly, but you got to vote, please. So thank you very much, John. Good job. Michigan House Speaker Matt Hall. Matt, thank you. Thank you, Matt. Michigan Senate Republican leader Eric Nesbitt. Thank you, Eric. Thank you very much. Michigan GOP Chair Jim Runstead. Thank you, Jim. Good job. Nice tie. Thank you, Jim. Great job. One of my favorite people. I mean, we just had such success. You know, we had so many votes stolen in 2020, and then this guy came in, and they didn't steal him from his state, North Carolina, told you. But they didn't steal him. He had 601 lawyers, and they had lawyers at every voting booth. And I said, who is that guy that did so well? Because we won the state. Other states, you know, they inched us out, and, you know, at the end, they just inched us out, crooked as hell. But this guy didn't let that happen. His name is Michael Whatley, North Carolina. And now he's the head of the Republican Party, RNC. And he's great. And I must tell you, he worked with a great woman, my daughter-in-law, Laura, who was unbelievable, who's got a very successful television show. That was a tremendous combination. That was a very important combination. Also the great, and you see him on television, he's unbelievable. Hey, Stephen, come up here fast. The great Stephen Miller. Do we like Stephen? Where is Stephen? Come here, Stephen. I love this guy. I love this guy. There is nobody smarter or tougher than Stephen Miller. Stephen, say it.
Who's enjoying 100 golden days of America? President Trump has achieved the most secure border in American history. He's fighting violent crime. He's fighting the drug cartels. He's cutting your taxes. He's cutting wasteful spending. He's draining the swamp. He's standing up to the radical left. He's standing up to the communists, and he's making America stronger than it's ever been. President Trump will never stop fighting for you, your children, and your family, and President Trump will make sure that in this country, not illegal aliens, not criminals, not gangbangers, but American citizens come first, last, and always. Thank you. And thank you, President Trump, for being the greatest president in American history.
Someone needs to get this guy some Krispy Kreme because, I mean, you can be enthusiastic about this guy, but he's treating him like Kim Jong-un in North Korea or something. Dude, this is a bit up there with the glaze.
He's been great. A man who put on about 928 rallies for me. We didn't have a glitch. Justin Caparel. Justin, thank you, wherever you are. He's probably backstage working. We did over 900 of these. Thank you, Justin. And Margot Martin. Does anyone know Margot? Beautiful Margot. I call her the world's greatest photographer. Where is Margot? Margot's great. Where are you, Margot? And she's very shy, actually. She's both beautiful and shy. Thank you. Where? Margot, come up here, Margot. Come up. Come on. You got it. This is the most beautiful. Now, look, I'm not allowed to say this. It's the end of my political career, but I'm going to say it anyway. She's the most beautiful photographer in the world. I don't know if she's the best, but she's the most beautiful.
Trump 2028, anybody?
People love Margot. And how about Caroline? How's Caroline doing? Huh? How is our Caroline doing? Caroline has taken the world by storm. She's taken it. And, you know, we have a man here that I don't know, but he's defending me all the time on CNN. And he defends me really well, but he can't go too far because if he goes too far, he'll get fired. I said, you're amazing. You can take it right to the edge. And he really does a good job. He's not allowed to go any further. He would be off, you know, if he really went totally crazy, which he'd like to do. But I think he's terrific. Scott Jennings. Where's Scott? Where are you, Scott? Come here, Scott. This guy, really, I've watched him for years. I don't know him, but he likes Trump. Come here, Scott. Oh, CNN, this is the end of Scott. No, who cares? Don't worry, we'll take care of you, Scott. Scott Jennings, really great.
Thank you. Michigan, we were flying in here today And I said, look at these farms. I got to get a farm in Michigan because when you own as many libs as I do, you got to put a place to put them all. Thank you all very much.
Thank you, Scott. And I also want to thank the rest of the Michigan Republican delegation for all the work they do in Congress and who are back in Washington working on the big, beautiful bill. We're going to name it, I think, the big, beautiful bill. In 100 days, I've taken more than 1,000 executive actions, and I could recite our accomplishments all night long. And by the way, did you just see what I did? Straws. I wiped out the paper straw, little thing. These are the little things. Your sink. You ever try buying a new sink and no water comes out? Your shower heads, your toilets, the whole thing, it's a disaster. We now have it so you can have as much water as you want because it's not an environmental problem. You have areas that can't get rid of their water and yet they put restrictors on them. You used to take them off, but now you can't because they're welded in, but now you don't have to worry about that because we've opened up your faucets and we've opened up, especially me. I don't like taking a shower where the water goes drip, drip, drip onto my luxuriant hair. I need a lot of water. I need everything I can get. I don't need to be under a shower trying to get water to come out of that damn thing. So we've opened up the shower heads, the faucets, the toilets, the washing machines that don't give you water. All of that stuff has been opened up, and we're giving you gas ovens, gas stoves, if you'd like. No more electric. You can have electric if you want. I have a lot of friends, they like gas better. You're supposed to sell your gas stove or get it. I don't know, who do you sell it to? Maybe another country, because we're the only country that would be so stupid to that. But the stoves now, you can have gas stoves, all you want. Put 4 of them in your kitchen. I couldn't care less. It's all common sense. People were so angry about that. Remember? They were all angry. Get rid of your gas stove. You have to go to electric. There's something they have with electric that's amazing. And by the way, Elon makes a great car. But
We got Grab. We're going to Grab. Let's see what we got right here. These are the results. Stock is up 1%. It's not on their website yet. No, never mind. It is. All right, here we go. We got Grab, folks. Let's get into it. Let's get into it. Here we go. Revenue, 18% year over year, $773 million. I believe that is a beat. Profit, they got profitable again. 3rd quarter in a row of net income positive. On-demand GMV, 16% year over year. Operating cash flow, $936 million. Adjusted free cash flow, $157 million. That is also a record high. And then adjusted EBITDA, $44 million. Real quick, let me see the guidance. The guide is what we care about. Before we look at anything, the guide is what we have to see. Let me see right here, guide. That's the only thing that really matters here. Guide. Okay, cool. We got an increase on the guide. Increase on the guide. Not a crazy increase, but a decent increase on the guide. Revenue still 3.3 to 3.4. That's unchanged. Adjusted EBITDA is up from 440 to 470 to 460 to 480. I think next quarter that's going to be closer to 500. So that's a $10 million increase on the high side and a $20 million increase on the downside. 440 to 460. I don't think the street's going to be upset at that. And then 470 to 480. I think they'll end the year at 500, but that's not bad. That's 50% year over year growth. That's not bad at all. And then revenue 3.3 to 3.4. That's unchanged. Stock is flat. Stock's not doing anything. People might not know it's out. It might not have hit the terminal yet. So it might take a minute for the stock to react if it does react to it. So we'll go through the numbers, but stock is basically not doing anything. If we get a dramatic move up or down, then we'll see what the street thinks of it. But for now, let's keep going through the numbers. All right. So starting from the actual beginning, let's take it from here. Revenue, 18% year over year. Adjusted EBITDA, $106 million. Profit, again, was $10 million. Free cash flow, $157 million. That's up $250 million year over year. They are free cash flow positive on an adjusted basis. And then on-demand GMV was up 16% year over year. They had their new GrabX product events. We'll talk more about those later. I'm sure they'll talk about it on the call as well. I'll go back to this slide in a second. It looks like, oh, here we go. 45 million MAUs. So they increased that by 1 million. Last quarter, that was 44 million. So 119 million annual transaction users. This is, I believe, the 10th quarter in a row of them increasing MAUs. Now they're at 45, so they added another million. And then they have 7 million DAUs, 45 million MAUs. Okay, not bad. Let's see this right here in the financial results. We'll go back to that in a second. So 773 on the revenue, that's up 18%. GMV up 16%. Adjusted EBITDA, that's up 71% year over year. Deliveries 415, that's up 18% versus 380 last time. GMV 3.1 versus 2.6, and then segment adjusted EBITDA 63 versus 42. This is the main metric the street looks at for Grab because it's not like producing a ton of net income. So the adjusted EBITDA is where you get the multiple. And that one came out to be 63 million. Revenue 282 on mobility, GMV 1.8 billion versus 1.5 last quarter, and then 159 million on adjusted EBITDA. That's up 16% year over year. Their percentage of GMV on that is down slightly, about 0.1% quarter over quarter. Stock is still not reacting at all. I think the numbers haven't hit the terminal yet. So if we see a up or down by like 10%, which I think is the implied move, then we'll know what the street thinks of it. Financial services. Okay, so 75 million in revenue. That's growing 36% year over year. Loan portfolio is now 566 million. That's up 36% year over year. Adjusted EBITDA, that one looks bad. Last time it was 28 million. This time it's 30 million. So that's negative 3 million year over year, which is a 41.1% decline versus 51.2%. I don't think the street's going to kill them on that number, but that is definitely not the best for financial services. Again, I think they're okay with losing money here because they're growing super fast. And so they'd rather lose money and grow and eventually monetize it later. But that one, I think the street, I don't think they're going to get too upset. But if they were upset, I wouldn't blame them like crazy. All right, incentives. Let's see how bad these were. So incentives is how much Grab pays a driver or a consumer to use the app. And this needs to come down in order for it to meaningfully have an impact on their profitability. So Q1 2025 overall incentives were 501 million. Last year, this time it was 415. We expected it to go up. It's about if the rate of growth is worse than last quarter. And let me do some math right here to figure out. So the rate of growth is 20% year over year. Last quarter, which was Q4, let's see right here. Last quarter, Q4, the rate of growth on partner incentives was 512 minus, I think it's going to be unchanged. It is, oh, that's actually good. Last quarter was 29%. Right now it's 20%. That's actually really good. So the incentives in Q4 were up 29% year over year. This quarter, they're only up 20%. Which means they got more cost efficient or they had more pricing power, which is consistent with what JP Morgan put out, which said that their external data is showing that other competitors are losing market share to Grab, not in a meaningful way, but to some extent in regards to app downloads and screen time. So it would make sense that incentives would go down. Granted, Q4 was the holiday season, so that's why it might have been up. But at least that's nice to see it going down. Grab right here, it's up after hours. It's not really having a reaction at all. So I don't think there's, I don't know, maybe the numbers didn't hit the wire yet. Maybe it's going to hit soon, but nothing crazy right here. Consumer incentives were 5.7% of GMV. Total incentives were 9.7%. That's barely increased. 9.7 from Q1 2024 to 10.1 Q1 2025. That's inconsequential given they're growing top line at 18%. And then they increased the EBITDA guide, which is the most important thing that I cared about. Okay, cool. Those are the results. Those are, I'll pull up the press release as well. But yeah, stock's really not moving. Stock doesn't really care much about this. Let me pull up the stock right here. Last time, I think we got numbers at this time as well. Their calls at 8 p.m. But last time their stock moved aggressively. So I would imagine that there's going to be a move. If there's not, I'd rather have no move than a down move. But there tends to be a move on Grab. It's not one of those stocks where it's flat on earnings. It's down 0.5% after hours. It's down 0.5% after hours. Let me pull this up right here. Oh wait, hold on. I have to go here. One sec. Okay, let me pull this up right here, and then we'll switch. All right. Yeah, we'll see what happens. Now the stock's flat. Yeah, you're not really getting any action here. 480, I definitely think is an inflection point. I agree. What's your plan with Snap? I just joined the stream. I bought some at 880, sold $9 calls. Those printed. Now I'll keep selling covered calls. Yeah, I mean, if Snap continues to go down to levels from 2023 because they didn't give Q2 guidance, I'll just keep selling covered calls on them. And you know, if it really gets aggressive, I'll buy the dip. Like, to me, I don't really care about Snap. It was a trade, but I thought the margin of safety and risk reward is good. And so if I have to hold it longer and sell covered calls on it, I don't have an issue with that. But in general, I think the earnings is a weird reaction given they beat on every month. They beat EPS by 40%. They didn't give guidance and the street takes it down 13%. Like, that to me, yes, I'm annoyed they didn't give guidance, but I also don't know if it's worth a 15% decline. So we're going to have to see. Yeah, no movement on this one. This is interesting. Last time it moved within like 2 minutes. This one is this one's not moving at all. All right, so here's what Anthony Tan said. We had a strong set of results to start the year, sustaining robust demand growth momentum to achieve yet another quarterly record number of users on our platform, even amid the seasonal demand impacts from the Lunar New Year and Ramadan fasting period. We also grew the number of active partners on our platform and now have more active driver and merchant partners than ever before. While we are cognizant that there are increased levels of uncertainty in the global macroeconomic landscape, aka tariffs, we are continuing to harness AI and our technological capabilities to improve the reliability and affordability of our offerings. This will increasingly position us as a counter-cyclical company. Wow. That can weather through the uncertainties in this macroeconomic environment. Interesting. Anthony Tan going on the offensive here in terms of him saying, hey, we're a hedge against the tariffs. Grab, by the way, is owned by 78% of institutions, for those that are asking. So it's a majority institutional owned stock. We continue to drive profitable growth across the business, with Grab achieving another quarter of record revenues, our 13th consecutive quarter of adjusted EBITDA expansion. Again, everything going up and to the right, except the stock, which is, in my opinion, a situation where the stock has an opportunity. And adjusted free cash flow scaling to $157 million on a trailing 12-month basis. Looking ahead to the second quarter, we expect to drive strong sequential on-demand GMV and overall revenue growth while remaining disciplined on costs as a company. We are raising our full-year adjusted EBITDA guidance to a range of 460 to 480. Realistically, they're going to get to 500 million. They're just, like, again, being conservative on the EBITDA guide. That's exactly what they did throughout last year. So they're slowly raising it. And I would imagine by Q3, they raise that to 500. And then on Q4, they would beat it going into 2026. Okay. How much stock did they buy back? They have 6.2 billion. Wow. In cash. 5.5 billion is net cash. So the other 300 million is deposits. I don't think they bought back any stock. As of March 31st, a balance of 274 million out of the previously approved 500 million share repurchase program remain available to be deployed. Okay, that's bullish. If they're not buying back their stock, it's because they're doing something else, which the elephant in the room, which they'll be asked about again, is GoTo. Are they going to buy out their biggest competitor in Indonesia? So, dude, this is actually really bullish to me. The fact that the stock dropped to freaking 350 and they didn't buy, or whatever it was in March, or I think it was low fours in March. In April, it got to 350. If they didn't spend a single dollar out of their authorized share buyback program, that means they need the money, and they need the money to do something, because you cannot have 4 billion shares outstanding and say, hey, we're just not going to buy back our stock, even though we authorized to buy it back. And the stock is at 4-year basically consolidated lows, right? Like, why wouldn't you, especially if you're bullish on the nature of the business? Like, that's what Robinhood did, right? Robinhood fell to freaking 19 or 29 bucks, and Robinhood bought 5 million shares. So normally a company on a dip, they buy, especially if they're bullish. I think they need the cash to make a big acquisition. That's what I think is going on right here. Net cash is 73 million. Adjusted free cash flow was negative 101 million during the quarter, declining 7 million year over year. I think they took down some of their corporate costs. Reasonable corporate costs was 86 million, improving from 91 million the prior year. That's nice. So that's down about 5% year over year in terms of corporate costs. Grab again after hours, not doing anything. Pretty much flat right now. This is interesting, bro. This is interesting. By now, I feel like the street would have reacted. And the street doesn't care. Or maybe we have to wait till 7:30. Like, I don't know. I don't know why there's not a reaction yet on the stock. But maybe we'll get it soon enough. Cash liquidity again, about 6.2 billion. I want to go deeper into financial services. How many deposits and all that other stuff did they get here? They usually do a segment on this. Yeah, here we go. All right, financial services. Let's look at this. This is the fastest growing part of the business. So let's take a look at this here right now. Okay, revenue was 36% year over year, 75 million. Adjusted EBITDA was negative with an increase in expected credit loss provisions as we continue to increase our loan dispersals. We continue to maintain a prudent stance on credit risk with 90 days non-performing loans within our risk appetite. So the reason for the increased EBITDA loss was due to credit loss provisions, which is not that big of a deal, to be honest. We continue to focus on our lending to our ecosystem partners through GrabFin and Digibanks, with total loans dispersed growing 30% year over year to 630 million. Customer deposits are now 1.43 billion. This number was like zero a year and a half ago. In the first quarter, from 479 million to 1.4 billion. That is more than a 3x increase right here, or just under a 3x increase year over year in their overall net deposits, and that's a $200 million increase quarter over quarter. We were able to achieve continued growth on quarter over quarter and year over year basis for our deposit base, highlighting the strength of Digibank's ability to leverage the Grab ecosystem, aka people that are underbanked in Southeast Asia, which is the majority, or not the majority, but the majority, like 400 out of 700 million people. That's where Grab thinks there is a massive opportunity for this. And those are the main things they had to say about financial services. They didn't say the number of members they increased. I think they'll talk about that in the call, but that one is not on this press release. All right, cool. This was yeah, I mean, either we are too early and the street's going to react later, or the street doesn't care, which, to be honest, I'd rather they don't care versus we go down. But I also think we might just have a delayed reaction on Grab. So there you go. That's the quarter. Amit, so if they merge with GoTo, does that change your narrative and price target for Grab? No, I think they still get to 10 by 2027. I don't think they need the acquisition to get to 10, but it would definitely help. And they just got some guy on their board of directors who is a investment banker who specializes in M&A. So the signs are there that it's going to happen. The other thing about Grab is that they just bought a bank. They didn't talk about it on their PR. I'm sure they'll talk about it in the earnings, but they just bought a bank for, I think, $300 million. So that should massively be a catalyst for financial services going into Q2, as loan dispersals probably will be up as well. I think let's give it 5 minutes at 7:30 and see if there's a reaction. This is very weird. On a stock like this, you would tend to think there's some reaction. But we got nothing here. So let me see what else we've got. Deliveries. We talked about that. Adjusted EBITDA, that's 50% year over year. 159 for mobility. Everything's growing in that 15 to 20% range, which is what I like. And I think they can do that for the next decade, which is where the bull case kind of comes in. Cash and cash equivalents, 2.13 billion. That's fine. Yeah, I mean, this is pretty much it. They got profitable again, third time in a row. So it seems like they're going to keep putting up a profit. I know it's a very small profit, but it's just nice to see that they're profitable. And I mean, they're profitable, and Snapchat isn't profitable. So it's nice to see that there. But like, I think the biggest takeaway so far is they're not buying back their stock. And you either think, okay, they don't like their stock at these levels. They think they're overvalued, which is possible. I really don't think that's what Grab is thinking. Or they have a different plan with their stock. And that stock might be, or with their cash. which is kind of scary. Yeah, but I personally don't think a public company would issue buybacks and then not buy back their stock. Even Palantir has not bought back a ton of stock, but they bought back some stock last quarter, and we know that Palantir was going on a crazy run going into Q4. So their lack of buying, to me, is more so a question of they need the cash, if you believe the go-to rumors. Because like not even spending not even buying 1 million shares, 5 million shares, even last quarter they bought back 10 million shares, like not even buying a couple million shares, which wouldn't be a lot, to me is them acknowledging, and I think they're going to be asked about that today of just like, hey, what's going on? And I think they're going to say we need the cash for strategic initiatives, and that one of those might be they need to spend on an acquisition. During the first quarter, the total number of monthly active advertisers who joined our self-serve advertising platform increased 49% year over year to 191,000, while the average spend by monthly advertisers on our self-serve platform increased to 30% year over year. All right, so the ads business, which is high margin, not going bad. We continue to deepen advertising penetration among our merchant partners. Advertising revenue as a percentage of deliveries GMV continued to expand to 1.7% from 1.3%. And stable from the fourth quarter of 2024. GrabMart grew strongly during the first quarter of 2025, registering GMV growth rates that were faster than the overall delivery segment. We continue to onboard more merchants. They did acquire a chain of grocery stores back in February. We were also able to take advantage of the shifts in consumer preference from dining out and food deliveries to home cooking during Ramadan to drive strong demand growth for GrabMart during the festival, with GrabMart GMV in March hitting a new monthly record. GMV is gross merchandising volume, so the amount of money that flows through the entire deliveries or the mobility sector of the business. So, like, I don't know, I'm just making up a number, but let's say Uber has $20 billion of Uber Eats money, like that's going through the actual money that's flowing in through GMV, but then a certain percentage of that is actual revenue for Uber because they have to pay the driver, and then a certain percentage of the revenue is profit for Uber after they deduct their costs. So GMV needs to grow in order for the other segments to grow. And it's growing right now at about 18% year over year. Mobility revenue grew 15% year over year. Mobility GMV grew 17% year over year. Adjusted EBITDA was 8.8% compared to 8.9%. That's a slight decrease. We continue to increase active driver supply while optimizing our existing driver supply to meet growing demand for our services. During the quarter, total monthly active drivers increased 18% year over year and 4% quarter over quarter. That's good. Driver retention rates remain stable at 90%. That's really good because in Southeast Asia, to be honest, a lot of people depend on Grab for a living. But number two is like you need to make sure that there's a high quality of driving that's being done in order to continue to get people to take Grabs over the competitors. Our efforts to improve driver supply resulted in a 10 percentage point reduction year over year in the proportion of surge mobility rides. That's really good because the reason you have surge pricing is because you have a lack of supply. So if you have more drivers, apparently Grab reduced their surge pricing by 10 percentage points year over year in terms of the number of times they had to proportionally put on surge pricing for mobility, which is a good thing. In Singapore, the Land Transport Authority awarded GrabCab, a subsidiary of our rentals business, Grab Rentals, a street hail operator license. By improving the supply of vehicles on our platform, we can also improve the efficiency of our marketplace for our passengers. Additionally, we plan to launch a fully green GrabCab fleet featuring low and zero emission hybrid and electric vehicles. This is also important because Grab is the 6th company only inside of Singapore to be awarded a street hail operator license. They tried like 5 times and they got rejected. They finally got accepted a month ago, which again is deepening their overarching moat, I believe, in the region in and of itself. All right, it's 7:30. Is the stock going to move? Is it hitting the wire right here, or are we just getting a muted reaction? I am very perplexed by this not moving at all. Yeah, 7 million users daily. That's correct. That's weird, dude. Like last time, this thing was up. This thing was down 10%, up 4%, down 3%. Does no one care? Does no one care? Wait for it. It doesn't trade overnight. It's going to trade for the next 30 minutes. It'll end at 8 p.m. Wall Street went home. Dude, this is kind of weird, bro. Like you would think like I'm just confused why it's doing this. It looks flat. Yeah, It's up 0.42. It's up 2 cents, bro. Dude, this is so weird. Like, it has an implied move of 11.5%. So I guess no one cares. No, Grab does not trade after 8 p.m. even on Robinhood. It is one of those stocks that does not trade until pre-markets. So it doesn't trade overnight. Steve is going to be on, by the way, at 9:15. He's in a board meeting right now, but he wanted to hop on at 9:15. So he'll be on after the Grab call. Only 40,000 shares traded since the ER was released. So there's not any volume, but compared to last earnings, there was a ton of volume within seconds of this earnings coming out. So I get that there's no volume. I guess my broader question is, why is there no volume? I don't know. Last time was just a bit more aggressive. Everyone's watching Trump. Yeah, I guess. Some schedules are showing Grab earnings on May 13th. That's true. But if it's hitting the business wires by now, I think people should know. Okay, now it's down. Now it's up. It moved 1 cent, dude. All right, guys. I'm sorry it's not more exciting. But, yeah, I guess no one cares. The call is going to be in 30 minutes. So for anyone asking about my Grab thesis, I've talked about it many times. I'm going to put a tweet right here. If you're really interested, you can read it. It's a very long thesis, so I don't want to go super in depth on the whole thing because a lot of people have already heard it already. But the point is, I think they can be a monopoly in Southeast Asia, and I think they're going to be one of the biggest super apps. And it's trading at 30% cash. And everything's going up and to the right except the stock, which to me is an opportunity. So it's not really a hard thesis. And it's not a stock that doesn't move a lot, dude. There's plenty of volume. There's plenty of liquidity. There's definitely plenty of shares. There's plenty of institutional investors. Like, I'm just very perplexed that we're getting zero movement on this right now. And so that's a bit more weird to me. Talk about Hood. We did a whole Hood podcast yesterday. So if you're curious, we spent a lot of time talking about Hood. I think it'll be good, but I don't get 920 million. The analysts want 917 to 923. I'm not getting that. So I'm a little worried that the analysts are being too aggressive, but I mean, who knows? Maybe I'm being too conservative with my guesses. So I have no idea what's going to happen with Hood tomorrow. But if it tanks, I'll buy more because I'm long Hood. Yeah, I'm going to be holding on to my spreads. I have no plan to sell them. I have a price target in mind. I think we can get there. I think this quarter I don't see any red flags on the quarter yet. I mean, I got to keep going through the numbers, but everything looks pretty fine to me. Last time, the biggest red flag was those EBITDA margins just not being where they needed to be. And they increased the guide by 20 million. Like, that's what I thought they would do. Probably what the street thought they would do. It's just stock's not really reacting to it. Yeah, maybe you guys are right. Maybe the argument is that every brokerage had the freaking ticker on a different earnings date. And so just no one knew the earnings were here today. Grab CEO on CNBC Asia. Okay, how the hell do I get CNBC Asia? Let's see if I can pull this up. Do I have this here? CNBC Asia. Oh, do I have it? No, it's not here. Let me check this one. Yeah, I'm going to have to wait to see that till tomorrow. Oh, do I have it? Is it here? Wow, we got a HIMS ad on CNBC Asia. Fly to Asia and stream CNBC. That is a very smart idea. I'm up on the Grab spreads. Today I was up like 15% at some point. But again, it really doesn't matter. Until the stock has a meaningful move, then the pricing on the spreads is irrelevant. So we gotta see some big moves before that spread actually gets up in value. Okay, let me see. I'm watching an ad right now. I think after the ad, maybe we get access to it. When you go to Asia, make sure to call everyone Crody. That's hilarious. No, they're talking about the S&P 500. Why? This is Asia. Why aren't they talking about Asian stuff? Wait, watch live stream. Oh, do I have it? Hold on. Do I have it? No, I got to pay for it. All right. Sorry. Yep, I don't have it. This is incredible, bro. This is just unbelievable that the stock is not moving either up or down. All right. Well, that's it. Maybe the people are not aware of earnings yet, as this was wrong info was provided everywhere for the earnings date. Yeah, I guess then tomorrow, 9:30, when the market opens, we'll actually see. But Wall Street tends, like, retail could have the wrong earnings date. Wall Street should not have the wrong earnings date. Granted, Wall Street doesn't really trade after hours. So, I mean, that's probably the reason why we're not seeing any momentum. How about Snap? Are you buying the dip? I want to see first I have to listen to the call, dude. I have to see why the hell they didn't give any guidance. I don't really care about Snapchat at all. It was just as a swing. I think it's de-risked at these levels, but apparently the guidance or the lack of guidance has the street upset. I'm really worried about what Meta is going to do, because Snapchat right there down 14%. If Meta takes away their ad guidance, which I would hope this is Snapchat being stupid versus a trend, because I don't care about bag holding Snapchat, but I don't want a $2 trillion company not giving guidance, because that's just not good for the entire market. Robinhood, by the way, down 1%, and then SOFI down 1% after hours as well. Yeah, I think it's more Snapchat versus Meta. Grab is a public company. Yes, correct. Yeah, usually the CFO does the media stuff, not the CEO. Dude, that's so weird, bro. That's like Snapchat does trade overnight. Yes. That is so weird. Let me check if the transcript is up for the Snapchat call. Let's try to see if they answered this guidance thing at all. Snapchat. Okay, I think I have the transcript. Let me see if I can search through it right here. I'm going to Command F guidance. Okay, so we have a couple of things they said on guidance. Okay, so here's what they said. Here's what they said. Let me see. While our top line revenue has continued to grow, we have experienced headwinds to start the quarter. That's probably why the stock is down. I mean, that sentence right there is them saying Q2 is not the best right now. And we believe it is prudent to continue to balance our level of investment with realized revenue growth. As a result, we are updating our full year cost structure guidance to reflect our current investment plans. For an infrastructure cost per DAU, we maintain our full year guidance range of 82 to 87 cents. For all other cost of revenue, we maintain our full year cost guidance at 19 to 20%. Okay, so they didn't decrease cost revenues or cost guidance, which is good. Okay, so here's the question about why they didn't give guidance. At a high level, the macro. Well, let me just play it. I think you guys can hear it right here. Hold on.
Thanks for the questions. This is Derek speaking. Yeah, at a high level, the macro is changing quickly, and I think the path we're concerned here, going forward, isn't entirely clear. That obviously impacts visibility on our end. We've learned from some of the big past macro events that we've experienced and external events to be thoughtful about how this can impact the operating environment and therefore our approach to guidance generally. We've had a really solid Q1, top line growth at the very high end of our guide range, and then both adjusted EBITDA and net income, well above those ranges. So we started the year really strong. Thus far in Q2, we're still growing, but we've seen some headwinds to our top line growth so far. As one example, we've heard from a subset of advertisers that their spending has been impacted by the changes to the de minimis exemption.
There you go. That right there. If Meta says something like that tomorrow, I don't know, dude. Meta's in a different ball league compared to Snapchat, but there you go. He's saying that some advertisers are going to pull back spend.
However, I caution here, it's just really difficult to parse the drivers between the various potential factors there. We're just really focused on continuing to execute for our customers and to build on the momentum we saw in Q1 with active advertisers up 60%, DR advertising revenue reaching 70% of total ad revenue for the first time. We believe by continuing to shift our mix towards DR and lower funnel, by continuing to diversify our advertiser base through the growth in the SMB channel, and by diversifying our revenue sources with the growth of Snapchat Plus, that we'll build a more resilient and stronger business over time as we continue to execute there. On the cost side, I think our approach on costs and expenses and investments in the business in general is to care.
Okay, so that's the issue. The issue is tariffs. I can't really blame them, dude. I can't and again, I have no allegiance to Snapchat. I have 1,000 shares. I don't really care about this company at all. but I'm sympathetic to them saying, hey, we're already seeing advertisers come up to us and say we can't advertise anymore because we don't know our ad budgets. Temu and Shein, which by the way, you can't ignore this on Meta. Temu is the #1 advertiser on Meta. They advertise more than everyone on the planet. I can't say Zucks is not going to come up there tomorrow and say, hey, we're going to give guidance, but that guidance might really not be what you guys like. And maybe it'll change in the next month or two if we get, updates of China tariffs going down. But some of our biggest advertisers, like a Temu, they're not advertising as much anymore. And I can't blame Snapchat for saying, hey, it's not easy for us to give guidance right here. Granted, I think it's a cop-out because, it's like there's other companies figuring out a way to give guidance. But it's also like, if Reddit does it, if TTD does it, if Meta does it, then you can't blame Snapchat. Because then all the companies are realizing it just doesn't make sense, right? And Google never gives guidance, so it doesn't matter. So Google wasn't punished for it regardless, but the other ones can get punished for it. All right, cool. Waymo Toyota partnership. Yeah, I saw that headline. I don't think it matters that much. It's a cool thing that they're working with Toyota. Again, market's definitely not going to care about that. So yeah, it's nice that Waymo is working with other car companies, but as of now, it's definitely not going to affect Google's stock. It's good for Google long term if you're bullish, but I don't think it's going to have a massive impact on Toyota or Waymo or Google stock currently right now. So good thing, but nothing crazy. I think the biggest thing about Waymo is they're doing 250,000 paid rides a week, right? That's all that matters. And with Toyota, they'll probably accelerate that even further, but that's, I think, the only thing people really care about on this. Why did SMCI crash? They lowered their guidance. So for those that missed the SMCI news, which is why NVIDIA and the broader market's down after hours. I mean, maybe you can say whatever Trump is talking about is not the best for the markets right now in the rally, but the main reason is SMCI lowered their guidance pretty aggressively, as you can see right there, and that hurt NVIDIA, that hurt the semis, and that hurt the S&P as a result of hurting NVIDIA. The Waymo news moved Google more than Grab. Dude, nothing's moving Grab. This is incredible. I think you guys are right. I think everyone thought earnings was in 2 weeks, and so they just didn't even think of looking at it today. I think that's the only way I can explain it. Like I've been looking at Grab for about, I would say 8 months now. I invested back in January, but I was looking at it back in October of 2024, and it moves on earnings. So it is weird that there's no moving right here. All right, we got about 15 minutes left until the call starts. Is Trump still live? Let me see. Oh, he's not live anymore. All right, so Trump is not live. What he said about tariffs was a decrease in the auto tariffs for the people that or for Michigan, right? The reason he's doing it in Michigan is because there's so many auto workers. So that's why he announced it there. But they already announced the details of it early on the morning shows at like 10 a.m. So there's no new updates there. The market had pretty much already priced that in. This is the update on SMCI and why it's getting hit right now.
Christina, thank you. Christina Parts-Nevelis. So there's this relationship between the two, and that's why you're seeing NVIDIA, as Christina had mentioned, NVIDIA provides GPUs, AI software, Supermicro does the infrastructure for a lot of the NVIDIA stuff, including Blackwell. So that
8% customer of NVIDIA. I mean, this is a pretty horrible report. I mean, this is a pre-announcement. I mean, 20% miss on revenues. And, K-Parts just said about the growth and, it's still growing at 18%. Good luck with that. I mean, it's going to be single digits by the end of this year. And I think you can extrapolate this out of it. These are themes that we've been talking about. CoreWeave is also down a bunch. That thing should be down. NVIDIA, there's just not a good headline out there. And we're going to go into some of their other biggest customers' reports. Microsoft, we heard from Google last week, Meta, and Amazon. I just can't imagine that there's going to be anything that sticks out saying that you want to buy NVIDIA based on what they have to say. None of them are going to be raising CapEx guidance at all. And if anything, when you hear from some of their customers, NVIDIA is like this, you could say to yourself, this is not like a 1 quarter thing. It's likely to be 1, 2, maybe 3.
The optimists will say that people, because of tariffs, are going to push everything out, as I think Christina just said, until the third or fourth quarter in this case. Pessimists will say this company's had issues now for quite some time, and their proximity to a name like NVIDIA is, I'll use the word problematic. And it does put pressure on not only NVIDIA, but the rest of the space, which is just started to get off the ground a little bit again. This sort of derails it in the short term.
I just don't know for different reasons, but I would say most notably the concerns around the financial filings and just some of the uncertainty there, and that we're getting at least. Okay, so we're hearing a few customers, core platform customers, have delayed purchases, et cetera. But I don't know why you have to go there. Now, when I speak about the semis group more broadly, I think, remember, we forget that semis are also uber cyclical. They are the uber cyclical. And if we were talking about a Micron or something, we'd really get into the cycle. But I think some of this still even matters for NVIDIA and those folks that are in the middle of both data center and AI. And I think by the fourth quarter, I think we're going to have de-risked a lot of this. So, I mean, semis still at the end of the day are a place where valuations do matter and the cycles matter. And it's not time, but it's going to be time. And again, the demand side of this trade hasn't gone anywhere. And I think there's all kinds of constraints right now, and some demand, but not really.
But Tim, if the demand side hasn't gone anywhere, it's likely to go somewhere if we do go into a recessionary environment. If we go into an environment where a lot of these customers who've been buying these racks, who've been buying these servers, all this sort of stuff,
delaying to Q4, and then things get worse in the meantime.
But they'll price that in before that.
Yeah, but we talk about this. Sorry, I just interrupted.
No, you did. Yeah, what do we call that?
It's a spirited debate. That's all.
Right,
Spirited.
But in 2021, when the Nasdaq was down 30%, the S&P was down 25%. Some of the names that had overshot to the upside, it's Meta, it's NVIDIA, it's Tesla, and it's Netflix, they all sold off 70%. Much of the other names sold off 50%. So my point is, there was really nothing going on over there other than rates going higher. But we had this tremendous, whatever you want to call it, just orgy of buying. It's kind of what it was. And so they were taking some of the froth off the table. This is some real stuff going on. We're on the other side of the recession that never came there. If we go into a recession, I mean, a lot of the demand is going to be go away.
Well,
See, the reason I will never take a job at CNBC or Bloomberg, everyone's always asked me that, hey, Amid, would you ever leave to CNBC or Bloomberg? Something like, dude, I can get away with saying that on a stream. I will be all right. That guy is going to get a little text message from the executive producer tonight saying, hey, buddy, make sure you don't do that again. Okay? So that's why I like doing this on my own. Look, sometimes you make a joke. Sometimes you say something, it doesn't work out. I've experienced that plenty of times. Really, 0.1% of the time, 99.9%, it always works out because I know I understand humor. But if it doesn't work out on live TV, it's a little different than if it doesn't work out on YouTube. It's like, all right, you can move on. But on TV, got a lot of advertisers there that might have some issues with saying stuff. But anyway, in terms of what he was saying, by the way, Bloomberg just put out an article on Grab. I'm trying to get access to it right here. But this is the headline. Grab raises forecast as revenue beats estimates on ride demand. In terms of what he's saying, I think they're overreacting. I think the only reason SMCI is having this preliminary guidance is because they're losing China. They're losing China. That's it. I gotta go deeper into this SMCI thing tonight. But the reason they're taking down guidance by $1 billion, I don't think is because Amazon is canceling a ton of CapEx and therefore NVIDIA is losing a ton of demand, aka SMCI doesn't have the servers to be able to supply for that demand of GPUs. I think the aggressive decline in their earnings preliminary guidance is because they lost a big customer, and I don't think it's Oracle, I don't think it's Amazon, I don't think it's Microsoft, I don't think it's Google, I don't think it's Meta, I don't think it's XAI or ChatGPT. In fact, all of those are accelerating their spend. ChatGPT literally opens, Sam Altman every day is like, we need more GPUs. I think it's China. And so if it's China, then who cares, right? We've already discounted the fact that we're losing China revenue at this point. And so I don't think, hopefully, it's going to matter too much. By the way, I don't think we watched this. Trump was live before he went to Michigan, and he addressed a bunch of things with Amazon today. So we'll pull this up right here. He was talking to reporters before he left, and then we'll get into the call for Grab.
A great state that we won, very big, Michigan, and we're going to have an Air Force base that's not going to be closing. We're going to keep it open for the people of Michigan and for our country. And I look forward to that. Some of you are going and some of you aren't. Any questions? Great. Jeff Bezos was very nice. He was terrific. He solved the problem very quickly.
Okay, so Trump is confirming he called Jeff Bezos. For those that weren't caught up with what happened, it was leaked in the morning that Amazon is going to display tariff prices on their products. The White House got word of it before Bessent went live. Someone asked a question about it. The White House said Amazon is political and is influenced by Chinese propaganda for showing you a transparent price on a product, aka a price with a tariff and a price without a tariff. I wouldn't blame Amazon for doing that because I think Amazon's trying to make sure people know that, hey, we're not upcharging you. It's because of these tariffs. But Trump got mad at that, and it was reported, and he's confirming right now that he called Bezos, who's not even the CEO of Amazon anymore, and he said, you better stop this shit. And I think Bezos complied pretty quickly because Bezos does not want to be in a legal battle or have any bad blood with the administration.
And he did the right thing, and he's a good guy.
Have you requested a president fee? Is there an update on negotiations with China?
No, not an update. No, not an update.
Mr. President, Gordon Conrad from the Gateway Pundit. I wanted to get your response on the leftist media. They're trying to hide the mugshots that are featured on the front lawn of rapists, murderers, pedophiles. What do you think of that? Aren't they proving to be the enemy of the people?
Well, I guess they are. Right? Thank you. Who you with?
I like your hat, by the way.
Who you with?
The Gateway Pundit, sir.
Mr. President, sir, what's Mr. President, sir? Republicans on the Hill who seem not to be on board with their political agenda. What do you
I
say
think
to
they're going to be all up for it. I think the Republicans are really with us. We have the big, beautiful deal. It's moving along, and I think we're going to have it taken care of. I think they'll all be there.
Will you end the IRS?
We just wanted to help them during this little transition, short term. And during this little, if they can't get parts, it has to do with a very small percentage. If they can't get parts, we didn't want to penalize them. And they have a 1 year period and then they have an extra year. But it's for a very, very small part of the car. Basically, they're paying 25%.
Mr. President, so what's in store for your next 100 days?
What did you say exactly? And what's your message for all retailers who could do possibly the same thing?
Yeah, nothing that really, he's a good guy. I've gotten to know him over the last couple of years, and he's done a fantastic job. So I appreciated what he did. How's your game?
You're going to list the accomplishments of the administration.
Yeah.
If there was one big thing you really wanted to have happen in the first 100 days, but didn't, what would it be?
Well, I think we've done everything or it's in the process of being done. For instance, the border is in great shape. 99.9% came out again today. 99.9. That I would say that was my number one thing. The economy would be certainly right up there, and I think it's doing great. We were losing billions and billions of dollars a day with trade, and now I have that down to a very low level, and soon we're going to be making a lot of money. We're going to be reducing people's taxes, and we're going to get the big look. A very important element that we're working on now, maybe more important than anything with the border in good shape, is the fact that we want to get, and very importantly, the big, beautiful New Deal. If we get that done, that's the biggest thing, what's happening in Congress right now. And I think we're going to get it done. We have great Republican support. If the Democrats blocked it, you'd have a 60% tax increase. I don't think that's going to happen. We have great support from Republicans. So the big, beautiful deal, that's what we want, the bill.
All right, so yeah, I mean, I don't think we got anything more from that. The China stuff is still in flux. Bessent, by the way, when he was asked about China explicitly, are you talking with them? He wouldn't answer. He refused to answer. Lutnick said that Bessent's responsible for China and that he's responsible for the rest of the world. So apparently, like Bessent would know if he's talking to China because he's the only one responsible for China in that cohort. And he refused to answer, which to me means that they're not seriously talking to China yet. And I think Trump knows that as well, which is why he's not really giving direct answers either on that. So yeah, that is the update from Trump. Grab right here, still not really moving after hours, up 0.5%, up about 2 cents, nothing crazy. But That is pretty much it. Julia Rothwax, thank you for becoming a YouTube member. Rothwax, that's a hell of a name, dude. That is cool. Rothwax. I've never heard that before. Julia, appreciate you. Thank you for being here. And thank you for becoming a channel member as well. We are going to get the grab call in about, what is it? In about 5 minutes. Again, for those that are just joining, this is the earnings right here. Good earnings, profitable, EBITDA, free cash flows up, revenues up 18%. I mean, like, they raised guidance. I don't see an issue here, but the stock doesn't care. The stock does not care. Microsoft CEO says AI now writes almost 30% of all new code at the company. You know, Sundar said something similar to this as well. Oh, Eric Schmidt. Did I play that clip for you guys? I think I played it yesterday. Eric Schmidt said AI is taking over the world. Oh, yeah, I played it on Robinhood Weekly. Yeah. Eric Schmidt is, he basically said we're underestimating how much computational infrastructure will be needed for AI, aka buy NVIDIA. Eric Schmidt, by the way, I think he literally said buy NVIDIA. He wasn't supposed to say that, but he literally said I would be buying NVIDIA right now. This was about a year ago in an interview. And yeah, he is pretty bullish on the overall nature of AI. And so AI coders, they're going to be here, dude. I don't think coding is going to be around in 20 years. I think it's going to be prompting. Like, I mean, I think the best engineers will probably be needed, but this is one of those things that's easily going to be trained by models. Like, you know, maybe not in 5 years, but in 20 years, I don't think someone's going to have to sit there and actually think about code. The models will be 1 trillion times faster and better at writing it. I think a lot of these jobs that we think are stable are not going to be as stable. Content creation, who knows, dude? I mean, I think people want an authentic relationship with like a content creator, but if AI can do it as good as like a human can, you never know. People might choose AI over like an actual person. So there's a lot of different things. Yes, AI is still very horrible at debugging and maintaining large code bases. I agree. I've worked with a couple people that tried to use AI code bases and it's just not that good. But in 20 years, I feel like at the rate of speed it's moving at, software engineering is probably not going to be eliminated as a category, but I think more people are going to grow up realizing they don't need to literally learn how to code because it's just going to be so simple to do it. But it's going to take time. It's not going to happen overnight. Lutnick did say a bunch of things that were kind of bullish. And the number one thing he said is we have a trade deal lined up. He's just waiting for the country's approval to announce it. Now, that could be BS. Lutnick could be saying that with no actual deal, and he's just blaming the other company or the other country as not giving him the approval to say it yet. Or it could be legit, and sources say from Bloomberg that one of the countries is either India or South Korea, which makes sense because that's what Basant's been talking about in the context of India. So, you know, maybe we get an announcement soon, but if not, then we're going to have to keep waiting. Amit, I'm a developer, 20 years experience. I'm buying NVIDIA. 60% of my code is already AI generated. I work for CrowdStrike. It is a revolution. Wow. There you go. Thanks for letting us know, Thomas. I mean, I've heard it from a couple friends that are in the startup industry. I have one friend who's working on a startup, and this guy, dude, this guy was like one of the most well-compensated coders at NVIDIA. He left, and now he's doing his own thing. And just based on how I'm reading his tweets and some conversations, he doesn't believe coding is going to exist in 10 years. And he's one of, you know, he's one of the top guys at NVIDIA, and he left to do his own thing. And he's working on a startup that engages in automating coding. So obviously he's biased as well, but also he, you know, he just thinks that there's going to be a revolution. And in that revolution, a lot of things will end up getting automated. And so coding might be one of those things as well. Craig Smith, thank you for the $9.99 super chat. Grab this, Amit. Craig, appreciate the super chat. Thank you for being here. The stock again is flat after hours. The call should be starting right now. So let's get into it and see what they have to say. Should be starting in like 30 seconds, and then we'll get into it. Oh, we got Tanner. Tanner's going to be listening to Grab. Let's see if we can convince him to get on the Grab train. Let's see if we can get him. Yeah, Palantir just dropped a vibe coding video 5 days ago. If you were on that market close, Chad talked about the idea of the FDE getting replaced with AI to an extent as well. And he thinks those hours are only going to exponentially increase where AI does the coding over the forward deployed engineer. So, all right, here we go. Grab earnings. Never mind. No grab
Ladies
earnings.
and gentlemen, thank you for joining us today
Of course, I got the timing wrong at the last second. All right, here we go. Here's grab earnings.
for this session. Welcome to Grab's first quarter 2025 earnings results call. After the speaker's remarks, there will be a question and answer session. I will now turn it over to Douglas Yu to start the call.
Good day, everyone, and welcome to Grab's first quarter 2025 earnings call. I'm Douglas Yu, Director, Investor Relations and Strategic Finance at Grab, and joining me today are Anthony Tan, Chief Executive Officer, Alex Hungate, President and Chief Operating Officer, and Peter Oey, Chief Financial Officer. During this call, we will be making forward-looking statements about future events, including our future business and financial performance. These statements are based on our current beliefs and expectations. Actual results could differ materially due to a number of risks and uncertainties as described on this earnings call, in the earnings release, and in our Form 20-F and other filings with the SEC. We do not undertake any duty to update any forward-looking statements. We will also be discussing non-IFRS financial measures on this call. These measures supplement but do not replace IFRS financial measures. Please refer to the earnings materials for reconciliation of non-IFRS to IFRS financial measures. For more information, please refer to our earnings press release, remarks, and supplemental presentation available on our website. And with that, I will turn the call over to Anthony to deliver his opening remarks before we open it up for questions.
Our first quarter results were strong as we achieved profitable growth despite the seasonal impacts to demand from the Lunar New Year and Ramadan fasting period. We grew on-demand GMV by 17% year on year and achieved yet another record number of monthly transacting users on our platform, translating to another quarter of record revenues. And as we drove strong top-line growth, we continue to harness the scale of our ecosystem to drive greater network efficiencies and maintain a disciplined stance on costs. As such, we achieved our 13th consecutive quarter of group-adjusted EBITDA improvement, while our trailing 12-month adjusted free cash flow also expanded to $157 million. We're cognizant that there are increased levels of uncertainty in the global macroeconomic landscape. We remain committed to the mission of our company and believe that it is more important than ever before to continuously drive improvements to the reliability and affordability in our offerings. This will increasingly position us as a counter-cyclical company, enabling us to stay resilient and continue driving new user growth and improvements to usage frequency and retention regardless of the macroeconomic landscape. Looking ahead, we reiterate our expectations to maintain our on-demand GMV and revenue growth momentum compared to 2024 growth rates, while maintaining a highly disciplined stance on costs. Given the strong performance of the first quarter, we're raising our adjusted EBITDA outlook for the full year 2025 to $460 to $480 million from $440 to $470 million previously.
That's not me. That's them. It's not me. It's them. It's a technical issue. Let me refresh on a different page. Oh, here it is back. Okay.
Good day, everyone, and welcome to Grab's first quarter 2025 earnings call. I'm Douglas Yu, Director, Investor Relations and Strategic Finance at Grab, and joining me today are Anthony Tan, Chief Executive Officer, Alex Hungate, President and Chief Operating Officer, and Peter Oey, Chief Financial Officer. During this call, we will be making forward-looking statements about future events, including our future business and financial performance.
That's not me, bro. I don't know what's going on with their call. It just like reset randomly. Yeah, it restarted randomly. Hold on. Let me restart the whole thing. Okay, we're back.
Please press star one to ask a question, and we'll call on you for your question. When asking questions, please limit.
All right, Q&A starting. Q&A they do immediately, so it's gonna be an hour of questions, so we don't have to listen to all the financials. So it's just gonna be Q&A. It'll be Q&A if the call actually works. Stock still flat. Well, now it can't be traded because it's 8 p.m. Oh boy. Oh boy, oh boy, oh boy. I will refresh it again. This is weird.
Operator,
can we just check that the audience can hear the current live call right now? We seem to be getting signals that they're not hearing anything.
Are they watching my stream?
Yes, I can hear you loud and clear, sir.
No, we can't.
Okay. Let's have the first question, please.
Okay, once again, I would like to call on Ms. Pang Vitayamwan Kun from Goldman Sachs. Your line is now open.
Oh, this is bad. This is bad, bro. What the fuck?
Operator, I don't think the audience is actually able to hear. This is why I think we're not getting any responses.
This technology Q4, someone needs to put them out of business, bro. Like, someone said this happened with Starbucks today. See, this is an issue. Like, why don't they just use YouTube? Why do they do this stupid freaking...
Let me just go ahead and call on once again for Ms. Pang of Goldman Sachs. Your line is now open. Please ask your question.
Yo, the operator is definitely gaslighting. Dude, if this happens to Robinhood tomorrow, oh my gosh. I would hope not. Bro, this is a $20 billion company. This is not...
Hello?
Okay, we're back.
Pang, can you hear us?
Hello, I can hear you, but can you hear me? Hello? Hello?
Yes. Yeah, we're having some sort of technical challenges this morning, so apologies to the audience. So let's get the Q&A going, so we can hear you, Pang. And yes, can you?
Oh,
just want to
great.
do a sound check. You can hear us, right?
Great. Yes, I can hear you loud and clear.
All right. Okay. All right. Now we're back on.
Great.
Seems to be some sort of technical, technical challenges.
Yes. Morning, everyone.
Go ahead.
Thank you very much for Sure. So congratulations for the great set of results. And two questions from me. Number one, just on the macro, have you seen any changes in consumer behavior amid sign of weakening macros, especially in Indonesia? How resilient do you think is Grab in this environment? And how do you plan to position Grab to be more counter-cyclical? That's question number one. Question number two, you have announced several new products at your GrabX Day last month. Could you share how you expect these products to drive your operational performance? As this new product roll out, how should we foresee some margin weakness as you launch all the products as well? Thank you.
Hi, Pang. It's Alex here. Thanks very much for both of those questions. So the first one on consumer behavior, we haven't seen yet any signs of consumer weakness. Of course, we're monitoring very closely. So in this last quarter, we had delivery MTUs continuing to grow sequentially, particularly with a strong performance on Grab Mart demand in March. April trading update for you, we're trending healthily in line, I would say, with our expectations. So we do expect a rebound in quarter-on-quarter growth rates across mobility and deliveries for quarter two. At the same time, of course, because of the news flow, we continue to work closely with government partners to support local economies, particularly making sure our marketplace is healthy so that we continue to generate the earning opportunities for our partners on that platform going forward. I would just make an observation that in the past, where there has been a turn down in economic conditions, the platform that kind of works on a self-adjusting basis in the following way. A number of new drivers will join the platform as a cushion against potential job losses, etc. And therefore, we tend to get an improvement in supply conditions, which in turn will reduce surge at key moments, therefore encourage more consumption, more use of the platform by consumers. So you can see it's kind of a self-correcting, almost counter-cyclical approach that we see from the platform during those types of downturns. But so far, no signs of downturn. So we'll keep monitoring that. The second question is about the GrabX Product Day, where we talked about harnessing AI to improve user and partner-centric services going forward. We called it AI with Heart for those of you that missed it. So a lot of the products that we launched did have affordability in mind. So it very much relates to your first part of your question. So we are positioning ourselves to continue to grow through any kind of a weakness in the macros. So for merchants, for example, we've used the merchant assistant to add something like 70,000 menu items without human intervention. So that's merchants scanning and generating descriptions now. So 2.8 million different items if you go across all merchants. And then we're using Ride Guide to help the driver earnings to improve. So we've got now already 250,000 drivers using this feature on a weekly basis. And we have seen from those drivers higher income, higher productivity. So it keeps the marketplace healthy even under difficult conditions. I noticed that you asked about margin weakness from this push for affordability. We don't actually anticipate a margin loss from these new products, and we're not seeing it so far. And let me explain why. Because something like Shared Saver, for example, which is a lower cost for consumer and therefore drives good volume improvements, is actually amortizing the same delivery cost across multiple customers by inviting multiple people to join the same order. So it's actually no extra cost to Grab or to the marketplace. And even Grab Food for One, which has a lower cost per meal, is actually benefiting the merchants from allowing them to batch up a lot of meal production into the same cooking batch. And as some of you know, I used to be in the food industry, so I know that this is much more cost effective and more productive for merchants to cook in large batches. And then we generate the demand for those special offer meals at that particular window, and they're able to package up the large batch into multiple meals and sell them all together. So in that case, we're amortizing the merchant's costs into a very productive production batch for them, and there's no additional cost to Grab also. So you can see that kind of approach is just making the marketplace more efficient, but it should not put pressure on our margins. The key point for us is that we want to drive the penetration of our annual transacting units users up further, so our MTUs, our monthly transacting users, increases. And then within that, we want to continue to drive up our daily transacting users as well. So these kinds of affordable products and viral products that we announced at the GrabX will help us do both of those. So on margin, we're going to continue to focus on balancing this with the growth. But the key focus for us, obviously, is driving absolute profit growth. And it's just worth just remembering that we're now on our 13th quarter of improving EBITDA in a row. So you can see that that's very much a focus for us. Thank you, Pang.
Thank you.
Next question, operator.
Your next question comes from the line of Alicia Yap at Citigroup. Your line is now open.
Hi, good morning. Can you hear me?
Yes, loud and clear.
Hi. Okay. All right, thank you. Good morning, management. Congrats on the solid quarters, and also thanks for taking my questions. Two questions here. First, I think on your guidance, especially on the higher EBITDA guidance, can management elaborate the reasons for your confidence on the profitability improvement? Are you seeing decent cost optimizations coming from your AI technology enhancement? Even though if in the case of the second half, if the top line actually face some macro headwinds. And then second question is that I understand you mentioned you have not seen any demand slowdown, with the tariff concerns and all that. But in the coming months, just in case, if you also were to see some softness on the deliveries demands or even mobility demands, would you actually what would be your plans? Would you actually let the volume naturally slow down, or would you actually introduce some subsidies or rebates or promotion to actually encourage, the demand and also the spending to keep up the volumes and also the engagement? Thank you.
Great. Alicia, let me take this question, and maybe Alex also, if you can add some color, especially around on the demand side. If you look at the macro situation, we're definitely watching and monitoring that from the sideline. We can't ignore it, but we're also keeping a close eye on it. But the guidance that we're giving out is something that we feel very comfortable at. And let me kind of step back as to why we are giving this level of confidence in our EBITDA guidance. We're doing two things, right? We're reiterating our revenue guidance, and we're actually increasing our EBITDA guidance. So what happened in Q1? So Q1 is usually our slower season on the back of coming out of our high season from Q4. But what we saw actually in Q1 was a couple of really unique things in our business. Demand did not slow down, despite the Ramadan and the Lunar New Year. If you look at our on-demand GMV, it grew at 17% on a year-over-year basis. But if you look at what's unique is we had another all-time high when it comes to monthly transacting users. So the MTUs continuing to be at an all-time high. We hit another record revenue quarter for us. And really what's really for us actually was a very interesting data point was that the number of transactions that occurred on our platform was up 19% on a year-over-year basis, which means that the number of engagement and the number of transactions grew faster than our on-demand GMV business overall. And if you look at April, and Alex mentioned to Pang's earlier question, what are we seeing in April? We're seeing a strong rebound also coming on the back of Ramadan in terms of on-demand GMV growth, and it's coming in line with our expectation. So if you look at all those different components, we're looking at for the rest of the year, we see demand continuing to be strong, and we continuing to see, well, from our perspective, from our lens, continuing growth in our on-demand business for the rest of the year on a year-over-year basis. It's also across all our revenue lines, especially on the fintech side of the business. Cost is another component that we're also watching very closely. The cost structure of our business continues to be optimized. You saw what the regional corporate cost number was. It was slightly down on a Q-on-Q. It was down 5% on a year-over-year basis. And we're continuing to make sure that we're optimizing that cost. Yes, there are some components of cost that we're deferring to later given seasonality. And there will be some components of that as the variable cost component goes up with volume. But we are managing our cost base also at the same time. With all those different components, Alicia, what we are seeing is that we're confident that the EBITDA guidance that we're giving out, we feel very comfortable, and we're seeing confidence in making sure we can execute that for the rest of this year. So Alex, maybe you want to add a little bit around the on-demand side of the business.
Yeah, I think as Peter said that this quarter should have been a seasonally weak quarter, but we were able to continue to grow deliveries MTUs sequentially. A lot of that was because of the way we operationalized Mart during the Ramadan fasting period to replace dining out with providing groceries and food for people at home. The productivity gains from AI came through already in the quarter in the way that we manage the direct marketing costs during those campaigns. And that's a capability which I think will serve us well if there is the kind of downturn that you're asking about. I think the way in which we can fine-tune our promotions and our incentives using AI is demonstrably better than it was even 6 months ago. So we can get benefits from that as well. Cross-sell continues to be a big focus for us, and you can see that in particular the financial services business has benefited from excellent cross-sell with the majority of the new to financial services customers coming from Grab's platform. But also the cross-sell that we're getting between the verticals like food to mobility and food to mart continue to perform well. And all of these are increasingly powered by auto-adaptive AI campaigns. The focus that you heard about at GrabX is on tech and product innovation, and not therefore we're less and less reliant upon promotions and incentives. In particular, what I really like about the new products coming out now is they have a viral component. So things like family orders. We've got family units who are bringing in other family members into the platform and booking rides on behalf of other family members. This is all part of the kind of viral component that helps the platform to grow itself. So you'll see our strategy increasingly focused on that as well. I think Peter covered some of the ways in which we're thinking about demand. It's worth just highlighting one more time that our MTU number is still only 6% of the total population of Southeast Asia. So as a management team, we're very focused on the other 94%. We think there's a lot of opportunity, and particularly with these new affordable products, we intend to keep expanding the perimeter of our ecosystem as our main focus. And I think you can be, having seen us deliver 13 quarters of improving EBITDA in a row, hopefully you feel confident that we'll get the balance right between that focus on growth and yet also continuing to improve the bottom line as well.
Thank you.
Operator, next question.
Our next question comes from the line of Venugopal Garre at Bernstein Societe Generale Group. Your line is now open.
Thank you. Good morning, management, and congratulations on a good quarter. Two questions from me. Firstly, as far as the delivery industry is concerned, we are seeing further consolidation, such as Foodpanda, for example, shutting down their Thailand business, even though it was relatively smaller, and Deliveroo looking to sell their business to DoorDash. So how do we see industry consolidation shaping up in this segment in ASEAN? Is there room for more, or is it done? And I'm asking this because you already have a fairly strong category position. So that's the first question. The second question is more centered around if you could share a bit on how your Indonesia business has performed compared to your closest competitor, who also ended up reporting yesterday. And given that there's a lot of questions centered around macro, I want to just get a perspective on your thoughts around capital allocation in light of not today's macro risk, but potential macro risk that might emerge when tariffs reappear. So essentially, do you still have an appetite for further inorganic M&A, namely Goto, as we have seen in the recent quarters in terms of news flow? Thank you.
Great, thanks, Venu. Let me take the first one around consolidation. Maybe Alex, if I can ask you to take the Indonesian specific question there and what you're seeing. Maybe you can share a little bit more color there. Look, Venu, I think when it comes to consolidation, it's hard to predict. I can't comment really in terms of how the delivery market will shape up in the future. We've been focusing a lot in continue to growth our delivery segment of our business. It grew at 17% on a year-over-year basis. We feel it's underpenetrated, so there's still ways to go in growing that business. So we're heads down executing that. And Alex spoke about some of the products that we've been sharing, and also through our GrabX, also that you're seeing to continue to bolster that growth in the business. We also want to drive more engagement also at the same time with our set of deliveries products. So we're going to continue to make sure that we increase the number of users on our platform on deliveries. Organic has been working nicely for us, and we're going to continue to execute that business. Competitors come in, competitors go, as you've said also. But we're continuing to make sure that in this environment that we're in, we have to continue to make sure our products are affordable, which is really important for our users. And the selection also continues to widen, which is where we've been focusing around, for an example, around areas of bolstering our MART products, as well as continuing to bring traffic to our merchants in store at the same time. So that's how we see the market landscape. Whether you'll see some more consolidation, who knows? But we're going to continue to grow our market share.
Thanks, Anu. Yes, let me pick up on Indonesia, a key market for us, obviously. We can confirm that similar to the last quarter, the fourth quarter, in the first quarter, we did outgrow our closest competitor once again. So I think our product-led approach is helping, particularly to offset in what should have been a weaker seasonal quarter. We continued, in spite of Ramadan, to grow deliveries MTUs in Indonesia. We grew sequentially, and particularly, as I mentioned earlier, on the back of a strong performance from Grab Mart, where people can do instant shopping on Grab. I have a great example of what I was talking about earlier in terms of fine-tuning costs at the same time, because our direct marketing costs within Indonesia in the same period declined actually 12% quarter on quarter. So that helps contribute to adjusted EBITDA as a percentage of GMV, improving quarter on quarter, despite the fact that we outperformed on category position. So I think our Indonesian business is performing very, very well, and we'll continue to stay very focused on making sure that continues. We'll continue to look opportunistically to see if there are opportunities for value add and synergies into our existing businesses. Peter talked about the high bar that we have, but it's worth pointing out that we have made a number of bolt-on acquisitions where we thought there was really good opportunities to have immediate impact on our either capabilities or to extend our ecosystem further. So just to summarize, we purchased Chope, the reservation application, which we have now reproduced as native inside the Grab app. So that is helping the customers in their workflow as they identify where they want to dine out, which is a new capability that we're growing on the platform. They can now also take the next logical step, which is to make a reservation. We also purchased Everrise, which is a retailer in East Malaysia, which extends the Jaya footprint into a nationwide leading grocer, which is helping to strengthen the frequency and the reach of our offerings of the ecosystem in East Malaysia. And then finally, GXS Bank, our banking subsidiary here in Singapore, purchased Validus, which is supplier invoice financing capability, which would have probably taken us a while to build on our own, but is a logical extension to support the small businesses that operate on our platform and to extend credit to them in a risk-managed way, because it's based on the payment credit of much larger companies that can operate in the ecosystem. So those are all great examples of how we are seeing in this environment that there are indeed undervalued acquisition opportunities that we can bolt onto the platform that can help us to generate value right away and accelerate our time to market. Thank you, Vinay.
Thank you.
Our next question comes from the line of Piyush Choudhary at HSBC. Your line is now open.
Yeah, good morning. Thanks for the opportunity. Can you hear me?
Yes, you can, Piyush. Yes. Go ahead.
Yeah. Hi, thanks, management. Congrats for strong first quarter results and raising the guidance. On the user base, thanks for sharing that chart on DTU, MTU trends. Your DTU is around 16% of MTU as of first quarter. With new product initiatives, you expect DTU to rise, which is logical. But I wanted to check if there is any 2-3 year kind of target where you would like DTU penetration over MTU to reach, and which segment between mobility and delivery do you expect penetration to rise at a faster clip? Second question was on order frequency. Can you share what's the monthly order frequency in both delivery and mobility segments, and how has it changed over last 1 year and your outlook for the same? Thank you.
Thanks, Piyush. Let me take your question about DTUs. You're right. We also believe that DTUs can grow and catch up the MTU space. So we are very focused on frequency and retention. We haven't disclosed targets externally for those things, but the fact that we're highlighting them on the presentation is an indication to you that it's something that we are focused on and that we're confident that we can make a real difference. A lot of the GrabX initiatives, whether they were viral or affordability based, are designed to drive up the frequency use case, particularly on a daily basis. So basically highlighting that here to you today is a way of us saying as a management team that we're confident that we can show you some progress. Today, the DTU to MTU penetration is about 16% of MTU, so lots of room to grow up in that space. But we also think that the MTU penetration of ATUs can continue. And indeed, our ATU as a percentage of total Southeast Asia population also has headroom. So I think the investment thesis is still very intact, that there's lots of upside growth for us in terms of frequency and overall penetration as well. In terms of order frequency, I can tell you that both deliveries and mobility have been improving year on year. So for deliveries, we hit a new quarterly record despite the seasonal softness. So usually Q1 is weaker than the other quarters. In this particular quarter, we had both Chinese New Year and Ramadan entirely in the first quarter. So it should have been a particularly challenging seasonally weak quarter. But as Peter indicated earlier, because of the various new product launches, we have managed to get through that seasonally weak situation pretty well. And for mobility, we did share that frequency grew 5% year on year, even though the MTU growth continued during that same period. So we're confident that we can keep this push on frequency and retention going, and we'll share future updates and future data with you as we go forward.
Thank you, Alex.
Thanks, Piyush.
Our next question comes from the line of Wei Fang at Mizuho Securities. Your line is now open.
Oh, great. Thank you for taking the questions. First one on competition. It's kind of a follow-up to the previous questions, right? Do you see markets getting a little bit more competitive given both the development of the U.S. tariff and also some of the global MA initiatives? And how do you plan to navigate on that? It would be great if you can help comment on both the delivery and mobility separately. And secondly, can you help also talk about your thoughts about why not integrating your mobility rewards to your Grab Unlimited package yet? Yeah, thank you.
Okay, thanks, Wei. Yes. I guess the recent departure of one global competitor from the Thai market is, let's see, it's the fourth departure of a competitor from a country over the last 18 months. And so I think it does signal the continued consolidation of the market. In this kind of a platform business, there are natural returns to scale. The density that you have allows you to continue to drive reliability and price performance at the same time, which over time means that consumers and partners will prefer the platform. So we are starting to see this. Smaller players do still exist. Those with weaker balance sheets may struggle to raise money in this kind of a macro environment. So that may be, to answer your question about the environment and how that might impact competitive behaviors. I imagine that shareholders will be less inclined to subsidize kind of promotion-driven campaigns, and we'll be looking for more sustainable returns. We continue to hold the category leadership position across mobility and deliveries. You asked us to talk about that situation separately, but to be honest, we don't think about it separately. We do like to think of our relationship with both our customers and our partners, driver partners, as being multi-vertical, where we can really help them to optimize their relationship with them. And that's why Grab Unlimited is being expanded to include mobility benefits. And also, we have launched a VIP service, which reflects the relationship, the very special relationship we have with our most loyal, highest spending customers across both mobility and deliveries. And increasingly, we will expand that type of multi-vertical thinking about the relationship to financial services as well. And now that we have the banks in 3 markets and, of course, a very vibrant and fast-growing Grab Financial fintech business across all markets. So we fully agree with you that the mobility is a key part of the Grab Unlimited relationship going forward. I would think in terms of the competitors that we see, there are quite often smaller local competitors in each market. Plus, there's a number of smaller but multi-market competitors. Most of those are single vertical, therefore they don't have the many levers that we have to grow the relationship with our customers and partners. And in the market where we do have a multi-vertical competitor, as I mentioned earlier, we are growing our CP share for the second quarter in a row at the same time as expanding our margins. So I feel like we respect our competitors, but we feel like the formula that we have, where we continue to invest in multi-vertical relationships, we're continuing to improve the technology and the reliability and pricing of our network. We feel that we can concentrate on improving those services and growing through the relationship with our consumers and partners, rather than getting too distracted by competitors.
Great. Thank you so much.
Great.
Our next question comes from the line of Divya Gangahar of Morgan Stanley. Your line is now open.
Thank you very much. Good morning. My first question is on the margin drivers for this quarter. Could you elaborate the drivers for the deliveries margin improvement besides advertising? And specifically on GrabMart, how big is this now, and how are the unit economics versus the deliveries business? Also on the margin question, just on mobility, we did see a year-on-year drop in margins. Could you just help us understand the reasons for that? My second question is on the fintech business. The loan book growth was growing only about 5 to 6% quarter on quarter, and you've also noted higher credit provisions as the loan book is scaling. Could you comment on what the NPL currently is, and what are the indicators that are being tracked to monitor credit quality? Are you also being a bit more conservative on loan dispersals going forward? And given that you've had some traction now in Singapore, what kind of target markets are you attracting for these loans? Thanks.
All right, Divya, you got a lot of questions there, so let me take the margin ones, and Alex, maybe you can take the fintech on the loan book, since you're so close to it also, you've been seeing that portfolio growing. Look, on the margin side, I think your first question was around deliveries. Look, there's a lot of product mix that goes on in the first quarter. And you had a question also, how big is Mart as a business of ours? Mart is still roughly less than 10% of our deliveries to GMV. But having said that, it's growing much faster also than our other product portfolio within deliveries. The margin in food continues to be very healthy for us as a business overall. Mart also was a star performer in the first quarter for us that we spoke about earlier. So there's a lot of product mix that you saw coming into the quarter in terms of margin. You saw also incentives were relatively flat on a year-over-year basis for us. And that also helped some of the margin growth in our business. And our advertising also was 1.7% penetration rate that also contributed to some of the margin improvement that you saw in the business. So again, very much is all moving pieces, Divya. Product mix is part of that, which is really important. And you'll see the fluctuations on those product mix from quarter on quarter, depending also on the seasonality of the business itself. Mobility margin was lower on a year-over-year basis. And that was for us intentional to some degree because there was a critical part that we wanted to really make sure we build up, which is on the driver side. If you look at where the level of incentives was higher for us, deliveries was flat. In terms of mobility, in terms of incentive, was around the mobility. And what we saw in Q1 was that the number of rides was just outpacing the number of growth that we saw in the GMV. So we were seeing a 25% rides increase on a year-over-year basis versus a GMV of a 17% growth on a year-over-year basis. And we saw MTU also growing at over 20% on a year-over-year basis. So we wanted to make sure that we have enough supply of drivers out there to make sure that reliability continues to be high and also affordability for our customers also continues to be maintained at the same time. So, and that's why you saw some of the degradation in terms of margin expansion for us in the mobility space. So Alex, on the fintech?
Yeah, thanks, Peter. And I would just comment that on advertising was a big driver, as you said, Divya. It was particularly gratifying that in a weak, what is normally a weak quarter for advertising, we managed to increase our penetration of GMV for ads from 1.3 to 1.7%. And a lot of that, which I'm delighted to talk to you about, is that small merchants that usually don't have access to these kinds of sophisticated tools are really flocking to the self-serve capabilities. So in the quarter, we had a growth of 49% year on year of the self-serve adoption of the advertising platform. And the average spend by those active advertisers on the self-serve platform increased by 30%. So that shows that those tools are really working. They're getting the return on advertising sales, which is helping them grow their businesses, which in turn makes the marketplace even more healthy. And then the other driver for improved margins was the direct marketing performance. As I mentioned, I gave you the example for Indonesia, but it's true across all the countries that our direct marketing accuracy and performance is improving because of the use of AI in how we do the targeting. Okay, so quickly on to the fintech. Yeah, this last quarter, Q1, was the first quarter in which we had loan products from all three banks in the marketplace. So they've just started to grow those loan books. We are not seeing any deterioration yet in the loan quality. So NPL stable quarter on quarter. However, as we grow the volume of loans, we do want to make sure the balance sheet is reinforced. So we are running expected credit losses through the P&L in order to strengthen the balance sheet. And so that's why you see a small increase in the overall loss for the financial services segment because it's driven by that big buildup in ECLs on the balance sheet. Growing in tandem with the loan book, which is about 56% year on year. So you can see why that would be a large number. So we'll maintain that prudent stance. Obviously it's a great time for us to drive growth now that we have the products in the market. But we are aware that the credit models need to develop and mature. So we're running those now, and we'll keep monitoring that. But for the time being, we're very happy with the performance. We're on track with the plans, and we do not see a deterioration in the non-performing loans.
Thank you, Alex. Thanks, Peter.
Good answers. Good answers.
Our next question comes from the line of Mark Mahaney at Evercore.
This guy has an $8 target.
Hey, thanks. I just wanted to ask a kind of a separate line of questioning. It has to do with these AV partnerships. I think there's something like MOUs with 4 autonomous vehicle companies that you've signed. So it just, I know it's early, I know it'll be very early days, but just talk about the anticipated benefits from these. When might we see pilot deployments, and anything at all you could share about the economics? Thank you very much.
Thanks, Mark. Yes, I think we are very excited also about the potential for AVs. That's why we wanted to lean into this space and take a very early stance working with partners. You can see a lot of partners keen to work with us. I think because, our leading position in the region obviously makes us an attractive partner, but also the fact that we're leaning into AI at the same time. I think we're hopefully a knowledgeable partner for them to work with also. Our intention is to really be at the forefront of the exploratory use of this new technology. I won't give you a timeline for pilots because we obviously have to, in discussion with various governments to get that going. But our intention is to be at the absolute forefront because we want to understand what it's going to take to make this successful. Obviously, fleet operations is something we're very familiar with because of the way we manage our own fleets today. Well, what will fleet operations look like for AVs, for example? We're also at the forefront of insurance. We have our own general insurance license. We've been distributing insurance in every market for some years now, and that's a very successful, profitable, and growing business. But that helps us to become a good partner for these companies also in understanding what the insurance capabilities that would be necessary to make them successful also. So I would say, as you said, early days, but you can think of Grab as one of the companies globally that's really leaning into this space.
Thank you very much.
Someone's got to ask about GoTo, bruh, and why they have all this cash and no buybacks. Someone's got to.
Our next question comes from the line of John Shao at Barclays. Your line is now open.
Thank you very much for taking my questions. A lot of questions have been asked. I do have 2 follow-ups, please. The first is back to fintech. So I understand your model is slightly different from 2 of your peers in the region in fintech. But one of your peers is making a lot of money, and the other is making a little bit of money. So could you perhaps elaborate a bit, sort of tell us the difference in the models you are using, adopting in fintech that created sort of the near-term losses in your fintech? And so that would be helpful. And related to fintech also is that I believe you have talked about the revenue growth reacceleration in the second half. And could you please sort of reiterate and remind us what are some of the key drivers behind that outlook? My second question is back to the food delivery business. I think you talked about in your prepared remarks about like food/restaurant discovery. If you can share with us some of your early thoughts around the monetization of this kind of in-store food restaurant discovery business, as some of your global peers seems to be making quite a bit of money in that particular segment. And then on the margins for food, I know you have 4+% target, given you have had a lot of success in bringing that to 2% now. Could you remind us if that 4% is sort of 2-3 year target, the trajectory, or that's really, really longer term target? Thank you so much.
Thanks, John. Let me take the first 2, and I'll let Peter take the last one on margin expectations. So you're right. Our fintech model is different than the 2 peers that I think you're referring to. We have focused initially on supporting partners on the platform, partners that we know very well, where we have both a credit underwriting advantage, but also a collections advantage because of the fact that we're providing to them. and therefore we can pre-deduct the debt repayment from them. And that's one of the reasons why you see our NPLs are very stable, and we've been able to manage them very accurately. We want to extend that philosophy as we think about how to lend to consumers as well. So our credit models are most accurate where we know the most about the consumer also. So the same philosophy applies, but that means that we have spent some time developing and deepening the credit modeling for consumers to extend the lending to the consumer market. You can see us starting to do that as we grow our lending, particularly through the banks, because the banks have access to even deeper data and obviously have a lower cost of funds advantage as well. So in 2025, an increasing proportion of the lending will be to consumers, but we'll continue to deepen and enhance the relationship we have with lending to partners. I would say our penetration of drivers is the highest. We're still improving the models there and working out ways to facilitate smaller quanta and different tenures to more drivers, but I think that is starting to plateau, and therefore that will grow only at the rate at which the number of drivers and the GMV they support when it comes onto the marketplace. In terms of merchants, we are much less penetrated, and as we develop more and more capabilities for merchants, like enhancing our payments, enhancing our buy now discovery, which is the second part of your question, that allows us to see more of their GMV and allows us therefore to extend our credit models and extend more lending to them. And then, as I mentioned, the consumer models are the ones which we're very focused on developing now. We're very conscious of the macro environment for that one, so we'll do it in a prudent way, but there will be an increase in the proportion of lending to consumers during the year. In terms of profitability, our fintech business is already profitable, like the peers that you mentioned. The increase in the losses is due to the fact that the banks are basically all launching at the same time, particularly Malaysia and Indonesia, which have only just kind of launched their lending products last quarter. So I think that's to be expected. It's in line with our plans. So the investment in starting a new bank is there, and it's something we've been flagging over the last several years. But we are retaining our guidance that the banks overall, so all three of the banks collectively, will be profitable by the fourth quarter of 2026. So it's very much in line with our investment plans for getting those banks up and running. Moving on to your second question, Dine Now Discovery allows us to tap into a much larger TAM than food delivery. So although we're the CP leader on food delivery, we all know that most restaurants will make the majority of their GMV from having people dine in at their stores. We want to be part of making them successful and attracting people into the stores, and they recognize that our relationship with consumers on an increasingly frequent and loyal basis is a very great asset for them to do that. And so we've been extending the capabilities that we have to enhance Dine Out Discovery in line with that kind of marketing, trusted marketing relationship that we have with the consumer. We have a lot of data on consumer reviews, for example, for delivery, but we can easily expand that to the adjacent space of consumer reviews for dining out. The merchants are keen on working with us in terms of creating deals to encourage consumers to eat with them. And as they do that, we uniquely can close the loop on those campaigns that they put out there with the first-party data that we have, linking back to loyalty plans or payment that allows them to establish that those consumers come in as they redeem those discounts. So it's a fully transparent, closed-loop advertising performance for Dine Out in exactly the same way as we delivered that for delivery in the past. So the merchants understand very well what the proposition is, and they seem to like it. So it fits beautifully with what we do already on payments. And so we'll be enhancing the payments capabilities we have for merchants and enhancing the loyalty capabilities as well, all of which help us close that loop. The monetization opportunity, therefore, is primarily driven by an increase in the TAM against which we can generate advertising dollars. And that's a very clear partnership model that merchants are used to and that we will push. We're at the very early stages of this. So in many ways, this ramp-up stage is an investment stage. But we'll begin to monetize in future years rather than in 2025.
And John, and your question on the margin for food, you alluded to 4% plus timeframe, et cetera. Look, we're not really tied to any specific timeline to get to the 4%. The good news is that in certain countries, we're already seeing 4% plus. So we know how to get there. What we are managing the business for our food is for absolute dollar expansion, EBITDA expansion versus a certain margin percentage, because we see the opportunities in growing the food business even more. We talked a lot about daily transacting users to monthly transacting users today, and that's just another catalyst for us that we got to do more in the food section for us to actually grow into the TAM that we still have a lot ways in terms of penetrating in all the countries that we're in here today, especially around also what Alex talked about when it comes to dine-out capabilities, also as well as complementing that with Mart. So that's how we view our margin for our food business.
Great.
All right. Thanks, John, for your question.
That was a long
appreciate it. Thank you. Look, we're up against the hour here, so I want to thank all the calls here. Look, we know we had some technical difficulties earlier on, so I don't know how much of Anthony's opening remarks was captured. Maybe if I can just sum it up here in the next 60 seconds, and I'll close the call here. It was a great set of results for Q1. And this is despite of the seasonal headwinds. And now as we're entering in the second quarter, what we are seeing is the continuing sequential growth across all our businesses today. And we expect to maintain this momentum of growth from 2024 into 2025. EBITDA guidance upgrade also is a reflection of our confidence in achieving this strong performance, even after 13 consecutive quarters of EBITDA improvement. There's a lot of questions today around macro and slowing down on demand, et cetera. I hope we've addressed those questions. Our business, we've built this business to be counter-cyclical, and we are well positioned to weather any downturn or any slowdowns of economies. And the investments that we're making around the product set, which some of you got to see also in GrabX a few weeks ago, is an example of where we're going to continue to double down. We've got more products that we need to build here across the food as well as Mart and mobility and the fintech side, especially on our loan book, and also making our products more affordable, which is really important, especially if we are going to see some economic implications down the line here. But we're very confident in what we're seeing so far, and we're executing also right on strategy. So in closing, I want to thank all the partners and the merchant drivers that we continue to support, and they're supporting us. So thank you very much. And also to all our customers who continue to use our product day in and day out. We are continuing to see engagement, which is great to see. And also we continue to see the lifetime value of customers going up. And also to thank you for all our shareholders for your support on our business. So the IR team and myself will be on the road again over the next few weeks. I'll be on the East Coast in Boston and New York. Alex will be in Hong Kong in a couple of weeks' time. So we'd love to get together with you all. I'm sure you have more questions that we can dialogue on. But thank you for carving out the hour. And with this, I'll close the call till next quarter. Thanks, everyone.
Okay, good results, great call. Very quickly, because we have someone backstage. One good thing, one bad thing. Good thing is that Q1 is supposed to be a bad quarter from them, given it's right after Q4, which is a holiday season, and which is good for them, but there's holidays that are bad for them, like Ramadan, in terms of just lack of demand. Everything superseded their expectations in Q1. So that was very encouraging to see that even though you had the lunar year and Ramadan, which theoretically should hurt them in Q1, it didn't, which means the product deepened their moat with engagers. Other companies weren't able to survive, like the ones they talked about in Thailand, and the consolidation of the overall ecosystem is going to grab. So that was good. The part I'm annoyed about, and I'm annoyed at the analysts about this, is no one asked about why they did no buybacks, even though they've authorized $270 million to do buybacks, and what the hell they're doing with $6 billion in cash. And that was a question that was asked like 5 times on the last earnings. So I'm confused why none of the analysts brought it up this time. Maybe they just think that they know there's talks going on with GoTo and they don't want to make it awkward by asking about the elephant in the room. But other than that, I don't know why they wouldn't ask that question. Like that question to me matters more than a lot of the other questions currently right now. But outside of that, great quarter. Great. I mean, this was a good quarter, dude. It's at 489 in the overnight markets right now in Robinhood. Very little volume, but phenomenal quarter. I mean, I think it'll do well tomorrow in the pre-markets. We'll see what happens, but I think this was a good Q. I think this was a really, really good Q. And shout out to Nate, who was keeping everybody engaged in the chat as well. All right, let's bring up the guy who you guys can't get enough of. This dude, apparently, it's getting ridiculous, Steve. It's getting ridiculous on the freaking market open. It's 9:30. The market opens 9:35. Steve. I'm like, this is insanity. Like, this is really insanity. But thankfully, Steve is here to give you guys what you wanted, Mr. Dividend Streams. Steve, what's up?
I have 2 questions for you.
Shoot.
Amit, why the hell didn't Grab do any buybacks? And what the hell are they doing with $6 billion in cash? They should be buying back shares. What's going on here? I know what the answer is. You want to know what the answer is?
What's the answer?
They're playing grab ass with their cash.
Yeah, that's the right answer. That's the right answer. I think they're getting ready to acquire a company and they need all the money. Dude, they couldn't buy back 1 freaking share. Are you kidding me?
You got $6 billion in cash. You can't spend $5 on a share.
I think they need all $6 billion to get a deal done. I really do. I think that's what's happening. So, Steve, first of all, guys, Steve wanted to come on later in the day. So he's here. But I don't think we could have ended the stream after 5 hours without Steve coming on, since all of you guys were asking about him for the past 2 hours.
Man, you and I both had long days.
Had long freaking days.
Worked all day and then had a board meeting tonight, and now I'm on the extended market close with Amit.
I'm happy you said you had a board meeting, so people know that you're part of a freaking board in a real company that has meetings.
Well, no, not. I wasn't in the board meeting for the company I work for. I was in board meeting for the co-op that I'm the president of the board for.
Okay, the point is you have shit to do in life.
Yes.
I just need people to realize,
like I don't stop working.
Yes, they should. People should know that. That's all.
And somehow I wrote an article tonight too.
Machine.
I may or may not have wrote an article while I was in a board meeting for my building while I presented financials.
You are a different type of animal, dude.
Yeah, I don't know. I'm crazy. What can I say?
Okay, real quick. I said I was going to tell the story, so I didn't tell the story yet about Apple. I spent $4,000 as Steve's favorite company.
Oh, you didn't tell anybody?
I didn't tell anybody yet.
Let me set the stage.
Okay, go ahead.
So I call Amit. I had a meeting out east I had to drive to. I call Amit. Guy went to the Apple store. He hates Apple, the stock. And I seem to remember last year he bought an iPad. He bought a laptop for his sister. He bought something else. I think he got a new phone. And then lo and behold, less than a year later, he's at the Apple store. And then man, tell them what you bought.
I bought a $4,000 MacBook Pro.
He bought a $4,000 MacBook Pro and wonders why Apple makes $100 billion a year in profit.
But that's not the funny story. The funny story is while I'm waiting for them to bring out my laptop, the lady who is like helping with the sales, she was like, while we're waiting, do you want to know about the Apple, or do you know about the Apple Intelligence features on the Mac? And I looked her dead in the face. And I was like, oh, you mean the Apple Intelligence that does nothing on the Mac? And she has this awkward laugh. She's like, oh, no, we do some stuff. And then I was like, okay, let me see. And she shows me 2 things. Number one, she shows me a email editor. She's like, oh, you can summarize the text and it can like help you figure out what to say. Number two, and I'm just listening to this. Number two, I wanted to say like that's nothing, but I don't want to be like rude or anything. Like I made a joke, but I didn't want to be rude, so I'm just listening. Then she shows me her generative AI emojis. I'm like, oh wow, that's really cool. And then she says, another really good feature we think with Apple AI is that when you get a bunch of notifications, it does this summary of the notifications, and then it gives you the summary. And at that moment, I wanted to be like, that is the most annoying part of my iPhone when it summarizes the notification and says some stupid shit in the summary. But I didn't say anything. And I was like, oh, wow. Yeah, I'll try it out. So,
you know what I find funny in that story? Because I would think most people utilize Outlook. And it's funny because it's almost as if they have no idea what Copilot is from Microsoft.
Right.
And you've been saying it, and I've been agreeing, they're so far behind on AI, it's crazy. So far behind.
You didn't see the Microsoft headline yet. Microsoft headline.
No, what happened?
Satya Nadella said 30% of the code at the company is being written by AI right now.
Did you look at what I sent you about Zuck?
Yeah, the same thing, right?
Yeah.
Around code.
It's even crazier.
Dude, I don't think coding is going to exist in 20 years, bro.
Zuckerberg, and I think this was from Theo Fawn's podcast, within 12 to 18 months, most of the code is written by AI. It won't just be autocomplete. AI agents will set goals, run tests, find problems, and write better code than top engineers. Sorry, this goes back to what I've been saying about AI, and that whole learn to code movement's done.
There was a guy in the chat who's been coding for 20 years, and he says, all I'm doing is buying NVIDIA because 60% of my code is being written by AI.
I'm telling you, they're going to have to figure something out because we're going to need universal based income in 10 years, if not sooner. I hate saying it, but I don't think anybody saw this coming with the amount of job displacement there's going to be. But anyway.
Why did you want to join the show today?
Let's talk about stock. I'm going to set the stage, even though you already know what it is. Pretend you don't know what it is. I found a stock that is trading at an even stupider multiple than NVIDIA and Google. If that wasn't possible already, it is insane. This company is legitimately trading as a tobacco company.
Palantir, right?
Palantir all day, every day. So Altria Group, which I'm a shareholder
It's Palantir because it's a tobacco company because it's smoking.
Listen, Palantir is smoking hot right now. They may go into overdrive in a couple of weeks, but this company that I'm about to talk about, nobody likes. Analysts don't like it. Shareholders don't like it. Nobody likes this company. It has a forward PE. Now, keep in mind, Alphabet's forward PE is 13.95, for 2027 earnings. It's almost at a tobacco company level because Altria Group is trading for 10.37 times earnings. This company that I found, which is a free cash flow machine, has more cash and investments on the balance sheet than debt, buys back a lot of shares, has a forward multiple of 10.49 times.
Wow.
It is incredible, the multiple that they have. And nobody likes it. And it's one of the most undervalued stocks in the market. So much that I think I'm going to start writing a new series on Seeking Alpha, and I'm going to build a value portfolio and get after it.
Did you write an article about this stock already today?
Yeah, I wrote an article tonight. It's coming out tomorrow morning, I believe.
All right. Well, why doesn't everyone guess what the stock is? What do you guys?
Yeah, because you know what it is, so everybody should guess.
We got some Oracles. We got some HPs. We got some Adobes. We got some Pfizer's, Rocket Labs. We got a lot of PayPals here. We got some Hims. We got some Celsius, Clorox, Salesforce, Altria. I think the number one answer I'm seeing is PayPal here.
Should I tell everybody what it is?
I think you should tell everybody.
I think you have one of the smartest audiences in the whole financial game because it is PayPal.
It is PayPal.
PayPal is so undervalued. And I got some news for Alex Chris, their CEO, because I put a whole section in the article, if it gets published, about what they should do to turn this stock around. Because this quarter was fire. It was fire. This company is going to do $6 billion in buybacks this year. They're going to do $67 billion in free cash flow. And they should switch to a dividend-paying company. And they should allocate $3 billion to buybacks and $3 billion to dividends. They have 979 million shares outstanding. If they do $3 billion in dividends, they'll be paying $3.06 a share. PayPal is currently trading at 66.32. This would put their starting yields at 4.62%. And they're still buying back $3 billion worth of shares a year.
So I agree with everything you're saying, but you said the earnings were fire. I wouldn't say that.
The company's valuation is fire, and this was a great quarter.
I don't know if it was a great quarter. I mean,
revenue growth is going up.
Transactions went negative for the first time ever, or for the first time in months.
But what is important is that their trend on revenue is intact.
They grew 1% year over year.
Yeah, it's not exciting from a growth. This is not a growth company, okay? This is an undervalued gem. And their growth is still growing quarter over quarter. And while the growth was 1.19% year over year in Q1, it is still growing. But the forward metrics about their EPS growth is what matters. Now, I'm going to show you something. Because this is about freaking business. This isn't about revenue growth. It's going to take, they're going to take the company private in 11 years. So you're not even going to get to see what you just said. But look at this. This company has 26.4% EPS growth from the end of 2025 to 2027. It's almost as much growth as Alphabet. So forget about top line revenue. They're growing their EPS and they're buying back a ton of shares.
Wait, how much EPS are they doing in 2025? $5?
$5.
So they're trading at freaking 13 times.
13.26 times.
And in 2027, they're doing 6, which means they're trading at 10 times 2027. Is that reasonable to pay for EPS growing at 26%?
No. The only other company, I mean, look, Alphabet and NVDA and Meta all trade at a deep discount. But once again, I add some additional companies. Visa, roughly the same revenue, the same EPS growth, right? 27.24% versus 26.4%. They're trading at freaking more than double the multiple.
Yeah, 30 times. Yeah.
So what are we, it's like, what are we doing here? Like, what are we doing? Do people hate PayPal that much?
Hate PayPal. That's the answer. They hate PayPal. I think that's the answer, dude. And I also think I love your idea about giving a dividend because the buybacks obviously aren't increasing the excitement around buying the stock.
It brings up a whole new thing. Look, $6 billion in cash is going to stock buybacks. Right now, they would buy the company back in around 11 years based on the amount of shares they have and the free cash flow. Because the market cap is $66 billion or so. It's crazy. So you do half the buybacks. You're still reducing the shares by 5% a year with $3 billion. And then you give a dividend. and you started at over 4%, it'll be one of the largest dividends in tech. And you can start a dividend growth platform. You could even drop the buybacks down to $2 billion a year in buybacks and keep juicing the dividend and they're not providing shareholder value right now with buybacks. They haven't been. The market doesn't care. Give that money directly to the shareholders. Put a 4 or 5% yield on that right out of the gate. Watch how many people start buying the stock. Watch how many dividend funds start adding it to their fund. You want to create excitement, put a 4 or 5% yield. You look at what the volume does.
No, I so agree, because if they buy back stock and they don't give it to you in the form of a dividend, the only way you benefit from that is if people buy the stock as well, because they're so excited about the buybacks, which creates the supply and demand pressure that gets the share price to go up, and you benefit off the capital appreciation. But if that's not happening, which it hasn't happened for a year,
right,
at least you get a 4.5 or 5% divvy. It's guaranteed.
Right.
And you got the buybacks, and you still have some top line growth, or where you have a lot of EPS growth of almost 30%.
I mean, I made a chart which share this real quick. So this is their free cash flow through 2024. And I mean, they did I can't see because the number is on top. Let's see if I can make this a little bigger. 6.77 billion in free cash flow last year, and bought back 6.4 billion worth of shares. I mean, this company is a free cash flow machine with basically no debt. They have more liquidity on the balance sheet than there's more liquidity on the balance sheet than they have debt. So they could very easily do a buyback at a 50% cut rate and give the other 50% in dividend. It's just nothing else is working. Nothing else is getting the stock excited. Do this. Alex Chris should do this. And I would like to think a lot of people are buying it.
Maybe there's too much competition from Stripe and Wise and Revolt and Apple Pay. And
I don't know if there's too much competition. PayPal's revenue isn't declining yet. It continues to grow.
I mean,
it's not declining.
Yeah, but 1%
it's not exciting, but it's not declining.
1% is not something where you feel confident about the trajectory. Like, I agree with all the numbers you're giving me, but in terms of narrative, I think the narrative's cooked on PayPal. It's a value trap. That's what it's become, a value trap. I mean, realistically, why would anyone buy PayPal outside of the valuation? There's no story to PayPal. PayPal, dude, there's no story to PayPal.
I wouldn't go that far.
What's the story on PayPal? And don't tell me buyback.
AI.
Oh, don't give me any of this AI bullshit.
What? Oh, you just said AI is so Palantir's bullshit?
Dude, Grindr has a better AI narrative than PayPal.
What are you talking about? You just said AI is bullshit.
No. AI is real, but every company trying to use AI inside of their narrative to make a thesis, a lot of it is bullshit.
No, they're building a new commerce platform. There's actually a lot of things that were interesting that they said.
There is nothing that is interesting about what they're doing with AI. Like, literally nothing.
Interesting.
Dude, there's no AI thesis to PayPal. There actually is. There is a really decent AI thesis to grab, and I can go into it, but like, I can actually explain it. I don't think you can explain to me how PayPal is using AI.
Oh, I can. Just give me a moment. Let me bring up
Go ahead, do it. Floor is yours.
I'm bringing up my notes. Hold on.
Don't tell me advertising, because that's not a.
But they're building an ad business,
bro. AI is not going to make PayPal ads that much better. It'll make Facebook ads a lot better because they have all the data. PayPal doesn't have they've got data, but they don't have like the types of data where advertisers are realistically
they know exactly what people are spending money on them at. They have the best data.
If people aren't using the product as much, it's
data setting itself up to transform from a payments company to a commerce platform. Okay, it's heavily focused on making PayPal and Venmo available everywhere customers want to pay, online and in store. It includes their upgraded online branded checkout. What else do I have in my notes?
Grab $4.95 overnight on Robinhood.
Is that good?
Well, it's not bad. So
Okay. All right. So
Come on,
PayPal is
Steve.
working on
Steve.
expanding its omni-channel and branded payment methods,
Steve,
including.
this is all corporate BS. Like, you know, none of this matters. Like, you know.
No, listen, they are leaning into AI to enable. I can't even do it with a straight face. Agentic experiences where AI agents can interact with PayPal's APIs to facilitate payment
Agentic
tracking,
experiences.
invoices, and more with AI clients. It's building an ad business, leveraging transaction data to create personalized shopping experiences and help merchants reach shoppers.
Bro, who's gonna buy shit off PayPal? People use PayPal to pay. They don't use it to buy shit.
I'm just telling you that where there's a will, there's a way. Revenue keeps growing. It may not be 40% like Palantir, but it keeps growing. And they generate so much profitability that they just keep buying back shares. And they can buy the company back in 11 years.
Here's the real question. Are you actually going to buy it now based on your article?
If I start this new series, I will be buying it. I will not be buying it over Alphabet or NVIDIA right now.
Do you know who Matteo is?
No.
He's a former Palantir employee.
Dude, steak dinners are great.
A lot of steak dinners.
And
by the way, he left Palantir to start his own crypto startup, and he was one of the first people at the AIP bootcamp. So he knows AI. So when you give me this agentic, enablement of commerce, like he's probably listening to that like that's full of shit. That's just, come on, bro. It's full of shit.
Listen, they're going to become an AI company. You watch.
Grindr will be a better AI company than PayPal. I'm saying it right now.
I doubt that.
Grindr, the way they will allow people to find each other using AI and targeting and the relationship building via LLMs to actually create meaningful experiences, I think will be more important than whatever ad technology that PayPal creates to monetize consumer data. And the data is not even that good, bro. Like, they know what you're buying, but Facebook knows like the next thing you're gonna buy based on what you're liking, how you're commenting. Like, it's a totally different experience. I don't buy it.
That doesn't mean that PayPal isn't a good value here and doesn't, got good EPS growth here. You still got top line growth. It's undervalued.
Oh, I agree. I have zero. My argument is there is no narrative to PayPal. Like, zero narrative.
We're gonna build
that matters.
We're gonna build. I'm gonna start trolling Alex Chris, and we're gonna build a dividend narrative.
I genuinely think you should tweet that to him.
I'm going to.
Because he sees tweets. It's not like he's not on Twitter.
I'm going to. I would be, and think about this. This is going to sound so nuts with what I'm about to say because I love buybacks, but I actually think because of how many shares, like PayPal has spent, how much have they spent?
Grab is up on Legend, by the way, not on the actual Hood app. So very low volume, but on Legend, it is green. I didn't know you could trade some stocks on Legend, but apparently you can.
I think they've spent something close to like 30 billion on buybacks since 2014. But regardless.
Who agrees with Steve? Is there any value here where you think it's a buy?
Yeah, dude, there's a lot of value there. If they switched out of the $6 billion in capital return, if they did, oh my God, if they threw $5 billion at the buyback, $5 billion at the dividend instead of buybacks, you ready for this? They'd be paying $5.11 in a dividend, which is a 7.7% yield.
See, I would buy PayPal then.
Right. You would buy PayPal if it yielded 7.7%, but you won't buy it if they're doing $5 billion worth of buybacks, right?
Yeah. I mean,
so think about that. How crazy is that?
It would be a safe dividend play. Like it's more fun than buying Verizon. It's way better than buying Verizon.
I'd sell all my Verizon and put that money in PayPal at that point. No question about it. Like, they're doing $6 billion in buybacks, and they have 979 million shares outstanding. Take $5 billion, build out a dividend plan. You're getting a yield on cost of 7.7%. And if the company goes to 120, you still have a 3.5% forward yield.
You know what's so sad about it? This time last year, I knew a lot of people, including you, that were on the PayPal train. I think I lost like $5,000 in PayPal as well. Derek,
I made money on PayPal.
You made money. I lost money. Derek lost some money in PayPal. There's a bunch of people on Twitter that like everyone was on the train that this thing is so undervalued. And now it's become this like, what's even the point of investing?
So think about this. If they did a split, 4 billion, 2 billion, still do 2 billion in buybacks, do 4 billion in a dividend, 6.16% yield.
We're going to play the video at the end, or maybe we should play it right now. Do you remember PayPal made me viral on Wall Street Bets for a not necessarily good reason, but you remember this video,
No,
right?
I have no idea what you're talking about.
You've seen this video before.
Probably.
You've had to have seen this. Okay, here it is. This is the video. All right, just be careful about your speakers, folks. This one gets loud, but this is what this stock did to me.
So I should turn this down. Okay.
Yeah, turn it a little bit down. All right, here we go. This was Q1 2024 earnings. That will get there eventually.
3% off. 3%.
Holy crap. Holy crap.
It's popping.
Holy crap.
4%. 5%.
Holy crap. Holy crap. Holy crap. 6%. 6%. Holy crap. We broke it. Oh, it's 67. I'm trying to get the numbers.
7.5%.
Let's fucking go.
Bro, that green candle is gonna go pop up right now, bro. 8.5%. 8.5%.
What did they announce?
9%.
I'm trying to get this great. They had to announce something, dude.
9.3%. 9.5%. 10%.
10%.
10%.
Okay, so we got Andrew. They beat revenue by about 40 million. Okay, so we got that number. Okay, here we go. They beat EPS by about 15 cents. I got it. They beat revenue by about 130 million. So there you go. You got to beat on the EPS and you got to beat on the revenue. You got to beat on the EPS. You got to beat on the revenue. And then the guidance numbers should be coming in very soon. And then the street will be able to react to that as well. Oh, we got to ring the bell for this, Adam.
Bro, it's going back down. Now it's even. People are not liking it. Now it's down. 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 What the fuck? Down 5%?
How the fuck is this
happening? Bro, I have no idea.
You know the Joker? Bro. You know the Joker in The Dark Knight where he just starts laughing and then Batman keeps punching him and he keeps punching him and he just keeps laughing because all you can do is laugh? That's what PayPal did to me, bro. That's what PayPal did to me.
Well,
so if you want me to go through that again, then you have to be on the earnings call with me next time.
I'm not saying that you should go through anything. I'm just saying that Alex Chris needs to listen to me.
I think this stock has no narrative anymore.
Bro. You put a 6% yield on this thing, you watch how many people buy it. People will be leaving Exxon for PayPal.
Exxon? Oh, ExxonMobil.
Yeah, Exxon's got a 3.5% yield.
Bro, there's another issue. X is launching a payments platform soon. Twitter.
Right, they're just going to buy PayPal.
No, they can't afford to buy PayPal.
Why? Elon could write a check.
Elon has enough debt already. Like
maybe Elon's going to buy XRP.
Okay, maybe. But if he doesn't buy PayPal, that's more transaction volumes I see going away from PayPal because you got X a lot. There's 500 million people on X.
Did you look at the Brad Garlinghouse thing I sent you from Fox Business?
No, I did not.
What?
Dude, XRP is a scam.
It is not.
I don't
it's not. Oh my
scammer,
God.
The CEO scammer talking.
I am not a crypto person, but XRP is the future.
Should I play this clip? It's a minute-long clip. Let me play it.
Or if you're not going to get dinged, play it.
No, I won't get dinged, but let's see if people think he's a scammer or not. Just to give context, Steve bought XRP at 19 cents. So,
and I am not buying any more, although I think it's going a lot higher.
Which shows you how much conviction the guy has. I mean, It's not buying anymore, even though it's going high.
I'm doing that for a reason.
It's really interesting. You think something's going to go up, but you don't buy. It's just incredible. Just incredible.
Like Japan, I think are still unlocking. The market opportunity here is massive. You have trillions of dollars flowing cross-border globally. It's still largely dominated by the SWIFT network, if you will. And that's architecture. That's a technology architecture that's developed 50 years ago. There's an opportunity to modernize. That takes time, particularly when you have a government in the U.S. kind of combating that innovation. But that's changing now. The Trump effect, if you will, is profound. You're seeing that in asset prices, but you're also going to see that in the adoption of these technologies.
Yeah, and I think so. When you're looking at the growth story then of Ripple, does it still come from overseas? Or are you expecting a change in terms of domestic interest in Ripple?
Well, we're definitely already seeing a change in the domestic interest. The 6 weeks after President Trump was elected, we signed more deals in the United States than we had in the previous 6 months. So these are very innovative technologies. I think they're going to play out over 10, even 20 years in terms of how they integrate and rewire the financial infrastructure of the United States. That's across payments. That's across even the settlement of maybe real estate transactions, securities transactions. So I think we're going to see this play out over a long arc. But the United States is finally unlocked, and I think people are underestimating how big that change is, and you'll see that continue to play out this year.
Yeah. Now,
the two cryptos that I am interested in are XRP and Solana because they have the most utility.
Solana's legit. XRP, I don't know.
They're both legit. Look, right now, if you were to send a wire to somebody in Japan, at least 2 or 3 intermediary banks would take a fee for helping transfer that money, and the wire would take several days to settle. XRP is instant.
Steve, one of my best friends in crypto just texted me because he's watching. He says, please don't let Steve buy any more XRP.
Well, I'm not buying any more XRP. I have more than enough.
That's the good thing.
That's the good thing. But when I go over the house, you got to talk to him. You got to get him on the show. Get Big Bad Brad on the show.
I'll try to get him out. You got to do the interview with me.
100%.
Can we end it out talking about SOFI?
Sure. You want the SOFI community to hate me even more, right?
I just want to say, I told Steve on the phone today, I think you and I have been the only objective people about SOFI.
Can I get my numbers out real quick?
Yeah, get your numbers out. I think Steve and I have been the only people saying the tech multiple is not there because there's not any tech growth. Nodo's communication is very bad. Steve, I've been saying that for like a year. Steve started saying that about 6 months ago. And then 3 is that there is not growth that's exciting to the street on this company, even if they're growing revenues at 33%. Like, I don't think there's been that many people out there that have been saying, hey, there's an issue with SOFI. Now, do we both think it's undervalued? Yes. And that's why I think we both hold it. But there is an issue with this stock, bro. And I'm not just saying that because the stock pumped and dumped. Like, it's not even about the stock price. Like, there is an issue with the narrative on this name that is making it incapable of holding on to any level of market. The S&P was up 6th green day in a row, and SoFi couldn't go up 0.25%. I think there's an issue here. There is an issue, and maybe it's Nodo, maybe it's the tech platform is nothing, maybe it's the market doesn't get it. But I wonder how long is it going to be until the market understands what's happening here, and how much more they're going to have to beat on revenues to be able to get the market to understand it. It was a great swing trade, yeah, at 1450. But after seeing, and the numbers were phenomenal today, dude. The numbers were not bad. I think it is same thing with PayPal. I mean, I think PayPal's numbers again weren't horrible. SoFi's were way better, but there's a narrative to PayPal that's just not there.
Yeah, I mean, it was a blowout quarter, 33% year-over-year growth in revenue. They did $771 million. They did, and look, I came in very bullish on Friday night. I said 784 million, which was like 50 million over the consensus. I thought they were going to have a blowout, and I said 211 million on adjusted EBITDA. They came in with 210 million. I was 1 million off on adjusted EBITDA. I said they were going to do 61 million on net income and 5 cents EPS. The consensus was 3 cents. They came out and they did I think 81 million. No, I'm sorry, 71 million on net income, and they did 6 cents on EPS. This was a blowout quarter, a beat and raise again, just like we said. And the market said, cool story, we don't care, not interested. That's what happened. I mean, they're now updating their guidance for 2025 with a high end of 3.27 billion in revenue, 865 in adjusted EBITDA, and 305 million in net income. I mean, their growth is still going to be 26% on the high end, and we know that this number is going to get beat and raised at least 1 or 2 more times this year.
Yep.
So the problem.
So what's the issue? Why do you think the market's ignoring it?
I called Tanner from the card today, and we were talking, and I was busting his chops about this, and I said to him, if you were not invested in SOFI, would you invest in SOFI or NVIDIA, or SOFI or Alphabet? He's like, well, that's not fair. I'm like, of course it's fair, because I said if you're not invested in it, where would you put your money? You got to put it somewhere. Would you buy SOFI or would you buy something else? And the problem that I have.
That's a great question, actually, to frame any discussion around a stock.
Right, because I don't care if the company is in a different industry. Where's the best use of your money? So the problem that I have with SOFI is they are trying to sell the idea of being a technology company. And everybody wants them to get a tech multiple or a hybrid multiple. But they're a finance company right now. Like, they're legitimately a finance company. The fact that they are 100% cloud, the fact they have everything on the back end that they own, and they don't have physical locations, and they're not going to a third party, nobody cares about that story. Until your tech platform is generating at least a third to 50% of your revenue, you're not going to get a tech multiple. And they're focusing on all the right things. They're growing everything the way that they should. And they're spending all their time on a lot of things. And something that people don't realize, those deals with Blue Owl is for overflow. And what I mean by that is there is a need that other companies have for lower quality loans than what SOFI is writing on their own. This is a fee-based service for SOFI that they're doing the loans for other companies.
Yeah.
For stuff that they don't want. This is a great company, but right now they're being looked at as a finance company. And I'm sorry, but banks don't get big multiples. And that's the problem with SOFI, that they want to be a tech company. And right now they have growth rates of a tech company, but they're a finance company. And that's the problem. I want them to get a
real quick before we continue. Nunzio, thank you for the $20 just for having Steve on. Thank you, Steve. Steve is the GOAT.
Thank you. I just want SOFI to get acquired at this point so you can put me out of my misery and I can use the money for something else. Because right now, I don't want to sell because I think there's so much potential, but I would not be mad at all if they got acquired tomorrow.
Thank you, Nunzio, again for that super chat. So here's what I'm thinking, right? The counter argument is no bank is growing at 33% like SOFI. So why doesn't SOFI deserve a multiple better than Bank of America? What is the response to that?
I don't know.
Because that's what I kept hearing today.
Yeah, but Bank of America has been in business 100 years. They're also the second largest bank in the country. They're not going to grow at these rates. It's much easier for a smaller company to grow at these rates.
It's like Walmart doesn't get, maybe Walmart's not the best. Maybe it is. Walmart doesn't get Amazon's multiple, even though they do more revenue than Amazon.
There's a bad example, and here's why. They don't have AWS.
No, but that's my point. Like, Walmart does way more revenue, but they don't have this, growing tech SaaS business.
Actually, you know what? It's a bad thing because they have a bigger multiple than Amazon.
Well, yeah, because the market's stupid right now.
Because the market's stupid.
But I think that's the comparison. SOFI can grow revenues at a gajillion %, but if there's not the type of revenue
sector that they're stuck in.
Yes.
That's the thing. There's nothing different at the end of the day about what they are doing versus any of these other companies. Like lending, you can invest in a MREIT, you can invest in a business development corporation, you can invest in a bank. They all do some degree of lending.
Well, here's the other thing. And I've been talking about this since early 2024. Took a lot of heat for it then. My opinion has not changed. I reiterated this point a couple times after Noto did his Liz Young podcast, which is that there is nothing, and when I mean nothing, I mean absolutely effing nothing creative or inspiring about SoFi.
So I
with Robinhood, there are so many ways people feel affiliated with the brand. You've got this amazing product that people can't stop using. You've got this wealth transfer thesis. You've got Vlad doing 17 billion podcasts every other month to communicate the story. There is nothing interesting about SoFi as a product or a company, even if the numbers are good. And at the end of the day, people buy stocks based on just their emotional interest that they have in the name.
Well, I was talking to somebody today and they were like, but could you feel his enthusiasm?
Oh, give me a break, dude.
And I'm like, you did not just say that to me, did you? Like, really? Because I've been complaining about the RFP process. So I have Control F open right now. And here's the only thing said about RFPs. We are pleased with the demand from new client opportunities for the tech platform business and expect these wins and others in the RFP process to have an impact on our revenue in 2026 and beyond. That is such horseshit, because I understand what he's trying to say with this, that they expect him to win some RFPs for the tech platform this year.
RFPs, by the way, are requests for proposals in the tech platform.
So what they need to do, and what I've been saying, and obviously nobody took my advice, is take a minute on the earnings call and say, look, we are currently involved in 15 RFPs. 5 of them are with large financial institutions. 7 of them are with mid-level banks, and 3 of them are with community banks. And we feel really good about where we are. And we feel that there's going to be some that are ending sooner in the 3 to 6 month tier. And we think that we have a really good shot at getting a couple of wins this year. And we can't tell you who we're in discussion with, but what we can tell you, it's some of the largest household names that you've heard of. And we are working diligently to make sure that we are generating revenue from the tech platform while powering our system.
But do you think they're not saying that because they suck at communication, or because if they said that, they'd be lying, because none of that's really true?
Well, one, I think that they're not. I don't think that they think it matters as much as I think it matters, and I think that they can go without talking about it, which I think is a mistake.
But that's why would they think they don't need to talk about that?
I don't know. But I think that their communications department is making a very big mistake here, because Noto going on the Liz Young, whatever her married name is now, podcast. I always will call her Liz Young Strap because that's what her name was. But going on the podcast and saying that they want to be a top 15 tech company. Okay, you want to be a top 15 tech company, start acting like a tech company.
I don't think they're a tech company, bro.
I mean, just because you bought Technesis and you bought Galileo, and that's allowing you to deploy products quicker than if you had to wait for your vendor to deploy everything that you want on your roadmap, that doesn't make you a tech company.
So I think you and I both agree with Casey's comment right here. Put the tech platform aside. Everything else they have is enough for a higher multiple. The problem is...
Yeah, no, it's not.
Okay, so even if you did agree with that, a higher multiple comes from some level of a story around the tech or whatever else they're building. And I think there's really no story to lend.
They're trading at 50 times this year's earnings.
Well, they just became profitable. So that's, that's why.
But it's not like they're trading at a freaking 20 PE.
That's fair. That's also true. Robinhood is at like Robinhood's forward PE is
they're trading at 50 times this year and 26 times next year. Sure, they could have a little bit of a higher multiple for next year, and I think that they're going to blow out earnings, but it's not like they're trading at a value company.
No, that's fair. That's very.
I mean, look at where Palantir's trading. And when you look, but seriously, look at the revenue and the revenue growth between the two.
Very similar.
Yes, but Palantir makes a little bit more on net income. Maybe Palantir does 650 or 700 this year. But if SoFi does 400 and they generate 60% of the net income, they should get a much bigger multiple, but they're not because of this sector. They're bound by the sector. They are looked at as a financial company. There's no financial company that really has a big multiple.
And there are fintechs that do, but not financials, is your point.
No, fintechs don't even really have big multiples. Look at Block, look at PayPal. Those don't have big multiples.
So how do you explain Robinhood? Are they more of a tech company?
Well, it's looked at as a tech company right now. They're looked at as one of the cool kids.
I think that's the answer then. SoFi's got to become a cool kid.
And Robinhood's trading at a 40 PE right now and 33 next year and 29 times. Like Robinhood does not have a lot of growth in EPS on the horizon from what the analysts are saying.
Right. That's fair.
Like this isn't a growth story. This is, Robinhood does not have a lot of growth either in revenue. So I don't know how they're.
Oh, no, you're wrong on that. They're growing 48% year over year revenues.
Well, they're expected to grow 24% this year.
Well, that might happen, but the analysts have been wrong for the past 2 years. So
I'm just saying that based on what 17 analysts have said, they're expecting 24% this year.
But to your point, even if Robinhood's expectations are low, they're still getting a good multiple.
Still getting a good forward multiple.
Because the street expects them to probably, grow past that. Because they're a tech company and they can figure out how to grow, unless we get a recession. But
yeah, I think it's the sector. I really think it's the sector. I mean, look, SoFi has a lot of forward growth that can be unlocked. And I think that they're going to do better than what these numbers are. And I think it's an exciting company. I would just like better communication around tech. And if they really want to be a technology company, I think they need to prove it. And the only way you prove it, and I've been saying this for years, is you have to become the AWS of fintech. You have to pioneer banking as a service. And that means you need to get Citigroup or Wells Fargo or UBS, one of these big financial money centers on your platform, and you need to power their back end. And then if you're powering their back end in addition to your back end, and then you are getting other regionals and other thrift banks and community banks, you can be looked at as a technology company because you're the only company that has banking as a service. But until that happens, I don't think they're a tech company.
Lunar says, I don't think of Hood as a tech company, but they innovate like a tech company. SoFi is boring. Sorry, not sorry.
No, Uzi's right. No business banking either. Like, really? Like, why?
I still don't. I would have left Bank of America for SoFi a while ago if they.
Did they even talk about it on the earnings call? Let's say.
It's just weird though, because I still feel like they could get to 20 as the market, starts to the macro and the lending and
how annoying
financing, all that stuff.
And we recently signed a deal with Mercantil Banco, which offers personal and business banking services in Panama, and we'll use our Cyberbank digital banking platform. So they offer, some company you signed a deal with overseas has banking services for business, and they're going to transition to your Cyberbank platform, but you can't do business banking on your own. It's annoying. It's annoying.
Well, I also wonder the quality of engineers at SoFi, because with Hood and Palantir, they're the best of the best on the planet. It's so do they really get? Does a bright young kid from Stanford want to go to SoFi?
Maybe they're going to be an AI company and have AI write their code.
I mean, dude, we still don't have level 1 options.
I don't care about options.
But I'm saying if you're going to be a tech platform, you have to make sure your users want to keep using the tech. And when someone says, "Well, I guess I got to go to Robinhood to sell calls,"
that's not what I mean by a tech platform, Amit.
No, but that's what I mean. I know you don't mean it by that, but my point, this is my whole point on Robinhood. Like the fact that they use a trade on Robinhood is done in milliseconds. That is because of their back-end technology on the brokerage that they've perfected over the past 10 years. That is tech, even if it's not B2B SaaS or whatever, but there's a heavy level of engineering focus there.
I get it.
And SoFi feels like shit when you try to trade on it, bro. It's disgusting.
Look, I am not happy with communication. I'm happy with everything else.
I agree.
It's a great company, and I think they're doing a lot of great things. I want business banking. I want wealth management. I want tech platform.
I just got on SoFi for the first time in a while. I'm about to search for a stock. Just see what it looks like. Let's do Palantir.
I do think that SoFi is going to have a lot of tailwinds once the Fed starts cutting, because their loan refinancing platform is going to go through the roof.
Well, that's the thing. Is that enough to get the stock to 20? Right?
I don't think so.
You don't think refinancing is enough to?
I mean, I was on the phone with Matt, and I made him call Tevis so I could call Tevis a piker for the bet him and Matt made. So.
Oh yeah, yeah, they made that bet a while ago.
I don't think SoFi is making 25 this year.
Well,
like SoFi sold off all of its gains, and it's down in the pre-market. Like this quarter, once again, meant nothing. Like, how many times do we have to go through this?
Yeah. Again, look, I still think it'll hit 20, but I do agree that there's got, let's say the tech platform just grows 10% for the next 5 quarters, like there is no AWS of fintech anymore. It's done. So that's why
it's happen in the future, but it's certainly not helping them now.
I mean, if it doesn't happen this year, and it didn't happen last year, the idea that it would happen the third year, maybe, but that's why I said the loan platform, Noto's got to make it his AIP.
Yes.
And I don't think on the call today, he like made it.
No, he didn't.
AIP. I don't know.
They're at a crossroads right now because they built a great platform. They built a great business, but the tech side is hurting their multiple.
Yeah. And I think it's just the thing that pisses me off about it is that there's such a heavy retail base, and it feels like they know that, but they're not willing to acknowledge it realistically. Because I don't think SoFi I don't think Noto likes that he has a heavy retail base. And he doesn't really talk to retail. Like Vlad talks to retail. Carp talk, like they literally
embrace it.
They embrace it. They talk. I think Noto thinks of himself as some banker that deserves to have BlackRock own all the shares.
Yeah, because Noto's a banker.
People are investing in Noto as if he's a founder with this grand vision. And it's like,
no. I invested in Noto and SoFi because I think Noto's leadership is incredible.
I was talking about that today on the open.
And I think that this team pulled off something that not many management teams could pull off. There was a 50-50 chance they go out of business during the pandemic. I mean, they had one hand and one leg tied behind their back, and they emerged victorious against all odds. I mean, they completely innovated and came through for everybody. And you can't discount that. The leadership is great. It's just the messaging around technology needs to change.
Yeah, I agree. But I still think we can hit 20 by the end of the year. I think it's possible.
We'll see. I don't know. I hope so. It'd be nice. So where are we at on the next 3? We got Microsoft, Meta, Apple, and Amazon this week, right?
Microsoft and Meta tomorrow. And then SMCI. Oh, did you see what happened to SMCI today?
No.
Oh, you didn't see this, dude. SMCI fell 15%.
Why?
It's actually bearish NVIDIA until you realize why I think it's not bearish NVIDIA.
I mean, look at TSM's numbers. I'm not bearish NVIDIA.
No, but look at this. Look at this. Prior guidance, 6 billion. New guidance, 4.6 billion. Prior guidance, 53 cents a share. New guidance, 17 cents a share.
What, they just put that out today?
But preliminary Q2 results today.
Well, that's not good.
Well, now, so again, that was and then I was scared about NVIDIA, but I realized I think this is due to the H20 chip being banned.
Could be.
I think I don't think it's a Microsoft or Google getting rid of their GPU. I think it's China.
No, because, well, like I said, we got to see where these companies are in CapEx. You have Alphabet maintaining 75. You had TSM blowout numbers. I mean, TSM is generating so much free cash flow that none of the revenue is slowing down. I think it's going to be fine for NVIDIA. I'm not worried.
Yeah, I think NVIDIA already took the hit after disclosing the China news. I think SMCI had to take a hit. But I wish they said it was China, but they didn't explicitly say that. So does SMCI serve Chinese customers? I think so. I mean, every GPU in a Chinese company needs a server. It's either Dell, HP, or SMCI. Maybe there's Chinese server companies, but I would imagine Alibaba's GPUs still need SMCI's products, even if it's not from SMCI.
Okay. I mean, I'm going to pay attention to it. It's interesting. But did you see Chevron where that's trading?
No, they didn't have earnings today, though, right?
No. Chevron's trading at 139. It's trading at less than 9 times earnings. The dividend is almost 5% now.
Interesting.
And when I look at the forward EPS growth, I think Chevron's going to be a play. I really do. I like Chevron a lot.
I just think Google and NVIDIA trading at these multiples means that a lot of capital gets deployed there.
Oh, I think it means the market is off balance, and Walmart and Costco should trade at these levels, and NVIDIA and Google should trade at their levels. How about that?
I'd agree. What do you think of the Waymo news? Toyota and Waymo preliminary agreement to explore collaboration focused on accelerating the development of deployment of AI driving technologies.
Very good. Think that's bullish Google.
Dude, Waymo keeps it like, I know everyone's bullish robotaxi, and so am I, but Waymo keeps pushing. And Tesla has not put out a single robotaxi yet.
Yeah. It's called, they're backed by Alphabet, and it has an open checkbook and do whatever the hell it wants.
And it's called LiDAR versus neural nets. And I think in the next 5 years, we're going to find out who was right. Because you got all the Tesla bulls saying LiDAR's stupid, and you got all the Waymo bulls saying you guys are not actually going to be able to pull it off with just AI neural nets. Who's it going to be? Who's it going to be?
I don't know, but Costco more than 50 times earnings doesn't make sense. Like, really. Think about it. Alphabet generates Costco's entire year of net income in less than 20 days, and it trades at a fraction of the multiple. What is this market doing? And why is nobody on TV talking about this?
Dude, the fact that no one's brought up the Costco.
I'm so sick of it. Like, why is nobody talking about how the market is so out of whack, where you have the real growth companies, the companies that are driving innovation, and the companies with the most profits and the biggest balance sheets trading at a fraction of Walmart and Costco? Like, what are we doing?
Oh, cool. You want to see something? You're going to like this. You're going to like this. Someone just tagged me in this. We were talking about these guys today. So Josh Brown and Batnick, they put my tweet in their video.
Did they really?
Yeah, it's cool. I just got tagged in this.
About Amazon. So this happened this morning.
Amazon will soon display a little number next to the price of each product that shows.
Wow.
That's cool. That's cool. That's dope. So this was the dude.
Wow.
This is. Let me. Can I just give a little bit of inside game right here? This is what it means to be a content creator. So that came out at 9:03. I just want to set the stage of what I was doing to get that video out there. I am streaming. I'm hearing Besant and Caroline Levitt say this crazy shit about Amazon's political Chinese propaganda, yada, yada. I'm hearing it happen in real time. I'm managing the stream. On the other computer, I'm typing up the caption. Then I'm going into my phone on the YouTube video, screen recording what I just heard, muting the audio on my computer so I can't hear it so I can pay attention to cutting the video, then cropping the video, sending the caption back to my Gmail so I can copy and paste the caption on my phone, then posting the updated video on my phone, and then pressing tweet before I have to talk and analyze about what Besant just said. But it's for moments like this where you are the first person to get the video out into the platform so that maybe a Josh Brown can.
Dude, you should message both of them.
I definitely want to talk to them one day.
You need to get on the Compound and Friends. They need to interview you.
It would be pretty fun, dude. I think it could be like life of a retail investor.
They should interview you without a question.
But like just to give people context, bro, this is like, and I know it sounds like it's not work, right? Because you're just like tweeting something, but this is like the shit you have to do in real time to get a bigger audience, because now they're sharing that, you know, that expands the pie. So
look, I think the Compound and Friends, top 2 financial podcasts right now. It has been for years for me.
I love Josh Brown.
Slash Business, like that, and All In are my 2 favorite podcasts.
Yeah, I agree.
And I mean, I think What Are Your Thoughts is really good too. I think all the Compound stuff is very good. Like they built such a great brand around them. Really good.
I appreciate you guys saying for all the support and saying you know, that you respect it and all this stuff. And I'm not even saying that to brag, dude. That's not what I do. I just like a moment like that. I want to give context. Like that's what I do every day. And you don't always get a post go viral like that, but that's what it takes to be a content creator. You got to be in there every moment. That's why you're obsessed with this 24/7. And sometimes it results in moments like that. So
everybody thinks it's easy.
Cool. Yeah, it's definitely not easy, dude. It is not fucking easy.
What?
What happened?
What's today's date?
29th. What happened?
The hell? What the? Oh my God.
Wait, let me guess. Your yogurt delivery is delayed to tomorrow or something?
No, I send a text and I go pick it up on Sundays.
You have a yogurt plug? You have a yogurt? You have a hold on. You have a guy like people have a guy for weed. You have a guy for yogurt?
I got a guy for dairy.
You don't just go into the freaking store and buy the damn yogurt?
No.
You text a guy.
You know this.
No, hold on. You text a guy to get your yogurt to be that is
no. So I have a farmer's market 4 blocks from me. Okay. The same people go there every Sunday.
You have a dairy dealer, bro.
That is good. So listen, the milk guy that does the milk, he does the yogurt, has all that stuff. The line can be 40 or 50 people deep. They come with one of those big rider trucks. I'm telling you, the amount of stuff that they sell on a Sunday morning is insane. So one day, we can get my definition of what rich is in a minute. I actually said it to admit, but I got there one day and they didn't have any more half and half. And once you start drinking this stuff, it's so pure. It's different than going to the store and getting half and half or milk from the store. Like Farm Fresh.
Real quick, Steve, I got to get the door for my sister. Keep talking. I'll be back in like 30 seconds.
Farm Fresh is just so different. And they didn't have any more half and half. And I got the guy's number and I will text him the day before and they put my order in a crate and I go there in the morning and I pick it up. So it's great. But yeah, I do not have a chart. My definition of rich is having enough residual income coming in to pay all your expenses. So if you're able to invest in dividend stocks and other things, properties, whatever, and if your expenses are X and the money coming in exceeds X, to me, you're rich. It's not an actual net worth or a number.
Real quick, do they do ice cream and everything or just yogurt?
Yeah, go to their website.
What's the website?
Ronnie Brook Farms.
So you have a plug and he gets your stuff ready from Ronnie Brook Farms.
No, he's from Ronnie Brook Farms. They load the truck in the morning and drive out and they do farmers markets all over New York. And I'm telling you, it is incredible. So these are the drinkable yogurts that I drank on the stream sometimes. The blueberry pomegranate is so fire. It's incredible.
I'm going to have to try one of these one day, dude.
It's incredible. Like if you like yogurt, this will change your life. It's incredible.
All right. So what is rich? I think that's.
And yes, they have ice cream. No, rich is when you have enough money coming in from your investments that exceeds your expenses. It's not a number to me. It's not having a net worth of X. Look, if you spend, hypothetically, let's just say all your bills, your whole lifestyle costs 60 grand a year. If you have more than $60,000 a year coming in dividends, to me, you're rich.
Wait, so your definition is your expenses are paid by passive income, essentially.
Yeah, whether it's rental properties, dividends, whatever it is. Yes, without having to work. Like, you don't have to get up and work. You have that money coming in residually. To me, that's being rich.
I think, who agrees with that? I think that's a fair definition, because you don't need $1 billion to be rich. You just need to have you just need to have
you don't need 10 million to be rich. You don't need 50 million. Like, rich is not a number.
Yeah.
It's a way of life and being able to afford your way of life from passive income. To me, that's rich. Maybe I'm right, maybe I'm not, but that is my goal, to have enough residual income coming in where I don't have to worry about anything.
You know that Princeton study, you probably heard of it, that after 75,000, your happiness levels in terms of income start to go, like, there's a residual increase. I don't know if the number is still 75,000. They did that study in 2010, but the point is, after a certain amount, like, you don't really get that much happier by having more, because your expenses are covered, right? So it's like, what are you going to do with the money? Unless you're an investor that loves the game of allocating, but most people don't do that. So there is an argument as well that that's your point, right? You don't need a ton of money. You just need enough to get by.
Yeah, I don't think focusing on trying to hit, like, goals are important, but when you talk about rich, I do think that there's a point where, how many cars can you buy, or do you really need a Ferrari? I mean, it's,
I think so. I think your definition of rich makes sense financially, but I think the spiritual definition of rich is, do you have a purpose in life?
Well, right? That's a much bigger thing. Are you happy? Because that's the most important thing.
But that's the real, because there are people that maybe make 80 grand a year, not 80 million a year, but they genuinely like teachers, right? Teachers get paid like shit.
Happy, that's all that matters. At the end of the day, if you're happy, that's all that matters.
And I think everyone wants to be happy and financially secure. But the point is, if you can find a combination of both, aka you do something you love and you make money.
Keep in mind, financially secure and rich are normally two different things. But I would prioritize financially secure over being what most people would consider rich. And to me, financially secure is having your bills paid by residual income.
Yeah.
Because then you can go do whatever you want. You want to volunteer 5 days a week, go volunteer 5 days a week.
Rich is being able to afford yogurt for life. That is facts. I do think that having a purpose, aka waking up and enjoying what you do and genuinely being excited for it, is a part of being rich. I don't know if it's 50%, 10%, 80%.
It's definitely part of it. I think that it's rare that you have people get out of bed and they love doing what they do. I think it's very rare.
Yeah, I agree.
I think it's very rare.
It's really rare. And if you are blessed to be in that opportunity, I think that's where the hard work comes in, because no one that I know that really loves what they do thinks that, like the classic Elon Bezos, right? Like they're grinding their 20s, 30s, 40s away at Amazon, Tesla, because they love it. Right. And it's not for the money. It's real. I mean, like, yeah, they want to build a bit, but it's to change the world.
Yes.
So I agree. What other definition of rich do people have in the chat? I think most people agree, though, that passive income, paying off your shit, can really help make you feel rich.
Yeah, I mean, look, if you're fortunate enough to have $2 million and you get a 5% dividend, and you got 100 grand coming in, and your expenses are $90,000, I would say that you're rich.
Yeah, if you can get a yield of 5%, you get 5% on a couple $1 million, and that passive 100K. Maybe your expenses are a little bit more than 100K, but the fact that 100K is already done just by
I'm just saying that if your expenses are 90 and you have 100 coming in passive without going and working a job, to me, that's rich.
Yeah. Look, I think, so here's a good example. Having the disposable income to spend on other people makes at least me to an extent feel rich. So my parents, they just went to Germany. They're going for a wedding, and my mom, she paid for the plane tickets, all that stuff. She had to get all that stuff in order. And then the day before she leaves, I give her $1,000 in cash. And she was like, you don't need to do this yet. And I was like, no, I want you to have $1,000 of just spent. You already paid for your plane, your hotel. I just want you to have $1,000 where you don't feel guilty about it. If you see something nice in Germany, you should go into the Netherlands as well, then just buy it, right? You don't have to worry about your personal money. I can afford to give her that $1,000, and I cannot explain, like I genuinely cannot explain how good I feel as a man to be able to give my mom $1,000. I can't give her 5,000 yet. I can't give her 10,000 yet, but I'm not at that stage, but I can give her $1,000. And that makes me feel really good. And if I could pay off my parents' house, I mean, I would feel richer than ever if I could pay off my parents' house.
I think that's a different level also.
Agreed. You need real money for that. You need some you need some FU money to be able to pay off your parents' house.
Yeah, like there's just like everything else, there's different level of things, but just my definition of rich is what my definition is.
Someone said in the chat as well, me buying my dad a Tesla, dude, like I pay that $600 a month. That $600 a month I can absolutely afford to part way with. And the fact that he doesn't have to worry about that and he gets to drive a new Tesla, that makes me feel amazing, dude.
Yeah,
it really does.
That's awesome.
But you need to have the money, the $600 coming in a month that you don't worry about to be able to make that Tesla payment, right? So,
yeah, look, it's all relative. But some people say they need 10 million to feel rich, 20 million, make 100,000 a year, 80 grand a year, 250 grand a year. I mean, it's different for everybody.
I did make that 1K back with Hims today, but then I lost that 1K on Snapchat. So we're net even on the day. Yeah, I think that's a fair definition of rich. I think a lot of you guys in the chat agree. Some of you guys are talking more about mentally rich, physically strong, health, all that stuff matters. No one's really saying $1 billion, though. I think people are moving on from that definition of.
Yeah, it's not realistic.
Yeah.
Like, listen, it's hard to get to 1 million, let alone do that 1,000 times.
Yeah, dude, it's not easy. Like, this is like, and when you become an investor and you actually invest in public companies and you realize how hard it is for them to make one extra freaking cent to beat on earnings, like, business is ruthless and it's tough. It's fucking hard.
Yeah, I think that there's a lot of definitions that don't make sense because social media makes things seem unrealistic.
Yeah, the ridiculous Instagram influencer. Yeah, 100%.
Like, I don't think people look. It is not easy to make 100 grand a year, and people on social media make it seem like if you're not making $5 million or $10 million a year that you're failing. That's not true.
No, not at all. Not at all.
And it's just such a false sense of reality on Instagram or anything else. It's just so ridiculous.
Yeah, I think you want to be comfortable. You want to have disposable income. You want to have investments, but then you also don't want to. If you also don't want to give up so much of your time just for the money, unless you love what you're doing and you think that sacrifice of time is your purpose. Yep. But if it's like, this is why the investment bankers that like do cocaine at 3 a.m. to like get through the week. I've talked to these people. Some of them are friends who graduated college. Like, they're miserable, dude. I remember FaceTiming with one of these girls that went to Capital One. She's not there anymore, but she was like legit depressed. Like, she was on FaceTime with me crying. And I think she graduated a year before me or after me. She got a dog to try to help her. And then they returned the dog because the dog wasn't fixing it. The problem was that she didn't like what she was doing every day, even though she was making good money. So it's a really big nuance around what are you doing and then what does that mean for your financial security as a result of what you're doing as well.
Yeah, and look, at the end of the day, the most important thing is health. I mean, I got a couple of really close friends that are going through some shit, and you don't have your health, you really don't have anything.
Nothing.
Life, listen, what I'm seeing, I wish on nobody. And I don't know how some of my friends are doing it, but I got to tell you, life can change at a moment's notice. Like seriously change at a moment's notice for anybody.
Yeah.
But yeah, it's wild.
Well, I think that's it. This is a 6-hour, 28-minute stream. Thanks to Steve, who extended it into the 6 hours.
You're a good role model. Your content is getting so followed that you have Batnick and Josh Brown using your content for their show. It's incredible.
That was cool. That was pretty cool. I would have I wouldn't have watched their thing today, so I'm happy that the guy Patrick.
You gotta get on their show somehow.
Yeah, I think it would be super fun. Just I think they would, they like to interview people that have a unique story. I don't think they would want to interview me about the markets, but they might want to.
Yours is a unique story.
Yeah, they might want to interview me not on my thoughts on the macro, but on like what does it mean to be a YouTuber who covers the markets, because they're in media as well, so there might be a thing there.
Yeah, and what I was saying before is the Phillies freaking destroyed me tonight.
Yeah, see, sports does not bring me any happiness, bro. Oh, are the Lakers playing today? Hold on. Because they lost badly the other day. The Lakers, are they playing, guys? Lakers?
I mean, how do you give up 4 runs in the 9th?
See, I don't even know what that means. What is a run and what is a 9th? Lakers are playing tonight. Oh, boy. This is going to be a big one. This is a big one, bro. And the Knicks, they have a closeout game today, right? This is a big one. Oh, wait, the Knicks are in the 4th quarter right now. Hold on.
I don't want to know. I'm a jinx to the Knicks. I don't want to know.
Are they up 3-1? Oh, they're up 3-1. Oh. Let me just set the stage. Detroit's up by 3. Knicks, and there's 16 seconds left. Do the Knicks have the ball? I don't know if they have the ball. I think they do. Wow. Okay, so it's a big one today for Lakers and Knicks. No, the Lakers are playing tonight. They are. 10 p.m. It started, or it should be starting very soon.
No, I'm hoping we actually see John Jones and Aspinall fight this summer.
See, I don't know who these people are.
You don't know who John Jones is?
Nope. Can we talk about you?
We could talk about you, but you don't like mixed martial arts?
Huh?
You don't like mixed martial arts?
No. Why are they saying Lakers are Wednesday? It's today. It says Los Angeles versus Denver Nuggets. What are you guys talking about?
I got to get you into mixed martial arts, Amit.
Oh, no, YouTube TV is messing it up. Sorry. Yeah, you guys are right. It's not today. Okay. No, I've never liked MMA, dude. I don't like watching people fight. It's not interesting.
Really? I mean, I grew up watching Tyson in the 80s, so
I've never cared about like fighting, bro, boxing. Like I'm never. Amit says, I don't care about sports. Then I go straight. I care about the Lakers, bro. I want to see LeBron get a ring. That's like, I care about them. But outside of that.
So you're a basketball fan?
I wouldn't say fan is too hard of a word.
I was going to ask you a question, but okay.
No, I know about that. You can ask me the question. I know about basketball.
You had to pick its top 5. If you had to pick all-time starting 5, who would you pick?
Michael Jordan, everybody. Michael Jordan, LeBron James, Shaq, Steph Curry, and Kobe.
Hold on.
Come on. Don't tell me there's anything wrong with that. There's not.
No. It's a lot better than what I thought you were going to pick.
MJ, LeBron, Kobe,
okay,
Shaq, and Curry.
So who's playing the 1?
Curry.
So you got Curry on the point. Who's playing the 2?
Kobe.
So you're putting Jordan in a shooting guard?
No. Well,
small forward. I'm sorry, small forward.
I would put LeBron at small forward.
I put Jordan in at power forward.
I'd put Jordan at power forward. And then I put Shaq at. I think Jordan could pull it off.
Well, obviously Shaq's going in at center, but LeBron's 3 inches bigger than Jordan, 2 inches bigger than Jordan.
Okay, fine. LeBron is the power forward. Jordan's a small forward. That's fair.
Okay.
That's fair. That's not crazy.
I don't hate that lineup. I don't hate that at all. And I change mine so much. Because there's so many combinations that could work. And for me, it's not who are the top 5 players. Like picking a starting 5 is who's going to work together in a good cohesive way. So I'm putting, when I think about it, Kobe at the 1, Jordan at the 2, because I got to have them there. And then because you have them there, or I would even say you could put Curry at the 2 and Jordan at the 3, but I feel like having Jordan and Kobe, you have such great defense that nobody's shooting threes on those two.
Yeah, I agree.
Like the defense is crazy. So I would go a little bigger on the forwards, and I'd probably go in something like Bird at the small forward and Tim Duncan or Kevin Garnett at the power forward with Shaq as center.
That's 6 people. What are you talking about?
No, it's not, because
Jordan, Kobe,
Bird,
Shaq.
and then either Tim Duncan or Garnett, one of the two at power forward.
Oh, okay, and then Shaq. Yeah, that's fair.
Because of the height. Because if you have Tim, think about how dominant Tim Duncan and Robinson were. So you put Tim Duncan and Shaq, and you got Bird as your 3-point shooter and a defender. Like, Bird was nasty.
You know what I realized? We talk about stocks like people on ESPN talk about sports.
Yes.
Like when we're talking about, well, the price to sales on a firm is, blah, 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 blah. Like we are like, it's like them talking about LeBron's assists per game. They use players as their subject. We use companies as a subject. And then we have all these metrics that we look at from each angle.
I don't understand why people are saying Kobe can't play point. You could put either one of them at the 1 or either one of them at the 2. Jordan and Kobe could play either shooting guard or point. It doesn't matter.
Yeah, Kobe.
Like they're both Jordan's the greatest of all time, and Kobe's the second greatest of all time.
Yeah, I agree.
Like Jordan is, it drives me nuts when people say LeBron's better than Jordan. Like it drives me nuts.
He's not.
Nuts.
And I'm a LeBron fan, but he's not. He's just
nuts. Especially the rule, like this era, the amount of traveling, you can't hand check. Like there's nothing. Like these guys, I don't know how many of these people could actually play in the 80s and 90s.
It would be
I
hard.
really don't. Different game. Like LeBron would do great. I think people like Durant would do great. Probably Tracy McGrady would do good. But I don't know. It's a different game today.
All right. I think we ended here. That's 6 hours in. I should probably.
Dude,
can you hear it in my voice? Like it's been 7 hours of
You
talk.
should do a 24-hour stream one day.
When I move out, we're going to do it. I'm going to need your help as well.
24 hours. Yeah, like there's so many good combinations. Like Stockton would be a freaking great point guard. Jason Kidd would be a great point guard. There's so many good combinations you could do for a cohesive starting 5. So many combinations. Anthony Hardaway in his prime. I mean, there's a lot of good ones.
Again, that's the thing about basketball. Like there's such a big amount of history that you can have these endless conversations. And the stock market, there's endless headlines all day to keep having. It's like they're very similar. But in the stock market, you can make money from these conversations.
No,
I guess you can gamble as well. By the way, you want to tell people what stock you're bullish on now in the gambling space?
DraftKings.
I got the Seeking Alpha notification. It's like Steven Fiorillo published DraftKings. And I was like, oh, this guy's such a degen. He's buying DraftKings now.
No, it has a good investment story now.
I think the reason you like it is because you started gambling more.
No, listen, I don't even use DraftKings.
I know, but you like the space.
I do like the space.
Because you're becoming a gambler.
No, because when you look at their growth, I mean, dude, you talk about members, look at this.
Dude, I think if you weren't betting as much as you were betting.
So this is something, because I've covered this stock before and I was neutral. When you get 18 quarters or 16 quarters, whatever it is, of big growth, and the year over year, they added 3 million people. They grew by 40 or 45% year over year in members. Like that's big. That's very big. Like this is a company that's going to be a sleeper. Look at their forward earnings. Check this out. They're expected to be profitable this year. And then next year, grow 200% EPS, 50 cents to 150, trading at 22 times next year's earnings and 15 times 2027.
It doesn't look expensive, that's for sure.
It does not look expensive. I am telling you that they're projecting, I think, 850 billion free cash flow this year. Balance sheet is good. And this is a sector that continues to grow.
Are they profitable?
They're turning profitable this year. They're free cash flow profitable. Same story as Palantir. They did 407 million in free cash flow last year. And net income, they lost 500 million. They're going to be GAAP profitable this year. Free cash flow is going to more than double. This is a company that's very interesting right now.
What do you think about Altria earnings?
I mean, people should have got in at 41.
Were they up today, Altria?
Did they report today?
Yeah.
They
were up
I
one.
didn't look at the market today much. Outlines 2 to 5% growth. I mean, that's great. I love it. Let's go through the deck.
Casey said they bought at 40 with you. I don't think Hood's ever going to do their own prediction markets. I think they're going to keep partnering with Kalshi. I think that we asked Vlad about this at the Gold event, and he said it's just easy to use their infrastructure and then give them the distribution.
Okay, committed to long-term value for our shareholders. Paid 1.7 billion in dividends Q1. They repurchased 507 million shares for 326 million. 674 million remaining under the repurchase. Financial outlook, 2 to 5% EPS growth. Yeah, I mean, look, I like it. They're going to keep growing the dividend at 4%. I mean, I don't know how much higher it's going. I don't know if it goes to 70. I could see it at 62. I don't think there's a lot of growth on the horizon for shares. I think they're going to be stuck in a range. But this is a great dividend play because they keep growing EPS. I mean, you still got a 7% yield with this. Maybe the market can take it to 70 in a big bull market. I don't know. But this was very undervalued when I was telling everybody this was very undervalued. I don't think it's very undervalued right now.
Yeah.
I think look, you got to call a spade a spade. It's a tobacco company. So, trading at 11 times earnings isn't crazy.
TJ in the chat. TJ, we need to set up a stream where we A, go through your positioning, and then B, you show Tasty Trade to my channel. Because my channel has no idea what Tasty Trade is. TJ left Robinhood for Tasty Trade. So
thank the good Lord. Thank the good Lord.
Steve's on your side because he thinks Robinhood is a
oh my God, TJ, thank you. I would like to hear the story because this is like what I've been waiting for. Validation.
TJ basically grew up. He said, screw Robinhood. We don't need this little platform anymore.
This is great.
And now he's on Tasty Trade. Have you used Tasty Trade before or no?
I know exactly what Tasty Trade is.
But have you used it?
I have not.
I've not used it, but I've seen.
But I know exactly what it is because they created a lot of stuff for Thinkorswim.
Yes, and they are pioneers in option trading, which is what
they are
TJ
pioneers in the whole trading space.
100%.
Yes,
100%.
And he's on the Schwab network a lot.
The
guy from Tasty
CEO,
Trade.
yeah. But also TJ sells like for example, Robinhood wouldn't let you sell more than 200 options at a time, which is insane for someone like TJ who sells hundreds of thousands of options, right?
Right.
So it probably made sense to make the move.
Going to a platform like that or interactive brokers was probably a great idea.
Dude, IBKR
is so legit.
Well, all I'm gonna say
is so legit.
I don't even want to say this, but
it's so legit, and we can leave it at that.
It's a really good platform. That's all I'm gonna say.
It is so legit.
Actually, I've said this before. I can say this. I don't endorse this, but if you use margin on IBKR,
it's the cheapest VIG you can pay.
Oh my God, dude! Like your freaking maintenance is 80-20, meaning if you need to borrow 100,000 and use 80,000 for a trade, You only have to use 20,000, and then you get to use the 80,000 for something else, and like it exponentially magnifies the amount of leverage you have. Which
if they built the best product for trading, I'll tell you that much.
It needs to be used responsibly, but still, like, I talked to a couple people in Toronto that are using IBKR, and they are like leveraged up in a pretty effective way. Now, granted, they know what they're doing; they're more sophisticated, but still. So, yeah, you got to be careful with margin. But Robinhood doesn't do that. Robinhood, it's like it's a 50-50 split, so they don't give you like extra money just for using margin. So you can't increase your leverage. Is the point.
I mean, I'm not a fan of leverage, but
what are you talking about? You told me you bought NVIDIA on margin today.
What are you talking about?
You texted me. You said you bought 100,000 shares on margin.
Show me the text.
I don't need to disclose our private conversation.
Show me the text. If I text that, show me the text.
I don't need to show that. That's
and you texting me that so you can show it is not showing me the text.
I was like 100,000 shares on margin. Goodness gracious, bro.
I wouldn't buy one share on margin, let alone 100,000 shares on margin.
This guy's bullish.
The Yankees had 6 solo home runs today. Jesus.
Yeah, I'm a big Yankees fan. That's the only hat I have for baseball.
Thank God Bellinger hit a home run today.
Did you buy anything today in the market, though?
No. I was busy all day.
I bought 25 shares of Hood.
Okay.
That's it.
I mean, I think Alphabet's a better buy, but that's me.
I'm going to be buying Alphabet soon. I'll be buying more of that soon as well.
Yeah.
All right. I think that's it, guys. It is time to probably end the stream. 6 hours and 45 minutes. Thank you, everybody.
Go have some hot tea and watch.
I need some hot tea. That is facts.
You should watch you again.
No, I'm not. I need a new show now. I know you recommended
Landman.
I got to start Landman. I got to do that. But
like Amit should watch Billions again.
No, Billions is the most overrated.
No, it's underrated. How dare you?
Like, have people seen Bill? It is so freaking boring.
I send Amit clips of Billions every day. Every day.
It's boring, bro. It's fucking boring.
It is not boring. You just don't understand.
No, I do understand. They're talking for 50 out of the 60 minutes.
You don't get the references. You don't get the references from Highlander or any of the old movies. You just don't get it.
I'm just
it's incredible. You didn't watch Industry. You didn't watch this. You didn't watch Succession. 3 shows that you of all people should have watched: Succession, Billions, and Industry.
Why are there always sirens in the background?
I live in New York.
Why are they? It's actually insane. How?
Well, you can't distinguish if it's an ambulance or a police car.
No, but it's just you have no peace, bro. You have no peace in the city.
Okay, whoever said Sons of Anarchy is awesome.
Yeah,
I've been telling Amit to watch Sons of Anarchy for a while.
Yeah, I've got to start it one day.
Dude, Sons of Anarchy is so good.
All right, I'm going to end it out here. Thank you, everybody. Appreciate you all, especially if you've stayed for the majority of the stream. Grab earnings. I put some stuff on Twitter if you want to read it. I'll put more analysis tomorrow. I think they crushed it. We'll see how the stock reacts. And 6th green day in a row for the S&P. Hopefully
we got to get Amit a Sam Crow t-shirt.
Who is Sam Crow?
Not who. What is Sam Crow?
Okay. What is Sam Crow?
What is Sam Crow?
All right. Thank you, everybody. Appreciate it. We'll see you tomorrow on the Market Open.
You don't know what Sam Crow is?
No, I don't know what Sam Crow. Why would I know what Sam Crow is? All right. Bye, everybody.
Sons of Anarchy.